throat hole is hot. Now you got a hole in your throat. Oh no, just call your boss. Take the crust from out your eyes. So tasty, not a coffee.
Good morning, you knuckleheads. Happy Thursday to you both.
Hello.
Hola.
Hola.
How are you this morning? Can I start off?
I literally cannot stop you.
No, you can't. So and I know you're tired of hearing about hockey games. They're almost done by February. But we had a game at 9:10. Now, Vinny's on the JV team, which is like, the afterthought team. There's two. There's like a senior team, and then there's a team below them that are made up of seniors and juniors. And then there's Vinny's team that's freshman and sophomore, JV hockey. So they get the last billing all the time. So we're playing Glenbrook North, big rivalry, next town over from us. And we got a 9-10 start. Well, the first game goes into overtime. So they were tied, goes into a 5-minute overtime.
Oh, no.
Then goes into a shootout, goes through the bench a little bit, and shoot about like 8 guys deep. Then they had in a halftime intermission, before we got all to that.
Did they win?
They actually won.
This is the first game.
This is the first game.
No, I am aware. I can follow
At halftime,
along.
we never have like a halftime show. They usually just come and cut the ice. Like in between, the second and third period, they just come and do the ice.
Sure.
They water it down, make it nice and flat again. Well, they had like a show that they did. So they were running late. Our games.
Wait, I'm sorry. Who was performing?
Who's the halftime?
I know who does the halftime at the Glenbrook.
Celine Dion was out there.
I know the Glenbrook North. That's the billing.
He does do some of the announcing sometimes.
Yes, I do. It wasn't this
for
time.
the YouTube
channel,
stream, which is like about
6 guys.
It's 6 guys.
It's 6 guys and 2 women, 2 moms that are watching.
Yeah.
Does someone just come out onto the ice and like Donkashane, darling, Donkashane?
Pretty much.
Okay.
So our 9-10 game started.
I'm aware of the start time.
At 10.
Wow.
Which means it was over around 11:30ish because we went to a shootout, 2-2 tie. With no time on the clock, we scored. They waved it off, which would have made it a 3-2 victory. It was pretty close. I didn't have a good angle on it, so I can't really make a call on it one way or another what my opinion was. But they called it off, so it was called off. And then we lost in a shootout. 3-2 on the shootout. We didn't get done. Yes, thank you. Till almost 11:30.
Has Netflix contacted you about the documentary they're going to make about this harrowing experience?
Okay. All right. I tried to share my misery with you. I tried.
Really
I
tough.
tried.
Really tough.
No, I'm sorry that happened to
I don't think
you.
I don't hear any sincerity in your voice whatsoever.
I don't know
Zero
what the appropriate response is.
Mm-hmm.
I'm sorry your kid's hockey game went late last night.
Midnight. It went to the next day.
Wow.
By the time we got to bed.
Wow.
Horrible.
So, of course, no school for him today. What time does the masseuse come?
He's going to school, I think. I hope. I mean,
Is he
I left with the impression that he was going to school, that Mom was getting up, too.
Did he sleep in his hyperbaric chamber to recover for the athlete that he is?
It was all hands on deck. It was you get in the shower, get in the bed, I'm tired, see you soon, kind of thing.
That is just, it's late, though. That's too late, though.
It is too late.
It should never have been a 9-10 start.
Yep.
Yeah.
So brutal. So that was my night last night. So go ahead, tell me what you did.
I can't. I mean, I don't have anything better than that.
Nothing.
Oh, there's no golf, though? Or did you make up a game to play?
No, we're starting our next season in the middle of February, so we have a little layover.
So right around Valentine's Day to just continue messing up your relationships.
Exactly. I was very much in favor of continuing this. It was still the league, but I guess it's a harder pull.
Right.
When you have a wife as opposed to a girlfriend.
Right.
They don't have as much pull. So
right.
So it was nothing much. Made dinner, hung out, relaxed a little bit.
Beautiful.
Yeah.
Yeah, it's nice.
What do you do?
I went and I got like all of my rations and supplies for
our polar vortex.
For the polar vortex, right? So
it's warmer today than it was yesterday.
I'm getting roasted. Nick made soup again. I do have plans to make soup this weekend. Okay, Sergio, I see you. I hear you.
I mean, there's nothing wrong with
soup.
it.
I do too. It's
What's
it's gonna
I'm
be
sorry,
negative
Vanessa.
20. You got exploding trees in Wisconsin.
Yeah.
No kidding. What's your favorite soup,
for
though?
them.
Like what that you make?
I liked my tomato soup that I made the other day with the.
Do you put cream in your tomato soup, or
No,
is
we
it
did
just
it-
pure?
We did an entire chunk of Boursin cheese.
Oh, interesting.
Wait a minute. Did you hear the subtle we? We put a whole. I mean, that's new.
That's okay.
No, I love it. You kidding me? I didn't think it was ever going to be possible. I mean, I
Yeah.
absolutely love it. I mean, the we.
I know
it was
to
subtle.
contain this raging bull. Quite.
We continue with the we story. Go ahead.
With the Boursin cheese in there.
Yeah.
Little onions in there. Garlic. It's
It
wonderful.
sounds good.
It's kind of a little chunky. I don't emulsify it super thin. I like it a little chunky.
Yeah.
Yeah. And then you make a little.
Did you use your
Grilled
bougie pot we
cheese,
got
yeah.
you? The what's that thing called?
No, I haven't used
Oh,
that
you haven't
one.
used it yet. That's your soup pot.
Yeah, that's the next time.
What's that called? I forget. What's it? What is it? That remember the name
I don't
of it?
know the name. I'm gonna butcher the name, so I'm not even gonna say it.
What are you talking?
What's the fancy, very hot, very heavy pot?
Le Creuset.
Thank you.
Creuset.
Oh, Le
There you go.
Creuset.
Thank you. I knew I had to get a North Shore girl to figure it
Yeah.
all out. Yes. All right.
Yeah, that was what Santa brought me.
Yes.
Ooh.
Santa brought me that.
Oh, that's nice.
That's a nice gift.
I know it is
Nice.
very nice. I will use it a lot. I will. Yes.
I am just waiting for my invitation.
To the wedding?
Downtown, you're invited anytime. I mean, the last time you were downtown, I didn't get a call, text, ping,
Letter.
a letter, nothing. Snail mail. No. I mean, you were actually like about 3 blocks away from my house, so you could have stopped by if you
He's not
wanted to.
lying. He's not lying. After I was done with that meal, I was so sick to my stomach I couldn't move. So
okay.
it was so rich. But yeah.
What is on deck for football for the weekend?
Ooh.
I mean, we're gonna watch it.
Who do you like?
We do have Vinny's lunch, right around the Broncos game.
They got TVs. TVs everywhere.
Oh,
Yeah, you'll be fine.
Oh.
Gonna be good.
that's perfect. At the country club.
It's gonna be good.
Quite the scene to watch football at.
Oh, nothing says wild playoff game.
Yes.
Yeah, like the CC.
I think I don't know. I want Denver to win. I don't think.
With a guy who has not thrown a ball all season?
I mean, yeah. No, we saw Nick Foles.
Did you see what Nick Foles tweeted,
Yeah.
though? Like, that
That
was
was
his
good.
all-time tweet. He's like, look, New England doesn't do well against backup quarterbacks. But that was a different situation
Yeah.
that he had, some time
Yeah.
before. But this kid is getting, dropped in right at the conference championship.
Yeah. I think on the other side, it's a tough one. I think
So who do you think is
Who are you going with? Who do you like? Let me write this
Who-
down.
Who do you think's going to the Super Bowl?
I want to say the Rams just because I think Darnold could be Darnold. And,
Okay.
Stafford, is just.
So you like the Rams?
I think so. I think-
It does
they're
make
getting points,
it
too.
makes our loss less painful.
Yes.
Like if they do, go on. Then.
Yeah. I think it'll be Rams Patriots, but for my friends in Denver, I'm going to say Denver.
You can't do that.
I got friends. They might be watching the show.
All right.
Oh, your friends in Vale, in Aspen,
Thank you.
Yes.
your
Yeah.
friends in Breck.
Thank
Yes.
Do you just call it Brecky?
I ordered Vinny some pretty it's nice sty, it's swaggy gear.
For the
Some
slopes.
stees.
yeah.
Yeah.
So, but it's coming I don't think it'll be here for his birthday. A little
That's
bit
a-
ordered.
That's okay. That's okay. He's used to the stuff that come from China take a long time.
Yeah. Well, I figure the kid orders everything that he wants. So I got to go I got to find him something that he wouldn't discover.
I agree.
So
I agree.
This is
It's a hard
Yeah.
thing to do.
Yeah.
It's a hard thing to do.
I'm sick of just giving him.
A lesser man would have not found it, so I'm happy.
Yeah.
Thank you.
I got him something.
Thank you for that.
Well, we have a
What are
great.
you getting, Vinny?
What? I can't get canceled today.
Starting fast.
I can't get canceled today.
We are starting fast. What did you do here? Oh, oil.
All spread. Oil's down $1.23.
$1.23. Big move. Almost 2%.
Yeah, I took off the call spread. It was part of an iron condor that we did. We've had a couple nice little oil trades. We had the call spread with Craig, and I had that Iron Condor on prior to that, but I legged out of the put side and then just closed the call side.
I'm going to put the ceiling on nat gas this morning, by the way.
Is that today?
Good trade. No, it's up almost 2.5%. I'm going to tell you why.
Okay.
I had a neighbor at the game come up to me and go, "How do you trade nat gas?" Okay, so like
It's time.
Yeah, that's the time. So just for those who have nat gas or playing nat gas, be forewarned. There you go. You know.
Just be careful.
Put the ceiling up there.
Yeah, can you do anything? Can I do
Yeah,
anything
you
about
can't do
that?
anything in nat gas.
Can I buy a put spread? Just an at the money put spread?
How much would that cost?
It depends on how wide you go. I mean, you could do like a little Johnny one.
Yeah, you like even a $50 wide one. I mean, 0.001 in nat gas.
It's $1,000 per point.
Right, it's $1,000 per point.
Yeah.
0.001 is $10.
Yeah.
0.001.
Yikes.
So, I abstained, but I'm just telling you those who are in. Anyway,
You could do UNG.
There you go.
there we go.
At
There
the
we
money.
go. Right.
At the money.
So you did a 3, just to show you how big that is.
It's 15 cents wide. 15 ticks wide.
Right, and so you paid $1,000 for it. A point
I paid
$980.
Yeah, $1,000. It's a
You paid .098
Yeah.
is $980, and
Yes.
that's what you
Yeah.
did. I'll put it up on the board real quick. Basically, buying the 3.7, selling the 3.55. It's trading about 3.6.
30 days out.
30 days out. That's
Yeah.
correct.
30.
On the Hockey Dad recommendation of trying to
Yes.
buy.
I like it.
Yes, you went with
as
the
good
sell.
of an indicator as I.
That's about as good.
It's as good of an indicator as seeing Ted Cruz on a flight to California, which is true. No, I'm serious. You can look it up, but he's been spotted on a plane, so get along that natty gas.
Is that a thing?
The Ted Cruz indicator?
Yeah.
Oh, yeah.
Oh yeah.
What does that have to do with Natty Gas?
Every time there's going to be a significant climate event that's on the cold side in Texas, Ted Cruz flees the state.
Yeah, remember like a couple of years ago he did the same.
Yeah, does it all the time.
Is this like an inverse Al Gore? Is this like?
It's like a Pelosi index.
He has a better weather
yeah.
than most people, for sure.
Yeah.
Okay.
So, but he
All
was
right.
spotted on a plane to, I believe, Laguna Beach. So
All right. Well, he doesn't like the cold. I don't blame him.
we have a great show for you today.
We do.
It'll be real nice on this thrilling Thursday at the top of the 8 o'clock hour. We got trades from the research team. The world's greatest financial think tank presents their trade ideas to the bats. That's coming at you at 8 o'clock. Volatility's back. Baby. And then we got
Not really
Johnny.
anymore.
Then we got what? No,
It was
it's
over.
Canceled. Oh, now it's already
Yeah.
gone.
It was 48 hours ago.
I'm sorry. Is the VIX 11 now? No, it's
Yeah.
not.
I'm
No, it's
not quite there,
Okay.
but it's 16.
Okay.
And vol futures have remained.
Well, that's the roll.
Kinda
They
stuff.
just rolled last Wednesday.
Yeah, but they're at. I mean, it's not like you had a continuation of that vol crush from yesterday.
No, I mean, listen, I talked and you talked about volatility. I didn't think it was going to get under 19. You thought it might get under 19. It almost flirted with getting under 18.
I said 1875.
Yeah, it's $1,000, $2,000 move, $1,000 difference than where I thought it was going to be at the end of the day. Crazy move, yes.
Also, we got Johnny trades. Maybe Nikki will do some more natty gas for his Johnny trade. I don't know. Does that count as Johnny, like $980? That seems like a lot.
No, well, we did UNG last week.
Okay, that's
That was
going to
a
ask.
lot smaller. But
Yeah.
the market, those markets are open when we do Johnny trade.
Yeah.
Yeah.
840.
And we did just long stock, or ETF, I should say.
Yeah.
Right.
We just got long it as a way to be long natty gas. Little did we know that it was going to go up 20% the next session, which was great.
On top of
That's great.
Up 20% on top of another 5, 7, 8% after that
yeah,
too.
it happened to be a perfectly timed trade.
And then 9 o'clock for market measures. Volatility, strike distance, and break even. What the delta shows. What is that going to be about?
It's going to be a continuation of our volatility discussion yesterday, but we're going to talk about delta and IV and how those things kind of interact.
Oh, I like that for girls' names? Delta and Ivy?
Good.
Right? That's
Yeah,
pretty.
That is pretty. Yeah.
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 If you're, a
If
trader.
you have a problem and
right? Right? It's my daughter Delta and
Yeah.
Ivy. They're the little brother Theta.
that's a great name. Where'd you come up with it?
It's better than having like a gambling problem, calling him Hard 8 or something like that. You know what I mean?
Oh man. Then we have live from the trade desk coming your way at around 9:30. Bill and Glenn in the house. So Glenn G Money on the Tasty FX side of things, and Bill from the Tasty trade desk. So stay tuned for that at 9:30. And that is our run of show for today. Still no Jamal.
He's
I'm
sick, I heard.
concerned.
No, I heard he's sick. I know. He's like sick in Vegas kind of thing. Went to Miami for the football game. I heard he's sick. That's the rumor. I mean, with Zoom these days, I don't know how you can be sick, but
You can still, yeah.
he's sick. He's sick.
Mm-hmm.
That's what I heard. That's what I heard. It is just a coincidence that he was in Miami.
So
for the
no
game.
Mikey and Jamal live from SIBO today.
Yeah.
But
no.
But if you have a trade for us for tomorrow for Fast Market, we would love to hear from you. So
Sure.
keep your eyes to the skies. I don't know what I'm doing for that. But hey, in the meantime and in between time, you guys want your daily dose?
Sure.
Hit me with my theme music. Let's go.
Our leading story,
today's
breaking
headlines.
news,
Breaking news.
across the wire. Our leading story, top story, just in.
In today's headline,
This just in.
Breaking news.
All right, everybody. Today's a thrilling Thursday. It's January the 22nd. How did that happen? This is the part of the show that we like to call the Daily Dose, where we talk about today's financial news and headlines. My name's Vanetta. Are you ready for the news?
Ready for the news?
Earnings, Mr. Bat.
Intel.
Ooh.
I think that's going to be the one on everybody's lips. Intel
Okay.
in the portfolio, the government portfolio there, 54 and change, looks unchanged this morning, with even the S&P's up almost 40 handles, flirting with highs from last night.
Yeah.
Intel's basically unchanged, but it has not had a downtick.
Are you mentioning any of the earnings trades today? I don't think any of them really came in. There were a couple this morning.
Halliburton, ABT, right?
G.
Oh, go. Nope, I don't have it.
G basically unchanged here. It's down like $4. FCX was another one that people have been trading. It's basically unchanged as well. So any of the earnings that you did for this morning, if you sold any premium, you should be pretty good.
They were certainly second tier earning trades for sure.
Yes.
But next week is gonna be the week, so you're gonna
Next
get
week is the week.
Yeah,
Yes.
all the
Mag 7 week.
yeah.
Yep.
Well, the S&P 500 popped 1%, and the Dow surged nearly 600 points as Trump called off European tariffs tied to Greenland. I have been notified we have concepts of a plan. Don't come for me. He literally said that. Concepts of a plan for Greenland. I don't know.
He meant contraceptive
Framework.
of a plan, is what he meant.
Framework.
What are we doing? All right. Let's talk about
And
it.
everybody knows it was a holiday on Monday, so Taco Tuesday had to come on Wednesday.
That's right.
We all knew that. I don't know what anybody was complaining about.
I don't know if there's anything directly that you could trade off this. Maybe you go into some of the
I didn't know, like the dollar or
so the dollar had a big move. I closed out of some I had the Swiss franc, which I closed out of that one. So I got to give Glenny his props on that one.
And you got
maybe you have to buy him
every day.
Starbucks.
Yeah, right. Maybe you got to buy him
I
something.
probably
to go
do owe
skiing
him a
with.
Starbucks. Yeah, but he's still he's dragging me down with some of these Aussie dollar thing, Japanese yen. He brings that. I'm the more obscure ones have been good. Yes.
Okay.
So the dollar's been good. I mean, other than that, I don't know how you trade these. Maybe you go into maybe we get a reoccurrence of the rare earth kerfuffle.
Oh, okay.
Mimi situation. You get the MP materials, LAC, what were some of the other ones? UAMY, I think.
You ain't got no alibi.
Yeah. I don't know. All those stocks, those probably come into play now. You have Trump talking about rare earths. We got this patch of land. That's probably your next. After Intel. Intel going to be a big one, obviously.
Sure. Well, the Fed looks to maybe hold rates through March and possibly through Powell's tenure on strong growth. That's according to new information. According to the majority of economists polled by Reuters, the Fed Reserve was going to hold its key interest rate through this quarter and possibly until Chair Jerome Powell's tenure ends in May. Expectations the U.S. economy will continue growing strongly, argue against near-term cuts as inflation still remains above the Fed's 2% target. Bonds
hanging out 114.31. I mean, they've had a range of about 116 and a skosh and 114, and they're hanging out at 115 right now. So they've sold off about $1,000 a point yesterday, the day before, 48 hours ago, kind of like following the market to the downside, and have rallied back following the market to the upside. Not quite as much, but right there.
Gold fell yesterday after Trump backs away from tariffs over Greenland. Bullion fell as much as 1.1% in early trading, pulling back after 3 days of gains after it's gone to an all-time new high of $4,888.
It's and last night it traded down about 70 handles lower, 70 points lower than it is this morning, down a little over 2%. Just to put in perspective, it's down $7 now, which is less than 1/8%. So it really has rallied back to close to its new closing highs. Silver, on the other hand, is rallying back. It's up 53
and I
90.
could not abstain. I could not.
You just can't stay away from silver.
I can't.
It's got you in a chokehold.
And these things, like some people, they do the smart thing, which is just you go with the flow, you go with the trend, and I do that a lot. I like that.
The trend is your friend.
Yeah, the trend is your friend. I think what hurts me is when I get hurt on it. Before
it becomes personal.
Big one. It becomes personal. It becomes I must.
Trading is not personal.
I know, but that's a
emotion to
Sosnoff
this.
thing. So it becomes personal. So now I have to fight this.
I can get that.
So, but I've scalped out of it. I closed yesterday at like 90 and change, 90, 80 something. So we're back in at 93.
You closed it nice. You closed it maybe 60 cents off of the lows.
Yeah, it was like into that move. I mean, it sold off $3-4 in the span of like 10 minutes as the market rallied 100 points.
How is that gold-silver ratio?
Great question.
It came in a little bit yesterday. I don't think it's at 51.72.
Yeah.
So it's still pretty. I mean,
pretty low. It got into the 49s, and a week and a half ago, it was over 58. So that's a $10,000 move. Right?
Yeah.
It's big.
It's Thursday. I like to do a little sort of midweek check on the softs. Soybeans rally seemed to hold yesterday. Soybean futures held on to Wednesday gains as contracts were up 8 to 11.5 cents across most months. The other softs, I think, were a little softer, corn and wheat. But let's talk.
Those softs are soft, but the soybean, which has not had an uptick, has had a good week, going from around 1,040 to 1,068. So yes, you are right. Up about a third percentage point this morning, which is 400 ticks. So yeah, not bad.
we sold that put spread in wheat, and it's gone nowhere for the last month.
Yeah, wheat has just gone sideways. Right. Yep.
So got a little long though.
Yeah, IV rank of 1.
If anyone is interested, rains are expected in the northern portions of Brazil.
All right.
Oh, that's why soybeans are rallying?
I don't know. Yeah.
Okay.
Do with that what you will. Hey, a sweeping U.S. crypto market bill is likely to be delayed by at least several weeks as key lawmakers shift their focus to potential housing legislation in support of President Trump's affordability push. The move by the Senate Banking Committee follows the Trump administration's calls to tackle cost for Americans ahead of the midterms. Again, this bill did have bipartisan support, but then a bunch of other stuff got added to it, and then it got rushed to the floor. And obviously, we want regulatory clarity, but we also don't want something stuffed with pork. That sounds delicious.
Yeah.
But
I decide pork was like the thing that we were stuffing it with.
like a pig, like a pork.
Yeah.
I don't know.
Yeah.
I don't understand.
I think it fits. I'm
Maybe.
just wondering if it was like, if this was like something that happened at some point, like somebody was like, brought in
outside my realm of expertise
Okay.
for sure.
What's crypto doing this morning? Is it
You know
above
what?
90 or?
Arguably, you could really argue that crypto's doing absolutely nothing. I know it's had a range from around 95,000 to I don't know, just under close to 85,000. Let's call it 85 to 95. It's sitting right at 90,000, but it doesn't. Like when every other asset was catching a bid, looking for a place to hide as the market was going lower 48 hours ago. I know we're back near all-time highs or new highs. So it doesn't seem like anything really happened. Bitcoin never really kind of caught its bid. Never held the 95 level, trying to work its way to 100,000. It's been going nowhere. And actually, nobody even talks about it that much on Twitter.
No, it's kind of dead.
Yeah, it's kind of dead. It really is become at this
when
time.
it starts to get talked about.
Yeah. You'll hear the people that I was buying every dip. Yeah.
If this goes through, or if Trump starts talking about,
Yeah.
Bitcoin reserve.
Well, they're
blah, blah, blah,
talking
blah,
about that, how they're, so but I don't know.
It's not.
Well, we're going to get a crypto IPO today.
Ooh, I had no idea.
BitGo Holdings and some of its backers raised $212 million for their IPO as they are pricing shares above the marketed range. This baby is oversubscribed. They're pricing shares at $18 each. That's above the marketed range of $15 to $17. So at IPO price, BitGo has a market value of about $2.1 billion. It's the first crypto company to proceed with a U.S. IPO in 2026.
Yeah, I'm not going to be dabbling in this one.
You say no to BitGo?
Yeah, it feels like it's going to be a little bit of a exit liquidity situation here. I mean, Bitcoin's not in favor right now.
Sure.
Not
you're
the
right.
thing. And for an IPO, I mean, you got 100 other places to go if you want to go Coinbase or iBit or, any of the
MSTR.
Like
Sure.
there's 100 ways to do this. Ethereum has all the other ones. Tom Lee's pile of duty. There's 100 things to do. Nobody's going to be touching this. It's going to be just.
The U.S. House of Representatives Foreign Affairs Committee yesterday overwhelmingly advanced a bill that would give Congress power over AI chip exports, despite pushback from White House AI czar, that's just a funny title, David Sachs. What are we doing in the chippies?
Ooh, I don't know. Is NVIDIA a chip stock?
Have you heard of it?
It's been in the news as of late.
Yeah.
It's up about $1, maybe $1.50 at just under 185. But listen, it's got room to go if you're looking at all-time highs.
Well, speaking of room to go, let's roll to the next story. AMD stock has rocketed to its longest winning streak in nearly a year. I did not know this. They've been up 7 straight sessions, which is pretty remarkable considering what the market's done.
It's been a wild one. I mean, AMD is back at 250 and change. The memory stocks are where the craziness is happening. I want to pitch this to you. Don't look. So I obviously got roped into SanDisk. Yes, you've seen SanDisk. We closed at about $500. What do you think the delta of the SanDisk 30-day calls at 680 was yesterday? So the stock is at $500.
$180 out of the money.
Yeah, so you're talking about 35% out of the money over 30 days. So you got to go up 1% a day, basically.
Right.
70.
Every single day. It was the highest strike available. What do you think the delta was?
So it'll probably be in the teens, 10, 12?
23.
Yeah, wow.
Wow.
It's a lot of.
And I was going high because I thought it'd be like 6 or 5. You know what I mean?
The highest strike available in the February monthly.
Yeah, I was trying to think. So here's the way I try to back into it. So you say it's a $500 stock. What do you think the expected move is for a month? So it's saying it's $100. I was saying it was like 10%, maybe a little bit more. So $50, $60.
The expected move was $131.
Yeah. Yeah. So if I knew that, so if he would have said the expected move is $130 or $100, I would say,
that's basically
it's a 25 delta.
Yeah, it's a 50-50 shot.
Yeah, 50-50 shot of a touch. Yeah. But I thought the expected move was, half of that or less. Unbelievable. That's great.
Yeah.
Shares of Intel were up 11% yesterday, and Intel shareholders are optimistic about the company's results. They report their earnings after the bell today, like they have not been for many quarters, betting that the turnaround CEO Lip-Bu Tan promised was taking root, and their rapid data center build-outs were fueling strong demand for server chips. What are the plans for Intel?
Ooh, Intel at around new highs.
Yeah.
Intel has
another one
earnings.
with massive call skew.
Ivy rank of 59, probably expand today. I would guess earnings come out after the market closes today. So we're going to see where it closes and go from there. It looks unchanged, maybe down a dime.
Yeah.
You got to buy those dips.
Right now. Almost $5 expected move, which is a 10%, just under 10% expected
Yeah,
move.
the skew here. So if you look at I'm looking at March, but the 45 strike puts traded about $1.85 to 90-ish.
Mm-hmm.
The 65 calls, which are actually 11 points out of the money versus 9 points out of the money.
Sure.
45.
Oh, just throw that.
Yeah, whatever.
Out,
It trades at 290. So it's almost
$1
times
Yeah.
the value on the call side. The skew here is just incredible.
Yeah.
Same thing that you see in MU and SanDisk. It doesn't mean that it's not going to continue that way, but it just tells you where people are positioning.
Yeah.
We are almost a full month into 2026, and Apple has finally woken up, and they're like, we need AI everything. So a couple stories coming out of Apple. I just think it's funny. I was like, where have you been, Apple? Apple's reportedly developing a wearable AI pin. Nobody asked for this. The device is going to have 2 cameras, a microphone, and a speaker. There was actually a company called Humane AI that made a pin, and then it kind of was a big flop last year. But they're going to try to succeed where Humane failed miserably. The report also announces that Apple's going to try to revamp Siri as a chat GPT style chatbot. So a couple of big AI stories coming out from Apple yesterday. So would you, one, wear a wearable AI pin that just is cataloging everything around you? And do you want Siri to be a chatbot like ChatGPT?
I don't know if you could really project the influence of this until it's here.
Sure. And I'm an Apple fangirl. Like, I stand 10 toes down for Apple, but even I think this is on the other side of being ludicrous.
Yeah. I don't know if I want this. I feel like this sort of thing, at some point, it'll be, just like an iPhone. Everybody's going to have one.
Sure.
Because you're going to need it for something.
Sure.
Whether it's like, summarizing meetings or whatever.
Right, yeah. Or winning an argument with your girlfriend. You're like, let's look at the transcript.
Yeah.
You're like, let's go back to the tape.
Siri, play that back. Play that
She's going to be right. She's going to be right, though. But
sure.
Apple, a laggard in the Mag 7. I think they have earnings next week, maybe.
Yeah.
Let's talk about what to do in Apple, potentially.
And a big lagger.
Trading $2.49 right now. It's up about $1 or $2 pre-market.
Yeah, and then that doesn't say anything, right? I mean, its highs are around 280, but this is just kind of stair-step down. Even in a day like yesterday when the market rallied so big, you didn't get anything in Apple. Microsoft is another one. I mean, it is up at least $5 today, but it made new lows yesterday, new recent lows. I mean, its old high is closer to 550. It's trading 444 last night, almost 449 this morning. It is earnings January 28th at the same time. They're both got. I've got a Microsoft position that's got some short putties. I'm out $1 or so on.
Yeah.
YouTube TV's multi-view is getting an expansion. YouTube TV has slowly been expanding its multi-view feature, which initially allowed sports fans to watch up to 4 channels simultaneously. But now they want to introduce fully customizable multi-view that would allow people to tailor their screens to their individual interests. So not just sports, but it could also include news, entertainment, and more. So maybe you have us streaming in one part, and then you got something else and another, and so it's not.
Can you do that?
But now you.
No. I mean, no. Physically, can you do that personally? Like I can't. Like you sometimes watch multiple football games, don't you? On the TV.
Yeah.
I can't do that. I got to switch back and forth, or I got to just watch what I'm watching. My eyes
you're getting old, dude. It's tough. I know.
You'll get there. You'll get there.
Oh, it's happening very quickly.
Okay, good.
It's
good,
really,
good, good.
yeah, it's scary how fast it's happening.
But YouTube, owned by Google. What are we doing in Google?
Oh, there you go.
It goes up every day, pretty much.
Yay!
It's like $5 or $10 off of highs. I have a butterfly on the upside. I also put on like another ratio spread. It's hard to short these stocks. It's hard to short.
So stop shorting them.
But that's what I'm doing. Is like I'm not really short them. I'm like kind of like neutral to slightly bullish. I'm like omnidirectional in these.
You might be able to fight it for a scratch or a small profit if it goes higher, but if it ever makes a downtick,
then no, that's not. But I'm like neutral. So if it just grinds higher a little bit, I'll be fine. I'll be perfect.
Much like Nikki is fueled by spite in order to win in his trades, Elon Musk is fueled by spite. He wants SpaceX's IPO to come before Sam Altman's OpenAI IPO, and now he's accelerating plans for a blockbuster IPO for July of 2026 for SpaceX. The company is worth a massive amount for a private company, and Musk is, basically trying to beat his competitors to the market.
I don't blame him. I think this point in time is going to be an interesting point for the markets because you're going to have.
I mean, they're worth like $800 billion.
I know between all these stocks, you're going to have
a trillion.
$2 trillion.
Yeah,
more than two. I mean, more than $1 trillion.
Yeah, they're targeting a $1.5 trillion valuation
just for SpaceX.
Just for SpaceX.
Anthropic
yes.
is another 300. OpenAI is another trillion.
They would be they want to be the first of these mega IPOs. So.
That's what I'm saying. It's like that money has to come from somewhere. Like, I don't know if that's just cash on the sideline or it comes out of Google or if it comes out of SanDisk or it comes out of gold and silver, but dropping a $3 trillion IPO over a couple span of a couple months, it's a lot of liquidity that's got to come from somewhere.
Sure.
So it'll be interesting to see how the market reacts with all those things. So I don't blame him for wanting to be the first.
Yeah.
I think the first one is going to be the one that is the best performing in the short term.
Well, is it coming from Tesla? Because you can't trade SpaceX right now, but you can trade Tesla.
Maybe. Yeah, maybe. I mean,
we haven't talked too much about Tesla. 436, up about $5. It too is.
It's had no move, like it's gone nowhere.
Yeah, it's near. It was near its lows on the move down with the market. I mean, it has a good. I guess correlation 0.23 is not that good, I guess.
Yeah.
It's kind of been dead. IV rank of 3, so it really hasn't hit.
Oh, wow.
And so many other things, but it too has earnings January 28th to give you those next week earning problems. Yeah.
Hey, here's something interesting. Jeff Bezos and his space penis endeavor, Blue Origin, is launching a satellite network enterprise that would directly compete with Elon Musk's Starlink. The company aims to begin deploying the first of over 5,000 satellites in the fourth quarter of 2027.
Well, I would like to let you know that I'll be on the moon soon.
I'm sorry, what?
I'll be on the moon soon for Artemis 2.
Okay.
Through NASA, you could buy a ticket
Right.
on a hard drive.
Oh, okay.
It will be put on the moon.
Pretty sure I want to stay away from your hard drive. What's Amazon doing?
234 on the bid. That would make it up around $3. Earnings February 5th. IV rank of 40 is pretty good there. What's that?
Amazon's been dead too.
Amazon's been dead too.
For 6 months.
Yeah.
7 months. It's gone nowhere.
Right. So what we're outlining here and what you're seeing here is these popular names that got us to these lofty levels, if you want to consider them lofty levels, what got us to these highs where we are not participating in this rally. And that does mean that the rally is a lot more broad-based at this point. Now,
dispersion.
But tech is on sale, though, then.
That would be the bullish
yes.
spin, and the bearish spin would be, these are the leaders and they're not leading, so, buyer beware. That's where you start going with strategy, figure out what you want to do with each position.
A company called Open Evidence, worst name ever, wants to be the chat GPT for doctors, and it's doubled its valuation to $12 billion. So this company we've never heard of, with a terrible name, is worth $12 billion. I love this timeline. They've seen meteoric growth. They were valued at $1 billion just a year ago, but Open Evidence, based in Miami, Florida, closed a $250 million financing round, and again, now valued at $12 billion. Company founded in 2022 and wants to be a useful chatbot for doctors.
Yeah, I don't get the name. I don't know
Open
why.
Evidence? Yeah, I know.
Evidence sounds more like it would be like
Detective.
a law.
Yeah, right.
Right.
This would be like for a law firm or like a law.
It sounds like a true crime podcast I would listen
Yeah.
to. It's like, you're listening to Open Evidence. And I'm like, ooh, okay. Let's do crimes, girl.
Yeah, 12 billion. That's drop in the bucket.
That's crazy. Hey, here's something fun. UNH. Remember we used to trade UNH on the reg? Well, they're saying they're going to offer rebates to their Obamacare customers. I believe that when I see it. The company said, yeah, we're going to provide rebates.
I'm going to give you a rebate code.
They're like, yeah. It's like, you get a rebate.
They should do it like Verizon, where you got to like,
Did you get your $20 from
Yeah.
Verizon? Didn't you have something?
you got to like opt in.
I know. I
sign
tried.
this document.
So they said that they would send a text message. I never got a text message.
Yeah.
That's what
And so they're just
Text
like,
in the mail.
LOL. Yeah, I know. So it says, UNH said, we will voluntarily eliminate and rebate our profits this year for ACA coverages as Congress continues to work towards more long-term solutions. What to do in UNH?
UNH has actually been a pretty decent trade for us.
I enjoy trading UNH. I enjoy trading the fringe 15 Delta options in there. I mean,
Yeah.
it's a $340 stock. It's got an Ivy rank of 31. It does have earnings next week to give you more for next week, January 27th. Ivy rank of 31.
We've been trading it a little long to the long side, but you know, Jade Lizards or
It's had a $20 rally last 2 days.
yeah. So
Oh, wow.
it's been a good
It's been in a pretty tight range, though, from around here.
300 has kind of been the spot. Like
Yep.
it, like stop.
Yep. 315.20 to about 350-ish. We're right there, 347 this morning.
Here's a fun little factlet. In 2025, consumers spent more money on non-game mobile apps than they did on games for the first time ever, as they downloaded more and more AI apps. I just thought that was interesting. Because normally games dominate, whether it's like your word search or your Candy Crush or your Farmville or your, I don't even know all the games. But for the first time ever, they spent more on mobile apps.
Probably good. I think that's. I think
Just a different way to rot your brain.
yeah. At least like ChatGPT can get like useful info from.
Right.
That is true.
Like just
That's
sitting
true.
there and like playing Candy Crush for 4 hours. That's about as low brain rot as you can get.
Yeah.
Okay, well, I hope they come after you in the chat. But worldwide, consumers spent approximately $85 billion on apps last year. It's a lot of mozzarella sticks. No.
Yes, that is too many mozzarella sticks for
Joke there.
sure.
Hey, this is a fun survey. The regular yearly survey from Glassdoor of the best places to work in 2026 is out. And a chain of car washes that I've never heard of, but I guess they have some in Indiana and Minnesota, 55 locations. Crew Car Wash was voted as the best place to work in 2026. I don't know. But number 2, In-N-Out Burger.
Ooh.
Number 3, NVIDIA.
Oh, no.
I love the disparity
I think
here.
NVIDIA is probably skewed by the value of their
stock
Yeah,
options.
their stock options. Yeah, that's that makes sense.
Number 4 is just a company called Ryan. I've not heard of them. Number 5, the realty company Keller Williams. Number 6 is Mars, the candy company. There's a guy here on TikTok that does video, like he works at the Mars here in Chicago, and it
Like
looks
a Mars bar
awesome.
back in the day.
Yeah. Number 7, ServiceNow. 8, Bain and Company. Number 9, Houston Methodist, and 10, a company called EPAM Systems. So do with that what you will. But the best places to work for 2026.
Yeah.
Number 1 is a car wash. So.
Yeah. take it with a grain of salt.
At the car wash. Yeah. This is great. Anyone who is in Indiana, the state of Indiana, or close to Indiana, so if you're in Kentucky, or if you're in Illinois, if you're in Ohio or Michigan, get to Indiana today because of my successful Hoosiers. All Chipotles in Indiana are offering a buy one, get one deal if you're wearing any IU swag.
Wow.
This is awesome.
Yeah.
Yeah.
All right.
Go for it. I'm not
Let's go.
driving there though.
But it's not that far. You get 5 free items per transaction, but the team's historic run has energized fans across the state, said the marketing officer, and the BOGO offer rewards a dedicated fan base. So, CMG.
Does the BOGO include the guac though?
Guac is extra.
I feel like the guac is going to be extra.
Guac is extra.
Yeah,
Do you have any other articles about the Indiana victory here?
No.
Because I think a bar gave the coach
Upland Brewing is it's a brewing company. It's not
free
a bar.
beer for
but
life.
Yeah.
Free beer for life. So
Yeah,
good on
that's
him.
good.
That's what he said after the game. He said, "What are you going to do?" He goes, "I'm going to go have a beer."
Yeah.
Yeah, good.
From-
CMG 40 on the bid. Looks like it's unchanged. It's had a run from the beginning of the year when it was 30 to 40. If I'm going to go that far, it was 60 in July. So
We did laddered puts in there.
at the lower end of its
Couple
range.
times.
Yes.
In a hilarious story, disgrace has been brought to the Norwegian ski jumping team after an expose video caught them altering the crotchular area of their suits for more aerodynamic. The athletes did not know, but they're calling it penis gate. Just before the start of the Winter Olympics, a cheating scandal has broken, affecting Norway. The ski jumpers, they have to have their suits, inspected, but I guess after the inspection, one of the coaches, unbeknownst to the athletes, made some adjustments to the crotch region to give an advantage. And I just thought it's just, what a funny scandal.
Yeah.
What are we
I
doing?
feel like this is like kind of the reverse of the normal enhancements on there. I feel like you'd have to make it like
I know.
better, you know?
I know. Let them pad their crotches. I don't care.
Yeah.
Finally today, for my viral video of the day, speaking of the Winter Olympics, oftentimes you can get into some shenanigans when you're on the ski lift, going up the mountains. But I've never seen anything quite like this. Watch this. How? I have so many questions.
I was expecting a jump.
Me too.
Like a jump and fall into the tree or something.
That's pretty good. He brought his
Where is the amp? I have so many. And how do you get off of the chairlift with the? Anyway, but that's cool. I just have questions. Bats, what's coming up next?
We're going to take a quick 90-second break and come back. We got more Tasty Live with Confirm and Send. We'll talk about this market, which is on fire and fuego.
fire!
Fuego.
90-second Tasty Live.
Tasty Trade's Active Trader interface makes futures markets your arena. Built for the bold, not the bored. Trade CME futures with a single click. From micro contracts to major ideas. And go even further with futures options. Tasty Trade lays out multiple ladders and charts for total visibility. Plus, hundreds of built-in indicators for traders who want a broader view. Tasty Trade, pro-level tools, intuitive design, total control.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Got big goals for 2026? Get the big deal. Earn a 4% cash match on all qualifying deposits, up to $10,000 total. Plus, unlock 30 days of commission-free trading. Trade with confidence using active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. Earn a 4% cash match when you open and fund a new Tasty Trade account today.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
Earn a 4% cash match when you open and fund a new Tasty Trade account today.
Niggy, we are back, son. And you know what that means. Time for a little bit more Tasty Live, right? With Confirm and Send on this January 22nd. But before we do, let's take a quick look at the market. E-mini S&Ps are up 44 and a half handles to 69.
40 is the new 20.
40 is the new 20. Yes, when you have volatility closer to 20, but volatility at 18. This is
And just size of the market, too. We don't talk about that a lot.
Yes.
40 sounds like a lot if you're thinking in pre-COVID time. If
SPOO's 4,000, it's a 10% move, but if SPOO's are 6,900, you're
1% move. 4,000.
I'm sorry, 1% move.
Yeah, it's a 1% move.
Right, you're looking at a less than 1% move.
Yeah.
Like 5/8 of a percentage point move. You know, not unusual, right? Like more in line. Yeah, you're 100%. You're 100% correct there. And you've got that 1% move in the Nasdaq, which was kind of lagger for most of this move so far, taking the lead today, up 250. The Russell up 16, more in line with around the 5/8 percentage point move. With the rest of the market, the Dow up 227. Volatility in by another 30 cents, flirting with its recent lows that it made the last 3 days or so. Cancel crash too with the market. Bonds over 115, 115.01. Bitcoin, that's the one that can't get out of its own way. Down $660. Traded over 90, under 90 to 89.3, where it's closer to its low end of its range. Very tight range of 1,000 points. Last night on Bitcoin. Ethereum doing the same, down a little bit more, down almost 2% to 64. Tight-ish range in Ethereum, a little bit better range in Ethereum than in Bitcoin. Oil down to 91. You closed your oil put spread that you had on. Your oil call spread that you had on, which was nice. Gold down 15. Doesn't tell you the whole story. Last night was about 50, 60 handles lower than that. Gold, as you can see here, just a skosh off its highs. Silver back up. Silver was lower last night, higher today by 86 cents. I think you re-entered around 93 and change.
93 like 2 or 93.1.
Yep.
Right around here.
Yep, right around here. You covered them.
93.12.
Yep, covered them at 91, sold them back out at 93. Decent, good-sized move there. Nat gas, you just got long a little put spread there. Nat gas up another 3.5% on this huge move from 260 to 360. Big move in nat gas. Earnings front, really nothing to talk about today. You have Intel. I have a position in Intel where the stock's only moved about $3, but the IV rank and volatility has gone up exponentially. Trying to take advantage of that call skew. I've got like the 50-55 with the stock sitting right at 54 and change. You would think that would be good, but it's not because volatility has expanded. It's moved too quickly in that short period of time. I'm probably going to have to sell a put just to try to get.
We had puts there, and I closed out of them the other day.
Well, that was for my option trades today podcast. So I've got to do something with there. Maybe reduce. I did a 1x3. Yeah, so I got 2 extra units in there. So my break even would have been, but if it was 1x2, my break even would have been over 60. Since I did 1x3, my break even at expiration is close to like 57, 58 or so. So I'll have to do something there. I'll have to sell one. I could sell up to 2 puts because I have a 1x3.
Yeah.
If I sell 2 puts, that wouldn't use any more buying power. But I'll probably sell 1 put. See what goes on there.
Sounds like a plan to me.
That's what I got to do. Okay. Yep. Confirm and send. You ready?
Yeah, let's do it.
Thursday, January 22nd.
And then we got trades from the research team.
We do have trades from the research team at 8 o'clock. Yes. Is it better to have a positive or negative portfolio delta, and how much should I carry?
Is it better? Well, if you've had...
What's the market doing that?
Yeah, if you've had long delta, it's been better.
Not 2 days ago, right? I mean...
For that one day.
For that one day, that's right. I mean...
Just...
Go ahead.
This is your own perspective.
Yes, that's what I was going to say.
The whole thing with options is that, if you're trading options and you're trading on both sides of the market, you tend to have short delta, not only because the market tends to go up, but also just because of the skew in the option, right? So the short delta and short vol kind of works in tandem. I think you kind of explained this really well the other day. But when the market goes down, volatility tends to expand. So that short delta hedges that expansion in volatility, where you're also short that volatility. So do you have to have short delta? Certainly not. If that's not your prerogative on a specific stock or the market as a whole, you should lean long. But that's kind of the whole thought with having short delta, is that if you are also short vol, you need that sort of hedge so that you're not getting whacked. If you're long delta, short vol, they both go against you on the downside. They both go, you benefit from both on the upside. You got to you want to have that kind of offset to some degree.
Yep. I don't think if I can answer any way better. I mean, usually, again, depending on your own personal view on what the market's going to do, if you're selling premium, it expands on the way down. Yeah. So we like to be neutral to a little bit short delta if you have a neutral bias in the overall market. If you have a bullish bias in the market and you're selling premium, you should never have negative delta.
Yeah, you should have long delta.
Exactly.
Yeah.
Exactly.
And if volatility is low, there's ways to get long delta.
That's correct.
Long spreads, diagonals, calendars, butterflies.
Yep.
I mean, you can build it however you see.
Yep. Next question, please.
I was looking at the options that expire February 24th in SI. I noticed the 50 delta option was over a point out of the money on the call side and over a point in the money on the put side. I thought the 50 delta was always the at the money strike. What am I missing? What gives?
It is always right at the money 86% of the time. So, I mean, 86% of the time, it's 100% correct. I say the same thing. If you told me a stock was 100 and you asked me what the 100 calls were, I would say they were 50 delta. In your example here, with SI trading, I'll just say 93. The 93 calls would have a higher than 50 delta, 52, 54, 56, something in that area. Why? And that's all because of call skew. Yeah. Now, it is a perfect model, but it's not perfect number. Right? So this is why when we say we're selling a strangle, do you go to the delta or do you go to the price of the option? And we usually go to the delta of the option.
So that takes into account the skew.
That's correct. That is correct.
When you look at that sort of thing, what it is telling you is that the options are priced as if that asset is higher.
Right.
So if you look at, where the 50 delta options basically line up, we'll call it 94. With silver at 93.5. It's basically telling you that the price of the options are priced as if the asset is already at 94.
The velocity of the move is to the upside.
Because of the skew. And that's all just when you think of the distribution, the normal distribution assumes both sides are equal. This is not equal. The upside is priced higher than the downside. And so that's another way to kind of digest what is happening here. And that can change, it can flip to the other way too. Like that's option pricing.
Mm-hmm. Perfect.
It's a good question.
It is a good question. I'm tired of being whipped around anytime there's a new political headline, tweet, etc. I added the etc. This wasn't a problem in the past, but is now. How might I go about buffering my portfolio from these wild swings?
It's a good question. I mean, it always comes down to size, obviously, but maybe you get a little less aggressive with management, or you use static delta via futures or stock shares as a way to kind of trade around this. But I know it's like a political thing a lot of the time. A lot of it is news driven, but I don't think this is that much of a change from the last.
Not in the last decade or.
Yeah, the last 10 years, the kind of recent time.
That social media has been prominent, right? People get their news a lot from social media. I mean, it's been gravitating that way for the last, 15, 20 years. But the last 10 years, it seems to be a lot faster trajectory in that way. Listen, news moves faster. And I could remember when people, like when we would trade on the floor, I'll go so far back just to make probably a horrible analogy or a horrible story about it. But when we trade on the floor, we didn't have we started out with no TVs. So there were no TVs. We weren't allowed to make phone calls. Like, there was no phone call. You can receive phone calls only from the trade desk. You couldn't receive phone calls from the outside world. There was no cell phones or anything else really at that time. They weren't allowed on the floor at that time either. So they wanted us to be in a bubble with no information so that we wouldn't have any inside information to front run any type of markets. That went full tilt to what you have today, where you have every piece of news information at your fingertips, whether it be in the platform or external websites that you go to, everything else. And that was their way of leveling, or the way of leveling the playing field. Which way is right and which way is wrong, or which way is good and which way is better? I don't know, but listen, you think you hit it to answer the question the right way. The first thing you said was size. If you go back to what you said and you replay this, you said size. The only thing you can control is entry. So entry with your size. And the second thing you said is when volatility is high, you said maybe you don't make the quick adjustments. Now,
or you look for new positions.
Or you look for new positions.
Or you lean directional when things go down. And your short puts, instead of rolling down the call, you close the call, or you roll the call down less, or you roll the put up less. Like, leaning a little bit directional and managing positions quicker.
And you're going to get that when you get two-sided action.
Yeah.
Like I tried to do that in Intel. You've only had one-way direction. It doesn't work. So, I mean, again, it comes down to the size of your position. Yeah. And I think that's the key to the whole thing.
But there were years where nothing moved ever, and it was paint drying. And I assure you, you would prefer whatever this period we're calling is, because there's a lot more opportunity across the board. I mean, there was nothing worse than the 2016, 2017, 2018 trading where we didn't go anywhere.
Yep.
Where every day it was paint drying. It was horrible.
Yep. Next one, please.
Is there a maximum amount of Vega you are willing to carry? I know you have targets for Theta, but is there such a thing as too much or too little Vega?
I couldn't even tell you my Vega number. So, I mean, it's not something that I even look at. I mean, when you go through the delta of the position, to go through the buying power that you use and keeping your buying power wide range, 1 to 5%, tighter range, 2 to 3%, everything being equal, using only, under 50% of your account to really a tighter range of, 15 to 30% of your account, Vega doesn't become an issue. When Vega gets too big is when you're trading outside your parameters of what your amount of money you have in your portfolio.
Yeah, and when volatility is too low.
And when volatility is too low.
Yeah.
Yes.
I think the easiest way to avoid the Vega, which is also a gamma risk situation as well, is managing positions. And, being less aggressive when volatility is low. It's very, very hard to do because you want to put positions on, you want to be trading, but you got to switch up the game a little bit when volatility gets low. You have to go into the calendars or diagonals or long spreads or iron condors, stuff like that. Yeah. That's where I think people get caught, is when you kind of get lulled into the low vol market.
Yep. Totally agree. Cool. All right, let's take a quick 90-second break so we can get to trades from the research team coming at you right after these messages. We'll be back in 90 seconds. Tasty Live.
Diversify your portfolio with stocks, options, futures, crypto, and more. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Tasty Trade. Download today. Got the need for speed? No problem. At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade. Make your move.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
Got big goals for 2026? Get the big deal. Earn a 4% cash match on all qualifying deposits, up to $10,000 total. Plus, unlock 30 days of commission-free trading. Trade with confidence using active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. Earn a 4% cash match when you open and fund a new Tasty Trade account today.
This is Chicago. We invented the skyscraper, the Italian beef, and the standardized options market. SIBO is not only the birthplace of options, it's also where Liz and Jenny got their start. In an industry first, two female former floor traders broadcast live from the floor. Hear the sounds of live market action and feel the electricity as they present real-time trade ideas and research-backed market studies live from the SIBO's SPX pit. Watch Liz and Jenny live from the SIBO, only on Tasty Live.
Tasty Trade has crypto, and you can trade with zero commissions: Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Your crypto needs a wallet, and crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
Earn a 4% cash match when you open and fund a new Tasty Trade account today.
Nicky, we are back, son, and you know what that means. Time for a little bit more Tasty Live with trades from the research team. Who is our first researcher? Shark, my man, what's up?
Not much, how much? How are you guys?
Good. How are you today?
All good. Nice and cold weather in Chicago.
How's your dad? Did he survive the 24-hour bear market? Is he okay?
Yes, he survived it. Okay.
Has he learned a little bit?
Absolutely not. Perpetual bears. Okay.
See, Shark, he'll ask me. He'll be like, "Why are like all the old people like bearish?"
I did ask him that question.
He asked me that, and I was like, "I don't know. It's been just nothing but up for their entire life. I don't know why they're just."
You've only dealt.
You know, I got to out this SOB because he's a friend of mine.
Yeah. Go ahead, defend him.
He beat the S&P return by a multiple. Okay, so he moans and groans with 2 loaves of bread under his arm, and I talk to him every day. He has my cell phone number.
Yeah.
So He is okay. Now he is a tricky
If it
little
takes
SOB,
you
right?
15, if it takes you 15 years of losses to then beat the S&P on the 16th year,
No.
did you really beat the
no.
S&P?
He has learned, as all good old men have learned, the art of negotiation with the wife. Like we've always said, how was your day today? It was horrible. Even if you had a great day.
Yeah.
But here's $100. Go get yourself something good. It'll make you feel good. Everything else like that. Because he's got all the other money sitting in his pocket. Believe me.
You think he has a secret bank account?
100%.
100%.
100%. I mean, he's treated you pretty good, right?
Absolutely.
All right. He doesn't do that
I'm
with
not
air.
complaining about
Yeah.
I'm just
the squeaky wheel always gets the
Well, you
wheel.
still didn't answer the
The
question.
squeaky wheel always gets the oil. See, I'm tired.
Why is it always bearish? Why is it always bearish? Is it just like a...
It's because I've only seen the market from 2020 to 2025. Apparently,
Yeah.
Okay.
Yeah.
I've
Yeah.
not seen the market from 2008 to 2016.
I told you that. You can't, you got to push back on that.
Uh-huh.
You
Yeah.
got to push back on that. The last 5 years, we had a confirm and send question that was like, this market's crazy. I don't know what to do anymore.
Right.
You know, this market's been nuts. It's been nuts.
Yeah.
You've had more in this last 5 years than you had in the 15 previous.
Yeah.
Going back to the 08. I mean, right?
Yeah. No, you're right.
I mean, like, it was
100%.
nothing for 10 years. Now you got 5 years of crazy up and down, sideways, tweets.
Yep.
Wars.
Once in a lifetime movements.
Yes. All right. After you, what do you got for us today?
Oracle.
Oracle.
Ooh.
Trying to find a trade that does not have earnings with the 57 days out. Oracle is one of them. They have earnings before the expiration, but you hopefully they're going to be out by then.
Up $7 this morning.
Yes, this is a perfect trade to put on yesterday.
Yeah.
So I don't know if you guys want to adjust this a little bit.
I mean,
maybe make it more neutral or something, but
It is up $7. It's still
hasn't had an uptick in a week, and it's at all-time lows. I
Yeah.
mean, all-time lows, basically. I'm talking about the last 45
Therefore-
days. You go a year ago, it was at the same price.
Yeah.
So I mean,
it's reversed that entire move when it first got caught up in the AI, praise.
Yep.
It went from right here 170.
they were in the lawsuit with the other AI stuff. because
Yes.
They didn't report their debt correctly on the amount that they were taking. Everything's all speculation with them now.
Yep.
You expect them to still come back up a little bit though. So
I like this, the 150s. All right, well,
pretty nice return on capital for a smaller account.
With the stock up, almost $5, you might look at the 155s, but we'll see
we'll see where it opens. We are short the 165.
Yeah, I put like 145, 150 yesterday, and up $7 today. So like,
Yeah, good Ivy rank of 68 in there. Yeah.
I like it.
Yeah.
We'll take a look.
Cool.
Yes, we will. All right. Good job out of you. Appreciate that. Who is our next researcher? What's up, you smooth operator?
What's up?
You good?
I'm good.
You certainly are, aren't you?
Yeah, I'm good.
Awesome. All right, well, what do you got for us today? MU, no, you can't do this. This is like a trigger word for me. MU.
What's wrong with MU?
Micron.
It's been moving about $30 a day.
Yeah.
It's a wild one. MU, SanDisk, Western Digital.
Yeah.
All the memory stock.
Up another $6 today. I like the strategy, at least with defined risk. Let's see where you're going here. What strikes you looking at? 470, 80?
Yeah. So I'm looking for 330, 340 for put side, 470, 480 for call side. I know it's weird, but
Yeah, I mean, it's a 50-50 shot. I mean, I would look to manage this, pretty quickly. Like if I was I wouldn't be looking for 50% on this.
Tough one.
This is a tough one. What do you think here? Do you go wider and collect, by wider, I mean further out of the money with your short strike and collect less?
I like that this is in the 29-day. I think you'd be more aggressive, like managing this. I think if you do get a sideways chop and maybe a little bit of a down move, you'd actually see vol come in here. So if I wasn't already kind of locked and loaded in MU and SanDisk, I would go to this. I will ask you a question though, because you're an AI guy.
Yeah.
You got any under the radar AI plays that you're kind of interested in? Because you kind of know the chip space. You're like kind of in that zone. You got any lower priced ones that maybe is the next MU?
Any stocks that are like $4 and not $400 is what he's saying.
For the Johnny trade.
That he could just give to his kids someday, and be like Shark someday.
Like I was thinking, my thought was cybersecurity. Because you got all this AI stuff. You need like security on that stuff? Do you?
Yeah, that's a good site to look into, like cybersecurity area.
Okay.
But on the top of my head, I don't have any specific ones. But I will send it out to you.
Okay.
I will do a deep research, and then I will reach out to you.
See, that's
the answer. That's what an intelligent man says. I'm going to do the research, and then I'll get back to you.
Yeah.
I make up a symbol.
Yeah.
That's what I would do. I just make it up. There you go. Good job out of you.
Let the peeps know, though.
Absolutely, absolutely. Good job out of you, my friend. Who is our next researcher? That's right. It's my man Kai. How are you, brother?
I'm doing fantastic. How are you?
I'm doing good too. Oh man.
What?
You know how I would like, trade a little bit more aggressively in years past, and Tim Knight I would be short something, and Tim Knight would come out and want to be short something too. It would make me feel like I was.
Oh, this is kind of giving you that feel with Intel.
Yeah, Intel.
Oh, you saw the underlying.
I'm a little bit bearish on Intel, and I have those short deltas already, so this is a little bit of a problem. But go ahead, my friend. Go ahead. This is triggering me today too. Go ahead.
Which means we're on the same page, right?
Yes, which is worrisome.
Yeah, but
I like it. I like it when I'm the only one thinking that way. But go ahead.
But mine is just very short, like 1 day position for earnings. Mm-hmm. It's been up so much. And I agree with you. It's crazy. So that's why I want a little bit of protection to the upside. So this one is it's a kind of bearish, but you make more money if it hits your short strikes.
Call this an omnidirectional, like you kind of want it to go up a little bit, not explode to the upside. You have no risk to the downside. If the stock falls out of bed, you keep a couple shekels. I like it.
1 day play, expected move is under $5. You're at 59. The stock is under 54.
The break-even point is 65, so it's $10, so like a 2x.
Yeah.
But you can move it down. A lot of people don't think it's going to move that much. You can move it down.
These have been expanding the last, it seems like forever.
Yeah.
When you're looking at this.
But I try to move it down 1 or 2 strikes. The premium, the credit is still like a 15 cents, 5 cents more. So I don't think it's that much difference. If it's 50 cents, probably better.
Yeah.
If it's only 15 versus 10, I'll probably just keep it as far there as possible.
Well, I like your position better than mine. I guess that's about the only thing I could say about this. But
is your position in the money now?
It's like
I'm right there. I'm right there.
February though, so it's like not going to be much. Now with how much upside skew there is, it's not
right. Right. After earnings, volatility should come in. I just don't want to see an $8 move on a $5 expected move. I need to see a $3 or $2 move. And if it was a $2 down move, oh baby.
Oh, this is actually a good compliment to your position. Right? If it goes up $8, you make some money.
That would be an add-on. That would be more short delta.
Yeah.
That would be called a stupid. Okay? I mean, I know I represent that at times, but still I don't want to trade it that way.
Mm-hmm.
I'll stick with my position and look to reduce delta. All right, good job out of you. I got to say, like I said, better than what I have. Who is our next researcher? Oh, you forgot to put your earpiece in
I know,
too.
I forgot
did too.
it.
I know.
I'm not a professional like you, okay?
No, I put mine in between guys.
I know, you're good.
I didn't even
dropped the
notice.
thing.
I know. What's up, young lady? How are you?
Oh, I'm getting ready for this deep freeze. How are you guys?
Yeah, this deep freeze thing. Like, I mean, this is the time when you live in Chicago.
You make soup.
You make soup and you question why you're here.
Julia, do you make soup? Are you a soup person?
I do make a mean soup. I love a good soup.
What kind of soup do you make?
Borscht, one of my favorites. Butternut squash, always a classic. Minestrone. It's just so easy and it's delicious. Curry is not a soup, but it is soup adjacent, and I love my Thai green curry with chicken thighs, and that just gets better the longer it sits in the fridge, and it never gets chewy. It's amazing meal prep.
Yeah. I like that. I've been catching strays here about my soup making. Like I'm getting Christmas gifts that are fancy soup pots. Like,
are you a soupman?
I have been making some soups recently. It's been quite cold. I think it's it's the perfect kind of thing to do when it's minus 20 degrees outside. But this one, he's been making fun of me.
Me?
Yeah, you. Sergio
You
in the
deserve it
chat
a
been
little
making
bit.
fun of me. You've been making fun of me. Everybody making fun of me. Everybody throwing a little shade at my soup. No soup for you.
It's one of my favorite things. I mean, I like soup a lot. Navy bean, chicken noodle. You know,
those are
I'm not as fancy as you. You know,
you got no palate.
Curry derivative soups and stuff like that. But I like the classics. I don't like tomato soup. I know you. I know.
You don't like tomato soup with a grilled cheese on sourdough?
Yeah. I put some scallions in there.
I know. It's weird.
Or shallot in the pan. Shallot.
Yeah.
Like,
Here's the
really
real
thin
test.
And you get crispy.
We have a real test. Go ahead.
Yeah.
Here's the real test of whether or not you're an actual soup person. Do you have an immersion blender?
I do.
Okay, yeah, he passes the test. Yeah.
Thank you. Yes.
Test is passed.
I don't mess around. When you got a craving for soup, you gotta go for it.
Well, immerse us with your trade, will you?
Oh man. Well, speaking of soup,
AVGO.
We got Broadcom. Broadcom's having a crazy move this morning. Actually, it's up quite a few bucks, as well as a couple other chip stocks, a couple other semi stocks. But if you look at the history over the past couple of weeks, it's actually been a bit flat. This is like the biggest move that it's had in a while. So IV rank over 30 right now. I don't know exactly where it's going to wind up, but we get a good amount of volatility this morning. Thinking in Iron Condor just based on its kind of more recent, price history. So I went with what did I do? I adjusted these strikes. I went with the 305, 380 short strikes and then $10 wide. So this is around aiming for like 20-ish delta on this. Collects 320 in credit for 680 in buying power. So it's pretty juiced up.
Yeah, it's AVGO is
buying power. Yeah, go ahead.
It's kind of gotten looped into the like NVIDIA basket where it's been really choppy for the last like 5 or 6 months. Really hasn't gone anywhere. I mean, it's off the highs, but it's kind of it's not in the MU, LRCX, like that basket of like kind of high flyers that are up like $5 to $10 every single day. It's kind of in the mature basket of the NVIDIA and, it's kind of like the bigger, it's almost turned into like an Apple type thing. Just kind of chops around.
Yep.
I kind of like it.
More established, kind of more like less of a sexy company
Yes.
in a lot of ways, but subject to a lot of the same like sector specific factors. So it is having a pretty big move this morning. I went with 29 days just because the earnings, I think, kind of run into the longer term. Yeah, earnings kind of on this
March
one run
5th,
into it.
Yeah.
So 29 days, so short term. But with the IVX kind of where it's at right now, it seemed like it could be a little something going on there.
I like that. I'm going to ask you too, because I asked Gad the same question. You're in the AI, research, techie space. Where's our next 10Xer? Which stock? What's the next one?
Man, if I knew that, I wouldn't be working here.
I know, but come on, you got to have something in your pocket here.
There's been a couple, I think you might have brought this up actually, but cybersecurity, I think is going to start to get more and more like attention, I guess, because right now we're in like the more consumer facing AI space, because like we can kind of like see and feel, and investors can like understand the consumer facing applications. AI is going to be moving into like every sector / it already is into like pretty much every sector. And with that comes also increased security risks as things move more and more digital, more and more online, and as bad actors get more and more sophisticated. So I think cybersecurity is going to become increasingly important. It already is, but like even more so, to the point where it's like kind of more of a staple name. This is my guess. I'm just thinking, but that's a biggie.
All right,
and then those like one-off random, like any companies that service sort of like the high performance computing sector that you wouldn't be thinking about. So like fiber optics companies, potentially anything that deals with like computational infrastructure could be an interesting one.
Okay.
So that potentially could be an interesting area too that people don't always think about. But man, if I had a crystal ball, this would be it would be a different Thursday.
I'm on the cybersecurity one. I'm looking more obscure. I feel like cybersecurity is on the surface here. I'm looking like Vecchio had me in GLW at one point, Corning, which was like
fiber optics.
Wasn't it?
So
I think that might be an interesting one too.
Yeah, they're not just the Pyrex dish.
Yes.
Anymore.
No, not anymore.
Good job out of you. Good job out of you, my friend. We're going to take a quick 90-second break. We're going to catch this opening bell in about 90 seconds. This is Tasty Live. We'll be right back.
global markets never sleep. Explore them with Forex, now available on tastytrade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on tastytrade.
When the market moves, traders need to move faster. tastytrade Active Trader Tool offers full depth of market visibility, one-click order entry, and instant position management so traders can react in real time. While others charge for professional tools, tastytrade provides them for free. Opportunity can move fast. Seize it with Active Trader. Try it now on tastytrade.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new tastytrade and tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Coming up on Bad Money with Jim Blamer. Blamer's hot stock tip of the day. Trade ideas? Trade ideas? You're coming to me for trade ideas? I'll give you a trade idea. Trade me for tastytrade.com. Those guys are great. I love those guys.
Got big trade ideas? Get the big deal at tastytrade. Make moves with confidence using smart tools and dynamic charts. And trade what you want, how you want. Earn a 4% cash match when you open and fund a new tastytrade account today.
Grow a strong community with tastytrade's referral program. When your friend joins tastytrade, you'll both receive $100. As your community grows, you get more bonuses. Only at tastytrade.
Nigga, we are back, son, and you know what that means. Time for a little bit more Tasty Live with the opening bell. The opening bell is imminent in about 3.5 minutes. E-mini S&Ps, well, last night when I went to bed, they were up around 20-ish or so. They've doubled that to up 47 right now. Just about $1 off of the highs. NASDAQ up 260 and change, up a full 1%. That's your leader in the clubhouse. Russell up 19. Dow up 264, cancel crash. Volatility down 26 cents to 18.15, off of the lows of 18.05 by 10 cents. Small bonds down 3. Bitcoin not catching a bid, not doing anything, 89.5. We'll have Ryan come on the show later today, and we will.
No, we got Glenn today.
I'm sorry, Glenn. Right, we got Bill and Glenn. I apologize. Yeah, my apologies. So we won't find out why Bitcoin's not moving. Ethereum down 60. Oil down 67 cents. Gold only down $8. I say that because it was almost about $70 lower than that last night. Silver up 85 cents. It was weaker too last night. Traded down to $90 and change. It's now traded up to 94 and change. It's 93.5. Net gas up about 12 cents or so. That's right where it was for most of the day. What do you think here, son, in this move higher? Big moves yesterday, back and forth to close higher. What do you think?
I think we're going to have to wait till next week to bust a move higher. I think we've been chopping between 68 and 7,000 for 4 months, right? Going back to like November, October-ish.
Too long a time frame for you. What do you think about today?
Today. I think we chop right here, 69.50. I think that's our spot. I don't think we're going to do much. Vol contracts a little bit more.
Yeah, I think Vol's got a little bit ahead of itself at 18.50. 18.50, and maybe even the market's got a little bit ahead of itself. I agree with you. A little bit of chop weaker is what I'm thinking.
So you're thinking the 48-hour type thing, like the reverse the move today or tomorrow. Some of the move.
Some of it, yeah, I think so.
That's fair.
I don't think you'll get
Like
down
6,900 kind of thing? Like 50,
yeah, which is only today's move.
Yeah, I know. That's what I'm saying.
Or so far this morning's move. Yeah, I mean, I was wrong yesterday on volatility. Think it wouldn't get under 19. It's flirted with going under 18. So keep your eye on volatility. It's a good key right now. It's less of a key or a factor to the direction of the market. Remember, volatility moves the inverse of the market. If volatility goes lower, usually the market's getting a bid. If volatility goes higher, usually there's some pressure on the market. That's the way I look at it. But as that number gets smaller, it's much less telling. It's a lot easier, at least in my eyes, when volatility was over 20, 19 and change to 20, to eye on volatility and then have a directional bias on the futures or existing positions that you may have. Yeah. As we get this 18 level, it's a lot different. So like now you got volatility down on a percentage basis 1.5, and you've got the market up, half a percentage point or more. So your volatility is not going to move as much to the upside.
Yeah.
As we go, if we continue to go higher. There's your opening bell. Volatility in by 26 cents. Been talking a lot about that. Let's see preliminary, just real quick, out of the gate, what's moving the market. Looks like Meta's your leader to the upside, up 15 and change.
That's a rare occurrence.
Yeah, he says that because look at it. This Meta has not really caught a bid. No. It finally caught itself a little bit of a bid so far today. Baba up $7. That's been rallying as of late. ARM up 7 and change. AVGO. We're just looking at that for a trade, up 5 and change. Oracle up a little bit. Reddit up $5 or so. Oracle up around 4.5. AppLovin up also about 3.5. Google up around 3.5. Let's see what the buckers are here. SanDisk, your friend, earnings on the 29th next week, down $8. Then everything else is down single-ish digits.
Well, did I top ticket, or are they just going to buy this dip and just rip my face off for 50 points in the next hour? That's what it feels like.
That's like you said. That's what it feels like.
Yeah,
that's what it feels like. I don't know. You've got a little bit of a quandary there.
Yeah.
Intel down 68 cents for earnings today. That's your earnings play. Yes.
We've got this NBIS trade that Shark pointed us towards.
Mm-hmm.
That's coming about $100. That I'm going to try and get out of here. We sold the 8140. Markets are not great here. They're about 30-40 cents wide.
Right.
I just closed that out. Nice little vol crush. A little bit of a bounce.
More bounce to the ounce.
Yeah, so it worked. So I just took that one off. I also...
That's me and Intel. I have to sell.
Look at you. Slinging them.
I don't know about
E-mini's up 50 now.
Yes, and I closed my SPX position for option trades today. I sold one put in Intel. I have up to 2 that I can sell to reduce delta. I'm going to stay with a little bit of short-ish, omnidirectional to short-ish delta. So in SPX, I sold that butterfly around $3 and change. Closed it at $1.65 just now with the E-mini S&P's up 50. And Intel, small down move, 90 cents. Selling some puts to reduce a little bit of delta there. I'm out a couple of dollars on that trade.
I also closed out the Microsoft puts. I sold those 2 days ago.
Mm-hmm.
Into the down move out in March. So I took $100 out of those. I also closed out of those. If you remember, we sold puts in SPY and the Qs into the down move on Tuesday. I closed those yesterday for a couple bucks. A lot of those trades, they didn't move 50%, but you got 25 to 30% basically overnight.
Yeah.
So I took those off. And I think I'm going to close out of this PayPal short put that's right at the money. It's basically a scratch. PayPal up like $1 and change. That stock stinks. That stock, that I don't know. It might
be like a Roach Motel. You get in, but you can't get out.
It's horrible.
Yeah. How the market's in there?
They're not bad. I mean, they're 10 cents wide, but it's just, that stock never goes up. There isn't a single thing that is perceived as positive for that.
Right. taking a look at some of the big movers. Meta up 18, helping the portfolio a little bit. That's
we've got some long delta there for sure.
Yeah, that's good. What's hurting? Some silver positions. Silver taking a little bit of a rally here. Other than that, what's your MU doing? MU down $4.
Oh my God.
Take a picture
How
of
is
that.
Possible.
Yeah, take a picture of that. That's
First
the one.
time ever.
Yeah, Ivy rank of 39 in there, just off its highs, down $4. What else you got for me?
Anything new to look at? You want to look at Oracle? I think we have so Oracle
closed our SPX position 0-day trade from yesterday at around 280, sold it around 330. Volatility so low, and where we are, and with my opinion, what I think the market's going to do, I think I'm going to abstain from it. But you
from Oracle?
No, from SPX at this point.
Sure.
But you certainly can if you want.
You want to just do the call side in SPX?
You know what? You could. It's just another shot on short directional delta. I'd rather trade something that has high implied volatility, like your Oracle trade. What are you doing in there?
I sold the 150 strikes. I think Shark was looking at about $5 ish.
Yeah, 490.
I sold them at 490, so we're right around there. Stock has sold off about $2 from when we were looking at it pre-market. So.
Yeah, and you did that in March, which is has more time to it, 57 days, than if you were looking to do February with earnings coming March 9th. I, too, would probably be in the March 20th options, even though they have a higher implied volatility. Earnings coming in March 9th, you're so far away, it's not going to affect, it's going to stay IV monthly implied volatility in the 60 handle, 60-ish, all the way into a week or two before earnings, and then it will start to expand.
Yeah.
What else?
I don't know. I legged out of the AMD puts yesterday. It's down like $1, or was down $1. Now it's only down 50 cents.
Did you buy the dip?
I did not. I did not buy that dip.
Earnings February 3rd, IV rank of 33 is pretty good.
What's NVIDIA doing?
NVIDIA?
It's nothing.
NVIDIA up $1. For all the good news, or at least for on Twitter, it's not moving like it used to. NVIDIA has become a lot more like Apple, a big ship in a small little river. Hard to turn around once it gets a move going to it. It's been going sideways. Apple's been going a little bit lower. It is up $2.30 today.
What do you do in Tesla?
What do I do in Tesla? Let's take a look. Can you give me a little bit of IV rank of negative 0.2? That's a good thing to point out about IV rank intraday. I know we've talked about it for those new people who are watching the show. IV rank is from 0 to 100. So how can you have a negative number? Well, intraday, it can go continue to go negative or continue to go positive over 100 or under 0. What that's telling you is that this implied volatility, this monthly implied volatility, is as low as it's been, and today it's going even lower. Now, tomorrow, if volatility it was unchanged, that IV rank would be 0. Not at the negative number that it might close at. Earnings are January 28th. I'd probably wait until next week.
What do you think about doing like a cheap wide butterfly on the upside?
You want to buy
just a butterfly.
In the 8-day options for
into earnings.
So in the 8-day options for expiration, for earnings on the 28th. So you would. Well, the first thing I would look at is as how
you could also do it in
they're good markets.
Yeah,
they're good markets. So you got expected move of almost $30. What are you looking to do? And remember, when volatility is high, IV rank is relatively low. Volatility is high. Butterflies trade cheap. When volatility is low, butterflies trade expensive. I think you're going to be surprised at the pricing that you look at, that they might be a little bit expensive, but you take a look at it.
I was thinking at the 450, 470, 490 for $2. $20 wide.
70.
Right on the upside.
490 is $2.70.
Yeah.
So you've got, Yeah, I mean, it's usually about 10 cents.
10 cents per dollar.
Yeah.
You're at 20 cents.
Yeah. That's the double.
Yeah.
You know what I mean? Because volatility is low. So.
You're not as excited as I am, so.
Do it small.
I was thinking, or that, or like a diagonal spread, or maybe like 1 by 2.
Mm-hmm.
You know, you go into February, let's say the 450s again, and you sell 2 of the January 30th, like 270s.
Uh-huh.
And you do that as like a 1 by 2 ratio, calendar ratio. You don't like that?
Sure, you could do that. Even the S&P's up 50.
Or we'll abstain. You want to do your SPX? Call spread?
Sure. Yeah, go ahead. You're just going with my directional bias, right?
Yeah.
Which yesterday we had to close it nicely, get lucky on a close, right?
Yeah, we did get lucky on the close.
Yep. So what do you want to do? I mean, if you're going to do this, I think you should probably do both sides. I mean, I hate
Oh, come on. I don't want to be...
Well, you're only going to... Here, if you go to the strikes that we normally go to...
Oh, it's just so low.
Yeah, exactly. You know, you're going to go do a $10 wide, 50, 60 for $2 and change. It's going to be... You're going to hold that all day long. There's just no meat on the bone.
All right.
Hey, we got Johnny trades coming up next, okay?
Yes.
Where we have to look at some trades. We have to look at some smaller price stocks that benefit those who have a smaller account. That's what we're going to do. We're going to take a quick 90-second break and come back. We got more after this with Johnny Trades. This is Tasty Live.
Beautiful.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Got big goals for 2026? Get the big deal. Earn a 4% cash match on all qualifying deposits, up to $10,000 total. Plus, unlock 30 days of commission-free trading. Trade with confidence using active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. Earn a 4% cash match when you open and fund a new Tasty Trade account today. When you've got a futures contract that's in contango, what does that mean?
Futures, unlike stocks, have multiple prices appropriated to them. That's known as the forward curve. So when a futures forward curve is in contango, that means that the front month is trading cheaper than the corresponding futures back month. So you'd see that forward curve most likely looking like this in terms of prices.
And backwardation, what does that mean for futures contracts?
Backwardation is the opposite of contango. So where contango front month futures contracts are trading cheaper than the back months, backwardation is the opposite. So those front month futures contracts are trading richer than the corresponding back month contracts.
At Tasty Live, we live and breathe the markets. But when the live show's over, are we out of breath? If you want to inhale the latest breaking market news, we've got you covered. The Tasty Live research team and on-air personalities post refreshing content updated daily covering earnings, economic reports, trade ideas, and much more. If you want a breath of fresh air and not stale takes, visit the News and Insights tab at tastylive.com. Earn a 4% cash match when you open and fund a new Tasty Trade account today.
I told you should have done that SPX trade. Oh, we're back. I'm so sorry.
That's what I just did to you. I was like, come
38.
on, what the hell? You stink.
Yeah, I don't think it was a short premium play in SPX, although right now you just got a little bit of a 8 or 9 handle move, which seems monumental.
I
but
could have patted you on the back to
You
start.
could have. But don't worry. We have Johnny trades. You'll have a lot more to pat me on the back when we do this right now. So let's do it. Do we play any more music? Do we do that for?
I don't know.
We just did. It's
we didn't hear it. I'm sorry. I didn't hear it in studio.
Yeah, we're talking, chatting too much.
I apologize. I definitely apologize.
You're good. You're doing a great job.
Thank you.
Love is never having to say you're sorry, Beth. But I am sorry that I didn't hear that.
All right, I think
I got some names for you, and then we can go to what you want. Okay. You ready?
Yeah.
I'm going to go with smaller price stocks, just to give you a little something. I'm going to go with a little bit larger price stocks.
Okay.
Bank of America, XLF, EEM, which has horrible markets.
Yeah.
Nike.
Okay.
Bank of America, XLF, EEM, Nike.
XLF, Ivy rank at 2.
Yeah, no, they all have low implied volatility. That's why I didn't want to do anything in SPX. But I'll give you the other side. Roblox, RBLX.
Interesting. Okay.
Marvell.
Ooh, that's one that's...
Uber, PDD, and maybe some of the Chinese stocks, which we haven't traded. I know, they have horrible markets too. We've looked at them the last time for Johnny Trades. I just looked at them now. They're not the best markets.
I think I want to go to Amazon.
You want to go to Amazon? Okay.
I think
you're like my wife then. She goes to Amazon all the time too.
That's true.
Amazon.
Got earnings early
February
7th.
5th.
Or
5th, it's okay.
You're right.
Uh-huh.
What about doing like a diagonal spread here? Kind of play it into earnings. You do a March. I'm thinking of March.
Feb March.
Yeah, selling Feb, buying March.
Feb has a 42 vol, 5 vol handle higher than March, so that certainly fits the criteria. Actually,
Going into earnings, so
make
you
it
have
Nirvana,
that.
right?
Yeah. It'll be
You have higher implied volatility.
You'll have another like 2-3 weeks after earnings, so it's not going to be kind of that instant pain, instant gain. But if you do get that upside move, you're going to benefit from that most certainly.
Okay, so you're going to play this, I'm assuming, a little bit to the
I'm
long
thinking
side.
245, 255. $10 wide. I like to go to the 40-ish delta for the long option in March. You sell the 20-ish delta for the short option in February. It nets you out, somewhere between 10 and 20 deltas, depending on the deltas that you choose here. I have 16 on this one. Trades at $5. A cheapie with a couple $100 of upside if you do get a move higher in Amazon.
I like it.
Kind of like it, don't you?
I kind of do.
All right, so we're at 520.
Awesome.
We're going to do that. What do you think about Intel for earnings?
What do I think about Intel for earnings? Well, I have an existing position in Intel that needs it a little bit lower. So I'm going to be a little bit biased here. I would like to be selling a call skew like Kai did, probably a little bit richer than that. I like to get a couple of bucks in. That's why I did it for my option trades today. I should have waited until today to do it, but I had with Intel at 50, it's 50, almost 54, 53.60 right now. With Intel at 50, I figured that 55 was a number it wasn't going to see in the week after.
Then we got to 55, and then you say, you know what, 60's got to be the number. That's got to be the ceiling.
It's going to be just a little bit over my my break even, so yeah, it's going to be bad.
What do you think about doing the February 55-60 ratio spread?
February?
You got a little bit extra duration here. I was actually thinking...
So you're going to sell the Feb 60 call?
Twice, and you buy the 55 once. Call ratio.
I love it because I have the 50-55 on. So if I have the 50-55 on, I got to love the 55-60.
Here's how I'm gonna add to it. You could, because you're naked and extra call on the upside.
Correct.
You have naked risk on the upside.
That is correct.
You could sell the 47 strike put, about a 20-ish delta, gives you a little bit more premium. Now, obviously, it adds risk to the downside.
Sure.
This is the problem here. I can actually pull it up just to show the risk profile on my platform here. Just give me 1 second.
Okay.
So, and you'll see it used about $700 in buying power. If I remove this put, which is what we were looking at before, just the call ratio. This is your risk profile on a call ratio spread. Uses that same $600-700 in buying power. So adding the put, because you're already naked this call, doesn't use any additional buying power. You do bring in some premium. I think
it makes you long a call spread, and so let's talk about synthetics here. So if you're long, put up on the screen just long the one call and short the two calls, and get rid of the put for a quick second.
Okay.
So that's your ratio spread that you have up on the screen there right now. Classic, looks like a butterfly, but has that risk 1-to-1 after your break even, because you're naked short another option. You long one call spread and short an extra call, which gives you short that risk to the upside, given that big red line. When you add the short put to it, so synthetically speaking, you got to look at it and break it up. I would look at it if I didn't have what you're putting on here, the Analyze tab, which is a great one, which I should use on my option trades today, but I always forget. Maybe I'll remember today because we're talking about it.
Not as good with the tech. It's okay.
I'm not as good as it, but I can fumble around as you are right now. I'll be fine.
Come on.
You notice you have risk on both sides because now you're synthetically short a strangle.
Yep.
That extra call, that out of the money call that you had, and now the put, you're synthetically short a strangle, and you still have that long call spread. That's why you've got that big bump up that makes it look like a butterfly, that big tent there. You're taking a little bit more premium, as you said, so that green line extends itself out nicely to the downside. It makes sense. It's exactly what I did, but in a defensive way with my 50-55 that I have on.
Yeah. It's certainly a short vol trade, because if you get an inside move here, that's...
You mean the S&P's up 25.
Oh, God, you could have been a hero.
What happens when you go to bed at midnight? You just don't...
I know, you're a little slow.
I'm slow. I'm slow. It really does affect your trading.
So I want to go back to the analysis mode
and your
real quick, just so we could show this. So if you flip over to the Theo zone, so we were looking at, this is at expiration. So this is binary. This is if we fast forward to expiration, this is what your risk profile looks like. You have a couple $100 if we stay basically flat, whatever that credit is, you have this extra 10. So you can flip over to the Theo, and this gives you your risk profile that you can kind of change around a little bit via the analysis mode. So you could move time, so you do have earnings after the close today, so you could go a couple days out in time. You could also contract a little bit of volatility here. And what you'll see is with this risk profile, your best case scenario is that inside vol contraction, inside move, a little bit of a vol contraction. We're only taking a couple points out of here. You got 75% implied volatility in February. This is probably going to come in more than that if you get like a nothing move. But that's kind of your one-day expectation. If you get kind of a nothing move, maybe a slight up move, you could see your P&L kind of skews to the upside because you are net long delta.
Yeah, sure.
That vol on the upside will probably come in more. You can make $100 to $200 on this trade if you do get that kind of no movement vol crush on earnings, which I hope happens because the stock has gone straight parabolic, and I think everybody's YOLOing calls here.
Yep.
I get a little bit of a nothing move there. So I'm gonna try and get filled on this like 230-ish. Want to try?
Okay.
What do you think?
Yeah, give it a shot.
It's a little bit above the mid price.
Why not?
Would you rather be in this position or the one that you currently have on?
Rather be in your position.
Really? Okay.
Yeah.
220. Yeah. That's what we were marked at kind of before that. All right, so that's a sort of neutral. We got a sort of bullish. You want to find something with a little bit of short delta?
Sure.
What are you thinking? Anything pop up to you?
Take a look.
I've already learned my lesson in MU. We did a butterfly there that had about
PDD, Uber, Marvell. That's what I put on there.
Oh yeah, okay.
On my little quick list.
Low.
I know they all have low implied volatility. What's this last trade that you? Oh, you did it in the. You got to push it. You got to push it. I'll put it.
Yeah,
you got to right click on it.
I got you.
And I'll get it through for you.
What about AMD? Just doing a call spread in AMD. Sure. So AMD, it does have earnings coming up. Would you go February or March?
Let's take a look at AMD. AMD Ivy rank of 32. It has earnings February 3rd. Well, I got to go. What type of position do you want to put on?
I was thinking to do a little bit of short delta.
A little bit of short delta in AMD with earnings coming in February.
We could do both sides. You want to do both sides here with a meteor call spread?
You could. You could also do one of your diagonal spreads too, one of your Feb-March spreads. I mean, you've got February with 2 vol point differential over March. Not horrible.
So that same setup will, like, just looking at the 40-20, it's going to cost about $1,100. It's kind of a rich one. What do you think about doing like the 75-85? I'm looking at February, the monthly. Do you think you go into the weekly, or do you?
You could. You certainly could. You're going to be more subject to obviously shorter term stock movement. That's why I asked you bullish, bearish, and neutral. How are you? Like, I'm a little bit bearish. Like,
well, I want to find something that's bearish because we got some long delta via Amazon. We got some kind of neutral in Intel. I'm trying to find something that's like, I said Micron already ripped my face off, so I avoided that one.
Sure. What about these? What about the chip stocks, like the
AMD? It's in the chip stocks.
Yeah,
I have SMH.
Yeah.
No.
Well, I mean, listen. You can go no further than just go right to SPY. I know it has an IV rank of 2, but you can do a diagonal spread in there. You look at Feb March. You got about a 1.5% vol differential in March, but you can try that.
All right, so we'll do. I think that's actually, I did that yesterday into the close in our account.
Yep.
But I think this is a cheap way to get a little bit of a downside hedge. You're short a little bit of volatility because you're short that.
Yeah, volatility, by the way, only down 6 at 1835.
Okay, we're going to do the same sort of setup. 40 delta for the long option in March, which puts you at like 680. And then we're going to sell the 665 in February. It's about a 20-ish delta. Net you about 18 short SPY deltas, which is going to basically neutralize this whole portfolio. We're going to have long delta in Amazon, kind of neutral in Intel, and then short delta in SPY, which will give us, straight up SPY beta weighted deltas here. It's gonna flatten us out pretty nicely here. So I kind of like that. I'm gonna see, especially with an IV rank of 2, the call spread is going to be a cheapie. Okay. I'm in at 761. So you got a 15-point wide spread. I would probably target just overall to talk about the trade. So we did that diagonal spread in Amazon for $5.20 debit. I would love to get, after earnings, you get a $5 or $6 up move in Amazon, which, what is the expected move right now?
Amazon expected move for today is $3.
So $16 through the February 6th expiration. So inside up move, obviously, if it explodes to the upside, that'd be great.
I can't believe I didn't sell this opening. I'm so mad at myself right now.
I know you.
Now I'm going to spiral.
I know
because I missed it.
Yeah, don't sell them in the hole. Don't sell them in the hole. Vol is on your side though. Vol is picked up. It looks like you can get that little reversal.
Yeah. Bitcoin selling off also. What's gold? Gold hanging in there, up $2 and change. Silver up $1.30. Your net gas is up 15 cents, climbing a little bit there. God, I stink.
You stink. So Amazon, I would target, $200 would be a home run. We'll see what happens into earnings. Obviously, if you get that explosion to the upside, it's going to be much bigger than that. Intel, I think after earnings, if this is like a 75 cent to $1 winner, that would be a mega home run.
Sure.
I think you probably are looking at like a 50, 60 cent winner, which you could probably manage that if you get an inside move. The SPY position, you obviously need the market to go down a little bit, but, $100-ish on that sort of position would be a home run, I think. 100, 150. What are you laughing at? You want to share with the class?
No, Frankie just wrote in about getting up early and stuff like that, and he was telling a story. I don't know if he told it in the chat room, that I was always one of the first people in the pit, and he would be there 2 in the mornings doing a crossword puzzle, and I tell him to get up off his ass all the time. And I always did. So it just brought back a good memory. So
it's the same here. You're the first one in.
When I'm here, as you have outlined.
Very good.
All right, my friend. You ready to take a quick 90-second break?
Sure.
All right, I'm going to get my composure back for missing this 30 handles on the E-mini S&Ps.
It's really bothering you. I feel.
I had the deltas to sell, is why it bothers me.
I know, and you got hands. You just, sometimes.
Oh, this is torture.
It's like I gotta freaking do everything here. You got hands, use them. I mean, what the hell?
This is torture. I'm going to take a quick 90-second break and come back. I got more Tasty Live after this. Well, we, like the soup he makes, we will be right back. We'll be back in 90 seconds. Live.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
Twitter versus Facebook. A rap battle. First up, Facebook.
Twitter, I'll snuff you out like I did to MySpace. I'ma have to erase your little Twitter face. Warm it up, Facebook, I'm about to. Did they make an Oscar-nominated movie about you? Check my school out, I'm at the top of my class. My main interest is listed as kicking your ass. I help dictators get thrown over. You help the cast of Jersey Shore get overexposure, I'm too Titanic for you Twitter and twist. You bird-ass tweets, stick to the branches. I'm root deep, universal expansive. Twitter better get lost before you get poked. What?
Yeah, this is Twitter. Check it. At Facebook, can I attack you? Yes, and I could do it in 140 characters or less. Brevity's the soul of wit. I'll make this quick. Hash mark. Facebook is a dick. Retweet. Yeah, I'm backing that ass, and I'm young and I'm brash, and I'm packing that cash. Stick with the kid, I'm an early adapter. Your old Facebook played out like Napster. I make it real easy for family to talk. I make ex-girlfriends real easy to stalk. I show you life in real time that's completely amazing. I show you which celebrities are totally crazy. From Blitzer to Sheen to Kanye to Rom. I run with stars, Facebook is a place for your mom. What's the matter, Zuckerberg? Don't like how that sounds? I got a million customizable backgrounds. It's so totally boring. My card's on the table, hash mark. Facebook is disabled.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
Today's episode of Market Measures is brought to you by SIBO. SIBO is partnering with Tasty Live to provide educational opportunities for traders at all levels. Did you know index options like these can provide opportunities for diversification, lower volatility, liquidity, and other benefits? To continue your education on some of the mechanics learned in today's Market Measures, check out SIBO's Retail Trader Suite at www.sibo.com/minis.
Got big trade ideas? Get the big deal at Tasty Trade. Make moves with confidence using smart tools and dynamic charts. And trade what you want, how you want. Earn a 4% cash match when you open and fund a new Tasty Trade account today.
Nicky, we are back, son, and you know what that means. Time for a little bit more Tasty Live with the Market Measure sponsored by the SIBO. But before we do, let's take a quick look at the market. Even the S&P's up $18. Volatility basically...
Could have been a hero. You could have been a hero.
You gonna let this go?
No.
NASDAQ up 76 or so. Russell up 12. Volatility now green with the market higher. Bonds down 6. Bitcoin down 1,000. Oil down 80. Gold basically unchanged. Silver up $1.18. off of its highs by about 50 cents, off its lows by about almost $3. Nat gas still holding its bids. Let's take a look at what's moving the market. You can just click on net change here and put it from high to low or low to high. I'm going to look at some of the buckers since we're still higher. That's your SanDisk, which is down.
Somebody who is a hero.
Let me get you on screen.
Hey, there I see the young child running across the street. I get out in front of the truck. I stop the truck like Superman.
Yes. You.
That's what I did to SanDisk. Okay, I said you shall not pass. That's what I did. I did that to it.
You dig your heels in. He pushed you back a little bit, but you were able to persevere.
The truck just like kind of compacts around my broad shoulders.
SanDisk was down $20, but you just covered it down.
That ratio at $3 yesterday, and
you closed it at 25 cents. That's a big win.
I actually looked to buy in the risk on the upside because I was like, okay, I'm gonna bang this one out. I'm gonna catch it on the first down move it's ever had, and then I'm gonna ride it to Valhalla on the upside, buy that risk on the upside. But the calls are trading at $6, $7, $8, and they're $3 wide. You can't do anything there. So take the money and run.
To Valhalla. I like that.
You like that?
Sure. You kidding me? Yeah. Of course. Let's see some of the other movers there to the downside. App Lovin down 11, MU down 7, Costco down 5, BE down 5, Coin down $1 and change. Some of the oil-related stocks like XOM down 2, Netflix down $1.18, which, by the way, some of my people did hear me yesterday. Loved Rip, the movie on Netflix.
It was good.
That's all you give it. It was good. I thought it was, first of all, it's inspired by true events. And
I don't know if that's loosely, I'm sure.
Oh my God, you young kids can't take anything for face value. The twists and turns were amazing. You didn't see it coming.
Yeah.
Did you see it coming?
No.
Oh, you're unbelievable. You're going to go through life angry like this your whole life?
What? I'm a happy guy.
Meta up 19, Baba up 11, Lilly up 9, UNH up 5, ARM up 6, Oracle up 4, and let's see what Intel is doing. It's been down small all day for earnings, down 90 cents. It's been a small, tight range, down from around $1 to down around 50 cents.
Mm-hmm.
That's all I got.
Yeah.
Yes. What do you got for me?
Those meta puts haven't come in as much as I was hoping. On an $18 up move.
Don't take it
personally.
Don't take it personally.
It's okay. And the math models are what they are. My opinion doesn't matter.
No,
price is price, right?
No, yes, absolutely.
Okay.
Let's do it.
All right.
You ready?
This like QS position too. There's some goofy stuff moving.
Let's go.
All right. Volatility, strike distance, and break even. What the data shows is kind of sponsored by the CBOE. Not kind of, it is. But this is kind of a parlay on what we talked about yesterday with volatility and changes in volatility, how that affects the strike selection, where your deltas are, volatility spikes, you can go further out of the money. So let's do it.
Let's take a look.
All right. So strike distance is the distance between the strike price and the underlying price. We talked about how we use delta as really the way to kind of to gauge where we're going to enter positions. We don't really do it on a $10 out of the money on either side or $15 out of the money. We usually look at delta. But when you're talking about like just the distance, and we talk about skew, we look at the actual dollar distance, not the delta distance. Break-even ratio, on the other hand, aids in calculating the price movement for your option position to break even. So if you're selling a call at the 100 strike and you sell it for $5, your break-even point is 105. You can still profit if the stock goes in the money. That's just because of the premium that you're collecting. So when we talk about break-even points, it's the premium relative to that strike price, relative to where the stock is trading. So the question that we're going to kind of talk about here is, does the change in implied volatility affect the strike distance and break-even ratio for both calls and puts on options. So what we're talking about here is when volatility expands, not only we know that the strike is going to be further out of the money, but is our break-even relative going to be further out of the money? So it's kind of a discussion on volatility changing not only the distance away from where the stock is, but also the amount of premium relative. So your strikes might go, 2x out of the money, but the premium might go 3x more than what you're getting when you're selling lower implied volatility.
Sure.
So it's a discussion on not only where your risk is, but also how much you're getting paid for that risk as it multiplies with volatility.
What's the study all about? That's the next slide.
So this is just a quick breakdown on how we're talking about strike distance. So strike distance, and the study is going to use this formula of the stock price less where the call strike is. So if you're selling the 100 strike call and the stock's at 90, it's a 10-point difference. And then you're going to talk about the same thing on the put side. So if you're selling the 80 strike put against the stock at 90, it's a $10 distance. We're going to talk about the break-even ratio, which is your premium change from the lower IV versus higher IV.
Mm-hmm.
So the study that we're going to use on the next slide here is we're going to do 16 delta strangles. We're going to compare 2020 through 2025. We're looking at 45 days. We're going to manage them at 21 days. We're going to look at the buying power, the strike distance, so relatively how far away from the stock or ETF really that you're at, and then the break-even ratio here, like how much further is your break-even relative to the VIX level, so the change in volatility of the market as a whole. So on this next slide here, you get kind of your data, right? It's a table.
Go ahead. Let's see what they got here.
There's a lot here.
So they're breaking up volatility, right? That's really what they're looking at.
Yeah. So the table is looking at how the strike behaves relative to implied volatility. So what you're looking at here is essentially when volatility is low, so we're talking about a VIX of under 15, your 16 delta is $13, $14, $15 out of the money. When the VIX gets to 25, it's going to be $25 out of the money. So there's a multiple there. It's a how much does volatility affect where your strikes are? It gets much wider.
Yeah.
When volatility expands, your options are further out of the money. Now, how much more are you getting paid for that even further out of the money strangle is kind of the next step of this discussion. So
that's the big question.
Yes. So to get on to this next slide here. So rising IV widens strike distance for both puts and calls to maintain that 20 to 25 delta. Strikes move from $15 out of the money in low IV to $26 in high IV. So when volatility increases, it's about a 70 to 80% increase in the distance away from the stock price that you are. So wider distances benefit sellers, obviously, because you have more cushion for the stock to move. So, you're talking about a 70% more range for you relative to low implied volatility. Your strike prices stay fixed once set, but the distance needed for the target deltas changes with volatility. What we're saying is when volatility increases, you need even more price movement to be tested on that strike.
Of course.
To the next one here.
To the next one.
This table illustrates how the increase in IV can impact the price movement required for your option position to be at a break even. So when we look at these positions and one of the reasons why we sell higher implied volatility is you're going to be further out of the money. Your break evens and the amount of movement needed is also going to be further out of the money. It's kind of counterintuitive. When volatility is low, the lesser movement is going to be there. It takes less movement to feel the same amount of pain. When volatility is high, you need a multiple especially on the put side to see that amount of pain. And what that means is you've already had the down move. You've already seen the pain. on higher volatility, you need a multiple of that to feel that same level of pain. So on the upside, when SPY is at 700 and we're at all-time highs and the VIX is 15, that 10% down move is going to be super painful. When you get that 10% down move and volatility expands, you now need a 20 or 30% down move. I'm just throwing out numbers here.
Yeah, sure.
I'm exaggerating it. To now feel that same amount of pain after the fact. It's almost like, the volatility, you need even more of that volatility to be realized to feel that same level of pain on the downside. And that's what it's telling you here. When the VIX is over 25, you need 9 times the movement that you saw from the 15 level, or 8 times, to realize that same level of loss on that new position. Moving forward.
Listen, this is just another way of looking at and saying, you're controlling entry here with your strategy that you're looking at, and how volatility is going to help when you're wrong. Obviously, it's going to help you when you're right if you're selling premium, but how it could mitigate some of the losses or some of the magnitude of the moves so that you can make a decision with an intelligent bias to it as opposed to just sitting with delta.
But this is hard to do.
Very hard to do. Almost
in the moment the world is ending, you're about to forcefully take over Greenland, like the Vikings of old, and vol's super high, and it's scary. And nobody wants. When it's time to buy, nobody wants to. Everybody wants to buy now when we're back at 7,000.
But you can be less right and less wrong. Like you can. What's that?
That's the exact thing. It's like you don't have to. You're not static delta.
That's correct.
That's the whole point. Is like you're bullish, but you're not taking all your cash and margining it out, at the money. And if the market goes down the next day, you're dead.
That's correct.
That's not how it is. You're selling puts that are juiced, that are out of the money, that have time decay, where you need now a multiple of that move to realize the same level of loss.
Perfect. You are correct. Controlling entry.
Yeah, but it's hard. But if you do sell those puts, you scoopy them the next day because of a taco.
Yes.
You sell those puts, and then
but you can also look at it as when you get those moments, you don't ramp up and reverse your position. We always talk about reducing delta by 50%.
Sure.
Okay, so you had your long delta, you get that big move down, everybody is panicking, and you reduce your delta by 50%. You get a move like the last 2 days, and you're back to 0 delta, maybe a slightly short delta. At least then you could make an intelligent, what do you want to do now? Okay, I'm going to regain my delta again, or I'm not going to regain my delta, I'm going to stay neutral, that kind of thing. So if you're reducing delta by 50%, you're being proactive, and that's what we normally say to do.
For sure. I'm being corrected that the Vikings didn't take Greenland by force. They found it.
They just landed there.
Landed there.
A lot of boats landed there.
Yeah. So, I'm just going off of like all the TV shows, that I've seen.
I understand. And because
it's a great TV show, Vikings.
Yes. With, there's 2 of them.
Yeah.
But the first one. Yes, I agree with you. 100%.
Yeah.
It's a long series. Yeah. With Loki.
So.
Yeah.
I'm sorry for my non-historically accurate analogy.
Oh, who cares? Nobody cares about being historically accurate.
I mean, everything's made up now. We can just make up news. Like fake news, everything. All right.
Everything.
Couple takeaways here.
Sure, let's get to
rails. We've gone off the rails. So rising IV fundamentally changes. Let's go back to the last slide. I kind of skipped over this one. So IV impacts calls and put break-even ratios differently. Call ratios decrease as IV rises. What this is telling you is that volatility, the increase in volatility doesn't really change the risk profile on the upside after the fact. Basically what it tells you is volatility expands on the downside. You start to see a lot more skew come into the puts, and the puts increase a magnitude more than calls increase. Calls will increase because volatility expands. It's across the board.
Sure.
But that same ratio doesn't apply. It's not like, both sides, vol doubles and you would think if it was a normal distribution, both sides would double in premium. It's actually much more on the downside because you have that embedded put skew that typically comes into markets when volatility expands. And you're also dealing with lower stock prices, which is something that people don't think about as much. You know, calls and puts will trade off the stock price as well. $1,000 stock price means meatier options than $100 stock price. So when you have these big down moves, those calls also get influenced by the change in the stock price. Stock price goes down. The biggest takeaway here, higher IV means bigger premiums on both sides, but the math works a little bit differently. You typically see even bigger premiums and a bigger change in the premiums on the put side.
Beautiful.
Now the takeaways. Rising IV fundamentally changes your positioning. Strike distances widen by about 76%. That's going from about $15 to $26 wide. So, you know, a big move in where your risk is relative to the stock. Break-evens dynamically shift and they're different on both sides. So call ratios remain relatively stable, meaning that changes in vol don't really change the relative distance of where your calls are. I almost said is, where your calls are. It's going to change a lot on the put side. That skew typically comes in a lot more on the put side relative to the call side. So the bottom line, high IV offers more premium and a wider strike placement, but demands understanding of how this changes. So you want to understand that when volatility expands, the puts are going to be 2 or 3x what the calls are going to be in terms of like the value change. You're going to see a lot more in the puts. So if you're in short premium, your puts are going to explode, are going to be big, much bigger. But if you have that capital available, which we always talk about when volatility is low, those puts, you're getting paid a multiple, and they're a multiple further out of the money.
And a lot of times, you're looking at individual stocks, the puts trade a lot cheaper because of that call skew. In those times when you get volatility expand like that, those puts are expanding too. So you get something that you don't normally are able to take advantage. Sometimes when I listen to you speak, I'm so proud of me. I'm going to take a quick 90-second break.
Let me just highlight this real quick, but sure. I appreciate that as well.
Go ahead.
So yesterday we did, into the down move. We sold those puts at 821. We sold the 650 strike puts. Today we're back to where we were right before
the move.
Lower. Basically the same thing. Mm-hmm. So we sold them into the down move at $8 and change. They're now marked at $5. This is kind of a reflection of exactly. It's about 70% more, right? I mean,
right. Yeah.
In terms of difference.
Yeah, $3 on a $5 strike. Yeah, sure.
It's 60, 70%. So that's the difference. So now you have a VIX at 15. Your VIX was at 20. We just watched that happen. You don't expect it to go back up in 2 days. But
like you said, prices are a lot bigger now.
Yeah.
Things are different. It's not the market that I grew up in. It's a completely different market now, just by the price itself. Volatility is the same, but the price is so much bigger. So that stick, if it's small, it moves very little out here. If it's large, it moves a lot bigger. So really, it's the same thing. You just have to have the mindset that your parameters have to be a little bit wider.
Yeah.
We'll take a quick 90-second break. Even the S&P's up 27. We'll be back in 90 seconds. Tasty Live. We've got Bill on the trade desk and Glenn coming in from FX. We'll be back in 90 seconds. Tasty Live.
Got big goals for 2026? Get the big deal. Earn a 4% cash match on all qualifying deposits, up to $10,000 total. Plus, unlock 30 days of commission-free trading. Trade with confidence using active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. Earn a 4% cash match when you open and fund a new Tasty Trade account today.
Got the need for speed? No problem! At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade, make your move.
Got trader's block? We've got the cure. Get data-driven trade ideas with cherry picks.
our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
If your trade's not going how you expected, it's not necessarily that your assumption is wrong. Maybe it's just not right. Yet. Rolling is managing a trade by closing your position and opening another one like it for a credit all in one order. The cool part is that you can change the expiration to get more time, or you can tweak the strike for a higher probability. Usually we want to roll the expiration instead of the strike. Remember, duration over direction. Exactly when and how to roll trades is a learned art, and it can be a little bit subjective. Usually we only roll if we haven't changed our assumption, and we almost never roll winning trades. If you have changed your mind, don't roll. Instead, you probably want to close it if it has undefined risk, or just let the probabilities play out if it has defined risk. So before you cut your losses, consider rolling the expiration or maybe even the strike. Pretty simple.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
Earn a 4% cash match when you open and fund a new Tasty Trade account today.
Nicky, we are back, my son. That's right. How are you doing over there?
Great.
Good. You feeling good?
Good.
Looking good, Mortimer. But you know what? Enough out of you.
Thank you.
We've got this old timer. Were you ever a William, Bill?
Only when my mom was mad at me. Yeah, she'd say, William, come here.
I don't know if that. I don't know if I was ever a
Nicholas?
Nicholas, yeah.
When I was mad at you. I do it to Vincent, too, when I'm mad at him.
Oh.
Yeah.
On Vinny, and Vincent when I'm
Yeah.
annoyed.
Vinny used to fold
Nicky. Nicholas when I was annoyed at you. Yeah.
But before we get started,
do I get mad at Vinny?
Yeah, I feel like
sure.
Pretty short-lived.
I know you like to think it's, jaded that I only do.
the youngest kid always gets away with everything.
Yeah, I'll give you much, and I'm older. I mean,
We're
so
similar
more
age.
water
We're
on it.
similar age, Tony, and I have a son, same age as Nikki.
Yeah.
Which brings me to a point.
There's a point there?
When we were traders on the floor, the thing is we got off at 3 o'clock every day, right?
Yes.
Work from, early morning till 3 o'clock, which was, so I was on the floor for 25 years.
Mm-hmm.
So allowed me to get home by 3 o'clock. So I was able to spend a lot of time with my kids.
Yeah.
Oh,
it
was wait. I remember correctly. My dad worked until 7.
There were a few benders there, here and there, though.
Wait, are you telling me they were at
3 o'clock?
At 3?
He didn't coach you. Yeah, he's coaching.
Kidding.
But here's what's going on now, Nikki. He's coaching you now, and he's actually doing a good job. Mm-hmm. I've been watching your trades. He's turned into quite the trader.
I say that sarcastically because my dad was always the coach for all my sports. I mean, it was a little bit more enjoyable back then because I was always like the best, which was good, So
Well, you're the coach's son. The coach's son is always the best. I know. But you know what, Tony, to be fair, and maybe I've told you this before, to be fair, you've done a nice job with him.
Thank you.
I appreciate
that.
He's filling in some
Thank you.
pretty big
I
shoes.
do appreciate
And
it.
I watch your trades, and one of the things I talk to all the new customers. So I send emails out to new customers. New customers can do demos with me on the trading platform. And the one thing I always point out, and I think people overlook it, is the Tasty Live little icon.
Sure. Thank you.
Because then you can review the trades, you can see what you guys are talking about, and it gives a lot of clients ideas.
It does. It does.
But anyhow,
It gets a little dicey when I was telling Marty about the crab trade.
Well,
We've, like,
complex.
made up-
That's a complex.
I know,
trade
but
for
we've
somebody
we've like made up all these goofy trades. I can't
Sure,
imagine
the
getting
names,
a phone
yes,
call and being like, "I got this crab trade on," and then Bill's like, "What? Crab trade? What?
Well,
what
we're
is this?"
future traders.
Like,
we're not
yeah,
quite as
There's
sophisticated.
antibiotics for that.
Right.
There's a reason why we're futures traders.
Yes.
That's like the VIX. You guys talk about the VIX being up, and I watch it. Yesterday was 20 when it dropped down this morning 15. I'm like, okay, it's a fade on the SPOOs. But we used to widen up. What we used the VIX for was we would make as locals, we'd make the markets wider.
Sure.
That's what
Those days are over.
Yeah.
Yeah, those days were
I know.
But I got to get back to this. I was home at 4 o'clock just about every day.
I know. I give you.
Now I may have played. I
was trying to make you into like this hot, showman.
No, I might have left at 5 o'clock in the morning to go play basketball. I might not have been on the basketball court every morning, but I was home at 4 o'clock in the afternoon. That's for sure. That's for sure.
Yeah.
He was.
Coached you in football, baseball.
When you come
There you
home
go.
before the football, we'd have a nice caprese salad.
We would. That's right.
We ate a lot of
See,
caprese
those are good
salad.
times.
Those are things you don't remember.
And
That's
it's like
repressed in the back.
So what I'm suggesting, enjoy this because when it's gone, and then you're like, well, that was pretty good at the time. You look back on.
You know something I don't know?
No.
Phil, what do you got? Give us
All
your
right.
list, my friend. Give
All
us
right.
your list. Thank
Very
you for
good.
the kind
Thanks
words.
for
Thank you for the
all
kind
right.
words.
First of all, thank you, Scott Sheridan. And number 20, this is for Tom. Number 20, TQQQ at 14. 19 is BABA at 27. 18 is RKLB at 11. 17 is AVGO at 26. 16 is Google at 31. 15 is Palantir at 25. 14 is Apple at 21. 13 is Google L at 30. Number 12 is Microsoft at 38. Number 11 is Amazon, 36. Number 10 is GLD. Number 9 is SNDK. Coming in at number 8 is Netflix. I think it was number 1 yesterday at 14. Number 7 is AMD. Number 6 is TSLA. Number 5 is Intel at 51. NVIDIA at number 4 at 13. MU at number 3 at 39. Number 2 is SLV. And number 1 is Meta at 24.
Beautiful. What'd you just do over there,
Put on
son?
February Strangle and Apple. I did it's basically the 20-ish delta on either side, 235, 265. We do have a poor
Into
man's cover.
earnings. You are a stud.
We've got some long delta there, but I figure you get a little bit of short premium on. Maybe it kind of chops / drifts higher. We have the poor man's covered call.
Apple up $2.
Oh.
Yeah. So you're taking a little bit of advantage of that existing position.
I remember buying Apple at $8 a share.
Did you keep it?
No, are you kidding me? It went to 801. I was out.
That's the hardest thing. I mean,
Isn't
like,
it?
when you look back and everybody's like, "Oh, it's 1,000x," on the SanDisk from 40 to 500. It's a 10x in a year. But the best you can do is close some on the way up, and nobody's holding for a 10x. It's easier said than done. You have to be in a cryogenically frozen and away from your platform to look at something go up 5x.
Well, you could dollar average cost those shares in your IRA, and you can open up IRAs here at Tasty Trade.
Yes.
So you could trade, you could trade all the strategies and hold long-term stocks like that. That's the other thing. We can, everybody thinks we're an option firm. Just an options, but you could trade stocks, you could trade futures, you could trade future options, you could trade crypto. It's all in one account. So there you go.
Good job out of you, my
All
friend.
right. Thank you, players. We'll see ya.
Who is our next guest? Tasty Trade World Headquarters, your friend of mine. E-Money, what's up?
How you doing? Nick's on fire today. Man,
He is on fire today. He's taking
rolling.
advantage of me because I'm slow today. But even the S&P's up 32.
Very
Now you can do
funny.
whatever you want. See?
Funny guy.
Thank you, Glenn.
Yeah.
Appreciate you, brother.
Yeah, he is on fire today. He is definitely taking the lead today.
That's all right.
Yeah.
You deserve a day in the.
No, I was up till midnight at a hockey game, basically.
That sounds tough.
I know. Oh, yeah.
They pull through.
We tied 2-2 and lost in overtime. Lost in a shootout. We get 1 point. All
right.
We're going to be
This
in the
is
playoffs.
club-
We're going to be in
Club
fourth.
or school?
School. Yeah.
We'll do club at this level.
What's that?
Yeah, I know different sports. Is
Yeah. We'll be
primarily-
we're going to go into playoffs as the 5th team out of 14 in our league. So 5 will play 6. I think the top 6 teams make it. So we're not going to move into 4th. We can't catch them. So it didn't really matter, but you want to beat these guys. They were the next town over. So
And it mattered for your sleep schedule.
and it mattered for my sleep
New
schedule.
Trier coming for you, right? Come playoffs. Watch out.
New Trier is ranked 1 or 2 with Lake Forest. I mean, they're interchangeable. Yeah, they got the highfalutin facilities, so they're like bionic over there.
Something in the water.
Something in the water
Up
for
in
sure.
Winnetka.
Something in the water for sure. Something in the water for sure. How are you, my friend?
I'm doing pretty well here.
What's going on in the FX world? I have a
Got
question.
a nice move yesterday in the Swiss franc.
Yeah, I mean things are swinging today, and it is interesting. We had a big back and forth week in just about every market, but what's most interesting now is the shakeout from all this European conflict and quick resolution is not actually dollar strength where it was. We're getting a weaker dollar across the board now.
Today. Yesterday it was strong. Into the like I don't know what announcement, whatever it was, whatever you consider it. It was stronger.
Into the resolution. When we
The framework.
when we claimed the Arctic.
Yes.
I remember where I was.
At your desk.
Right at my desk.
Yeah, right.
Yes.
When we claimed the Arctic Circle. Yeah, but when you're just looking at Eurodollar alone, where we ended the week last week, below 116 in the spot market, drifted higher through the U.S. stock holiday on Monday, and then the big rip to the upside in the euro on Tuesday. That sent us all the way up to 117.5, and even on the shakeout on the heels of this resolution, only got back down just below 117, and here we are right back below 117.5. So for range traders, this starts to get interesting. Looking at the Eurodollar market, we're sitting around 117.25, so perhaps 20, 30 pips more to those recent highs. So if you are trading a tighter range, then perhaps a contrarian stance there coming up. Throughout the U.S. session, in terms of momentum, British pound taking a lot more out of the dollar than the euro in the past 2 hours. We've got the pound dollar now above 134.5.
Yeah.
So those are interesting. Again, similar tape action, that getting to the top of its recent range. But if we're talking about the runaway market of the day, look no further than the Australian dollar, US dollar. That up above 68 cents for the first time since October of 2024. That's right. Major price extreme there.
I'm short that.
Yeah, no, that's not great.
I'm short that. I'm short the Aussie dollar against the Japanese yen, which is even worse.
Yeah, no, that one's probably ripping.
I'm short the two worst ones that you could be short.
Turns out things in Australia pretty good. Summertime there.
Is that what it turns out? It's all right over there?
Employment data coming in last night sent a big spike to the currency, as you know, we might have some further rate stability there. Employment in a good spot, around 4%, more jobs added. Combine that with the US dollar weakness, and we have a move of about 0.5% today, blasting through its recent range highs. That's pretty interesting to me. Other than that, you look at the US dollar, Canadian dollar, which is down for the 5th day in a row, and you might say,
I'm long that as well. So these are my pricing.
Care to explain? Care to explain how we got long these things? We hold you personally responsible, you know?
Well, it's unfortunate what you were looking for, because we had, I think, 2-3 weeks of straight up moves in that market, now coming back down. So in terms of a trending market, perhaps some more room to fall in that Canadian dollar market.
Are you guys contrarian? Are any of you contrarian?
Contrarian over the long term, you get a lot more mean reversion.
Is FX
However,
like very trendy?
It can be trendy. I know what you're saying.
Like a
you're
commodity.
Like, you're like it's at lows, and I'm gonna play this for it to go lower. Like that's kind of like. Yeah.
Push.
It is tough if you are looking to scalp a little bit. You do see some. This Australian dollar was trading in a pretty tight range for the first 2 weeks of the year, and even the end of last year. Now just starting to break away. But yeah, as you get kind of the shakeout from where we're at right now, where risk sentiment is guiding a lot of these moves.
Yeah.
Once you layer in, some fundamental backdrop, you can start to see a longer term reclassification of looking at the Australian dollar in particular. I mean, that was pinned last year at even more long-term extremes. I mean, if we're looking back to the early 2010s, we got above parity there, 1-to-1, the Australian dollar and the US dollar. So we haven't been in the low 60s for very long, dating back, this whole century. So it's all about, how far you zoom out in these things. But right now, staying flat and trying to catch some of these smaller moves appears to be at least the easier thing to do in terms of react to the headlines that aren't, not scripted, but scheduled. Perhaps we get closer to the regular scheduled programming, but right now still a lot in the air. Like that, your US dollar, Canadian dollar trade, I imagine you've been in that for months.
Since the early part of
You making fun of them right now?
Yeah.
No. They
make fun of my
It's
size.
important.
They make fun of my size.
Yeah, we don't
They're
make
like,
fun of your
this
direction,
guy-
just your size.
You got to put a little levity, in here. Otherwise, trading can be pretty boring and a little self-reflective when you're not doing well or something like that. So you got to add a little levity, make it fun. So sometimes you have to be the brunt of jokes.
Okay, thick skin.
That is the tough part with all these markets, having to be purely directional. Is you can be in that trade for, especially on these contracts that don't roll, you can be in them as long as you'd like. And so sticking to the philosophy, the psychology you had on trade entry and knowing when you're wrong, key to long-term success.
What's on the fringe? What do we got? We got a fringe one. I got the peso. That one's
cringe, not fringe.
Great either. But we've had some fun ones. We've had Swiss franc. We've had a couple of the other ones. What'd you have me in? South African rand.
Yep,
that was another good one. Are there any others that are kind
of... that was a good one for you because you got in and out pretty quickly.
Yeah,
you were able to.
That was fun.
So that
the other ones I just bag hold.
If you thought it was cheap when you got in at the beginning of the year,
is it cheaper now?
It's cheaper now. South African rand continuing to gain on the U.S. dollar. Looking at,
that was a 1 day move. I think I closed out a day. It's even cheaper today.
Yeah. Looking at the Scandinavian pairs, if you are, diving into some of these, the more nuanced storylines around Greenland, EU, the currencies that aren't part of the Euro area, they've been swinging a lot recently. Looking at we have a whole Scandinavian tab.
Yeah, I see that over here.
Yep. And so those, if you look at the Norwegian kroner, that one was down a full % this morning.
This against the euro. Would you look at it euro or USD?
There perhaps, a euro market could have some anecdotally higher correlation and perhaps lower volatility given their geographic proximity. So if you're trading ranges there, perhaps you don't get burned as much.
That's good.
Trading
I need
some
that.
of those
I've been
lower
getting
volatility.
burned on these things.
Yeah, so that euro Norwegian krona, that's nearing its lows of the latter half of last year. So if there is some reversion to the euro side, yeah, that's what we're looking at today.
All right.
You guys trading any nat gas this week?
We just got shorted today. We've planted our
Oh boy. With a put spread.
nice
Put spread.
long put spread.
Put spread. Defined risk.
Very
good. Basically
Take that, Widowmaker.
Yeah.
That's what you call it, right?
40 shot. No. Defined risk. Nothing intra-month. Very conservative on directional bias there.
And I mean, it's got to come down, right?
Famous last words.
No, I was actually looking at
4% today. Unbelievable.
I was looking at the options chain, and they're quoting like ridiculous. There's volume at ridiculous prices.
Yeah.
Why would it even?
That's the commodity story has been that.
Yeah.
You look at we had a question for Confirm and Send about silver options, out of the money options, out of the money calls being over a 50 delta.
Right.
That's been the story. It's been, I need upside. I don't care the price, and it's worked. I mean, you got silver up another 3% today. Like
4. Oh, silver, yes, 4.
Yeah,
3,
wicked.
silver, 4 for net gas, yeah.
Yeah, I mean, but that's been the commodity story. I mean, the only one that hasn't really seen that velocity is oil. Like oil has been kind of the most contained of the bunch.
Yes. And crypto, if you throw that in there, I don't know what that is.
I guess.
Currency,
Crypto.
commodity, or whatever it is these days.
Death. Death
Not moving.
Death by paper cuts. That's what
Yes.
Yes.
You've been trading IBIT well. It was okay there.
Yeah.
Yeah.
Not great. I mean, would like
Everything's
to see
relative.
higher. It's certainly not a risk-on asset anymore, or at least
No.
at the moment.
No.
I know it was just maybe last week where you saw crypto up, NASDAQ down. I was like, okay, there's the resilience as
Right.
the prophecy foretold.
Right.
And here we are again,
Yeah.
NASDAQ up, crypto down.
Our profits here are false idols. Got them, they've been. It got me.
Yeah.
It got me.
It happens. It's got me too. It happens. Even the S&P is back about 15
Do we get them
handles
now?
off of their highs. Volatility in by 30 cents.
That's spooky a little bit.
Different. It's a different market now than it was this morning.
Why do you say that? Vol's down the same amount. You just think because you've had the pullback and it's been scooped.
Right. You now have pressure on volatility, and you've got market not really selling off.
Yeah.
Only sold off by 15 to 20 handles if you go to the lows.
But that's kind of a market awareness thing. We get asked that
Yes.
question all the time.
Yes.
Of like, why'd you sell them here?
Sure.
Why are you not selling them?
Sure.
You just kind of.
So if volatility
backed into that.
upticks again back to 1820, then maybe you got a little bit of a, you can sell some futures.
Market higher, vol kind of
Yep.
staying where
Yep.
it is / going
Yep.
higher. Then you
Yep.
kind of. I agree with that.
Yep.
Okay.
Yep. Just not the time yet. You might have to give up 3 to 5 handles in SPOOs before you get.
If you get in here.
Yeah.
If you start here, we get a 5-10 point rally and vol kind of expands a little bit, then you would feel okay holding that.
Yep. All right, my friend. Good job out of you.
Thank
Yes.
you.
Len, thank you so much for coming in. Great job out of you, son. See, I had to give you a good one. My family member had to give a great one. That's how that works. We're going to take a quick 90-second break. We're going to come back. We got more Tasty Live with more Tasty Live. We'll be back in 90 seconds.
Ladies are not live. Live from the from the CBOE floor. Not live.
Still electric.
Still electric. Always electric.
Go to break.
Yes, please.
They're out.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
When the market moves, traders need to move faster. Tasty Trade Active Trader Tool offers full depth of market visibility, one-click order entry, and instant position management so traders can react in real time. While others charge for professional tools, Tasty Trade provides them for free. Opportunity can move fast. Seize it with Active Trader. Try it now on Tasty Trade.
I'm like the Tupac of economists, going out on top. And will I ever really be gone? Say bye to Ben Bernanke. Cry your eyes out past the hanky. Gone from the Fed, but still looks swanky. Bye-bye, Chairman Ben Bernanke. Ben Bernanke, hardly knew ya. Ben Bernanke, glad we're through ya. Sayonara, Mr. Yankee. Closing bell tolls for Ben Bernanke. Now, say hello to Janet Yellen. New blood, maybe start some selling? All around the world like a market Magellan. Hello, Janet Yellen. Janet Yellen, Professor Shady. Janet Yellen, new chair lady. Welcome in the new Miss Yellen. Different from the old, there's no telling. And I'm out, like Tupac, in a peaceful transition.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
This is Chicago. We invented the skyscraper, the Italian beef, and the standardized options market. SIBO is not only the birthplace of options, it's also where Liz and Jenny got their start. In an industry first, two female former floor traders broadcast live from the floor. Hear the sounds of live market action and feel the electricity as they present real-time trade ideas and research-backed market studies live from the SIBO's SPX pit. Watch Liz and Jenny live from the SIBO, only on tastylive.
Got big goals for 2026? Get the big deal. Earn a 4% cash match on all qualifying deposits, up to $10,000 total. Plus, unlock 30 days of commission-free trading. Trade with confidence using active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. Earn a 4% cash match when you open and fund a new Tasty Trade account today.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Earn a 4% cash match when you open and fund a new Tasty Trade account today.
One foot in front of the other, put your best one forward. You've got everything that you have ever wanted. It's already the best day. It's only the rest of your life.
I gotta keep it smooth. You gonna want it right. They gonna bring it down. I gotta feel good. You wanna see my moves? Let's party all night. We gonna build it up and then we tear it down. They gonna know our name all over this town. We gonna stir it up and do things our way. So if you wanna move, get out of our way. I'm feeling fly tonight, like a rocket ship. I wanna drive fast in this red hot whip. We gonna stand our ground and show off all our moves. Get out the glitter ball and play some dope blues. I wanna play the game, I wanna roll the dice. I got an easy hand that's gonna make the night. You wanna dance off? Let's get our shoes on. I'm done with all your fussing. This body totally bussin'.
Hello, everybody, and welcome to the Red Shirt Thursday edition of the Liz and Jenny Show. I'm Jenny Andrews. That beautiful blonde in red is Liz Deerking. How are you doing, Liz?
1 week from today, so there's a polar vortex hitting the entire United States of America. But 1 week from today, you and I are leaving on a jet plane where it's going to be 80 and sunny.
I know. We are going to Mexico. Cannot wait. This weather here in Chicago is too much, but can't wait to get out of here.
They've already, our high school already tapped out. They're like, we're e-learning tomorrow.
I know. I think everyone around here is e-learning tomorrow, even the colleges. And it's funny because my daughter has been looking at colleges around here, but this cold, I keep telling her, think long and hard, because could you imagine, walking to class in this freezing weather we've been having?
No, but you got to go pretty far south. So it's a double-edged sword because she doesn't like the heat.
She doesn't like the heat, but the cold, it's terrible if you're in class in this freezing weather and you're having to walk a mile to class.
I know exactly where she should go, where the weather is always perfect, and I want to be a weatherman there. Hawaii. It's the perfect weather all the time, all day, every day.
Hey, you know what? Your lips to God's ears. That's my favorite retirement spot in my mind, even though it's far from everyone. I love Hawaii.
Yeah,
I love Hawaii. So pretty soon, Liz, I'll be spending at least January and February there.
Well, hopefully you might be spending a lot more time there. If Lily, did she apply to the University of Hawaii?
Yeah, the amount of kids we know that went to visit Hawaii, every single one of them wanted to visit that school, and every single one of them came back and said, I do not want to go there.
Really? Why?
They didn't like the campus. The campus is very, yeah.
Okay.
So, anyway, maybe she'll be joining your kids in Kentucky now that she's getting tired of this cold.
Well, Kentucky is freezing. You know that. It's basically like being in Southern Illinois. It's just like, it's 45 minutes away from where Logan is.
Yeah, it is cold there too.
But everybody thinks it's South. It's really not. It's kind of like, I always say it's like South light. Like people think it's South. You can wear cowboy hats and cowboy boots if you want to, but it's still freezing.
It's cold.
Yeah.
Well, 1 week from today, we will be in sunny Mexico.
Hey, do you want to jump in the platform? I want to show you something that's going to make your disposition sunny. How about that?
Oh, love it. Love it.
So let's jump into the platform. I don't know if we're in there or not yet. There we go.
We are.
Take a look at this, Miss Jenny Andrews. This was from...
Oh, that was from Twitter. That was from
Twitter.
From Twitter. It was like an ES crab, a bullish trade. And it was pretty bullish because I do remember 2 days ago, we were on the SIBO, and I remember looking at this app, maybe when we were on the train on the way home, and thinking it was a lot more expensive after the fact. What did we pay for this? $17.25.
Yep.
So half of that was like $800. I think I remember looking at this when we were on the train, and instead of the $850, it was like $1,100. And so
I'm going to ask you to do me a favor too. I agree with you. I think we did look on this on the train. It was too expensive. Can you do me a favor? I just don't want to bore the viewers. Will you scroll through our Twitter if you can and see who it was? Because I want to give credit where credit is due. I don't like being like, this is a great trade that we came up with, because we didn't.
No, and I agree. It might take me a minute.
No, I get it. That's fine. But what we're going to do here is while you're kind of scrolling a little bit, I'm going.
It would have been the 19th, right? Yesterday was the 21st. 20th.
So it would have been, we've had it on for 2 days, so it would have been the 19th.
Oh, here, I found it. Punished Pixels.
Oh, Punished Pixels. Yes. Thank you very much, Punished Pixels. We got to give you credit where credit is due.
Yeah. And he said, let's buy the dip. So let's buy the dip with the upside crab. And that's great because our risk in this was only about $850.
Yeah, you got to cut that in half.
Yeah, so this was a great trade, Punished Pixels. Thanks for the $487. We'll take it.
So, and it's interesting. So let's take a look. So here's where your crab is. So the two shorts right here. I mean, I'm not leaving it. We're going to close this and we're going to take our profit. And then we're long one this was the at the monies. Oh, actually, you know what, Jenny?
It was out of the money. Yeah, it was out. Otherwise, it was, that's what made it a little bit cheaper, that it was out of the money.
Yeah, so I'm going to close all these. Thank you very much, Punished Pixels. We appreciate this.
So again, if we put it on for around $800 and we close it for $27, cut that in half. So you're looking at $13.50. So yeah, this is like nice work. Nice work.
I thought that would make you happy. Other than that, we've had 2 raging rallies in a row, right? That's hard to say. Raging rallies in a row.
I do consider today a raging rally.
Well, I considered yesterday a raging rally. And it's funny, like I heard the boys talking about today, you'd say up 40 in the SPOOs. Pre-pandemic, that was, a big move. Now it's not. We're almost 7,000.
Right. Yeah, so I look at SPOOs up 40. I don't really consider today a raging rally, but yeah, a rally. I'll take it.
Yeah, it's a rally.
Are we back between yesterday and today? Are we back to what we lost on Tuesday?
I believe so. So here is where Tuesday. Well, we were down a little bit the day before.
We're right
around the day before, but honestly, yesterday it reversed it all, and then we're up a little bit more.
Well, because we open lower, so you would go the day before over to the close the day before.
Oh,
that close, which was 69.76. So we're like 25 points away from like the down move
from the close the other day. Yeah, we're right there. We're right there. Everything's all's right with the world, Jenny. All is right with the world.
Now I will say silver's been marking crazy. I have as SI, it's marking crazy. It's kind of goofy marks, wide markets. We know our max loss on that trade was around $800, and it says we're down 2,600. That's just a bad mark.
And it's got 5 days left. I mean, we're just going to sit on this. I just want to show something too. It's 25 points wide, right? So it'd be like, Let me go to
0.25, like 0.25.
0.25.
So you see where it's marking 0.43, the most it could be worth is 0.25.
So I'm going to do this to 0.25. There we go. And so you take a look at this. Your your buying power. I'm trying to do these together. Max profit, max loss. It was about $1,200, right?
Yeah, because I think our
yeah, it's 1250. So your multiplier's there. Yeah. So it's 0.25. It's going to be 1250. That's the most you can lose. And here it looks like
but we collected something. We collected. So the most we could lose here was like 800. And again, is marking 0.439 when we know the most it could be worth is 0.25. Like if he's exercising a sign all on Friday, it's 0.25.
Yeah.
The silver markets, and Frank has always warned us about that they're wide and.
The silver futures options are very wide. That's why a lot of people do lean towards SLV, which in my opinion, in years past, SLV was so small that it was almost tricky to trade. That's not true anymore.
It's not true anymore. It used to be like $20 and it was hard to get any premium out of these options. It's not true anymore. But look at how the ranks come in. Now we've got a rank of 38 where we used to see a rank of 120.
Yeah, that's true. And we have a reverse, and you know what? I don't think we got filled in this. Not that it matters, but we tried to close our put spread just to have the naked short 100 call. Now we still have 29 days to go, and if silver stays on this trajectory, we'll get tested on that silver, or on the 100. But it's still pretty far out of the way. Take a look at this.
So yesterday, silver was. Well, I think it was yesterday, the day before, where like silver was down and gold was up, and that silver gold ratio was coming in a little bit. And now silver's up 3% today. What about gold?
Let's take a look. I'm just going to go GLD just because we're looking at SLV.
Yeah.
Up and up.
So now like silver's up 3% and gold's only up 1%.
Yeah, up and up. Up and up. Only up and up. Oh, you know what, Jenny? We have to do this just because we didn't yesterday. So we've got Schwab, Netflix. What was it? Johnson & Johnson, Schwab, and no, Netflix.
Oh, okay.
We never got filled in you all. So Schwab, I mean, it is what it is. This was a small winner yesterday. When I say small, I think like $3 yesterday in Schwab with the 100. Johnson & Johnson was not as much of a winner yesterday. So it all kind of comes out in the wash for us. But I'm going to close both these calendars.
Okay, so yeah, the 217 we made $30 in Johnson & Johnson.
Yep. Filled, and then
so as far as the Schwab, before you close this, I was going to say, if like we paid 48 cents for it, it's worth 20. I mean, I might leave it for the extra day just in case it comes down.
Well, it's got you've got 8 days left in this, and it's not really worth much. If you need to, I mean, if you wanted to, you could just close this for 4 cents or a penny or whatever. You could probably leave it. It doesn't necessarally matter.
I would say like I'd wait till Friday just in hopes that Schwab might come down a little bit and then we can get something out of that.
And so it's kind of like a tale of two cities, right, Jenny? Because Johnson & Johnson was a small enough win where we wanted to close it both. Where, to your point, this is a loss, so we only have a little bit left to lose. And if it comes down, it comes down. Here's the problem. Yesterday, this was around 100.
Right. I know. And honestly, we never came back into this account. Like, we never came back into the show account.
After everything opened up, right?
And Netflix was a bullish trade. Netflix was down. And even with the rally yesterday, I don't know that Netflix, I mean, it wasn't down. Wait, Netflix? You're in Schwab. No, you're in Schwab. I was like, wow. This is not right. This is not right.
I was like, you got to be kidding me with that. So the rally yesterday, it got as high as 86.
Yeah, but like, you could see the day before earnings. We put this trade on as a bullish earnings trade, and
it's trading 88. So this would have been a loss either way.
Yeah, it was trading 88. So I would say we leave. There's only 40 cents left in that 8 day long. We just leave that.
I think so too. And you're only $4 away. If this could just get something under, just get some like lift underneath it.
So this morning when SPOOs were up 50, like on the open, SPOOs were up 50, and I was looking through like what is bringing this market up, what's moving the market up. So I was trying to go through different symbols and see what's up, like what was moving it up. Do you know?
I never saw it. Like we opened at 69.20.
I don't know. Whenever I was in my account, I thought SPOOs were up about 50, and I was trying to see what was up, and I saw Apple was up like $2, Microsoft was up like $4.
Meta, SanDisk, Micron. Let's take a look at some of those. Those are the ones that are SanDisk. Oh, Micron's down today, but take a look at this move.
Yeah, yesterday.
JT is living on an island.
Check JT just counting his money. His money.
He's living on an island on a pile of cash.
Can this be Intel? Can this be Intel? Can Intel go from 19 to 40 to 55 to 400? We'll see. Which is why I'm never selling naked calls against my Intel stock.
Okay, so let's take a look. Speaking of Intel, so here's MU. I want to look at SanDisk too. These are all SDNK, right? Yeah. No, SNDK?
Yeah.
There we go. So this is another one. I think they're all in the same space where it's just skyrocketing.
So much yesterday. But that's why
coming down a little bit.
That's why I was asking, like, what's boosting the SPOOs today? These are down today. What's boosting the SPOOs today?
Meta, I think. Wait, Meta, Microsoft. Meta's up $23.
$23.
Yeah. MSFT.
I think that was up about $4. Oh,
yeah, I mean, they're up. I'm trying to think what was up.
Apple's up a couple dollars.
It is.
We were talking to someone about this yesterday. Someone asked us, while we're doing the show, do we have a live news feed? No, our Twitter people. Our Twitter people. So we are on Twitter. We take live tweets. During the show, we look at Twitter, take live tweets. If anyone's out there and they want to share anything with us or the viewers, post a tweet and put the hashtag LIZJNY. So what is our news source during the show? It's our Twitter peeps.
But you know what's so funny? But you can't beat the news. Like, we can't be a breaking news network. We're not a breaking news network. And I loved talking about this because I think that the markets react faster than anybody could actually say the news. Meaning, if the headline hits, it's already priced in.
Right. So as soon as there's any kind of news, the stock moves, right? The stock moves so fast. Now, if you go to the watch list,
yes,
and go to like Tasty Fast Movers, so you see what's like moving for the day. That down at the bottom, Tasty Fast Movers, and you can hit by change percent, like by percent change, like what's moving the most. You can see right there, ANET, Enphase.
Yeah.
You could go right here and see
uranium. Serve Robotics.
Serve Robotics. Okay, we saw a Serve Robotics machine yesterday.
Mm-hmm.
Let's go to Serve. Let's take a look. Can we sell puts in Serve?
Do you know what I was thinking about doing in Serve? Because it's cheap.
How much was Serve when we bought it?
It's been all over the place.
Yeah. We can't be like, oh my God, we bought this so cheap.
I don't think I bought it too. I don't think I bought it down here. I think I bought it somewhere around here. So it's not as if.
And you know what? I already sold mine.
Oh, mine's gone too. But you know what I was thinking about in Serve Robotics?
Yours is gone too? We both sold it.
Yeah, I sold it. The Bob on Fire special. I was up in Serve. So I actually did I channeled you and did some account cleanup where I didn't want to pay taxes on things. So I was trying to clean up. Or maybe I was down. I don't know, but I'm out of it. But I was thinking the Bob on Fire special.
So the Bob on Fire special, I think, works with high price products. I don't know about low price products, but hey, this looks pretty good in Serve Robotics. Sell that.
Oh, that's why I looked at it beforehand. That's why I want to be like, hold on, sister. You're getting a 112 credit, and you would own it at.
I like it. I like it.
You have the profit potential of $7. You're putting up $1,200 to do it. You know what? I could hold on. Delete this leg. I'm gonna do 1 and 1.
1 and 1. Yeah, you're still getting a credit.
Mm-hmm.
That's not bad. But I'm shocked that you can get all the way down to the 5. I didn't know there'd be that much premium in Serve. Now, Liz was looking a long time ago after a college visit, I think, wanting to get into one of these like food delivery, grocery delivery little.
No, I read about it in Bloomberg.
Oh, okay. I thought it was you were on at your Kentucky tour. You saw these.
No, this is your backstory. I read about it in Bloomberg, and I went to Serve Robotics, and you're like, "That's not the one that delivers food." I go, "I didn't know they delivered food."
Oh no, at Miami. At Miami, these little robots are all over. It's not the Serve Robotics. It's a different one. They're all over campus, constantly delivering food. But yesterday in Chicago, we actually saw the Serve Robotics robot. Delivering. Yeah, I'm sure food, kind of like ordering Uber Eats or something. I'm sure it's delivering food or groceries. And it's not that big of a machine, so it's not delivering like a cartload of groceries. Usually, I think it's not necessarily Uber Eats deliveries or Grubhub deliveries, some kind of food deliveries.
Jenny, upon review, I agree with you, but upon review, because this is such a long time frame, I'm going to delete this leg, okay? And I'm going to put 2 of these on. I just want to do something.
Wait. Can we just look at like regular monthly?
Watch this. I just want to show how if we're going to put this on for an extended period of time, you can use very little capital. Oh, that's $1,000. Let me bring it up. We still have a credit, and we're using $800.
You have a ratio spread onto the downside. That's why it was still a lot, because you didn't have like 1 by.
What's happening here? Where's my 4 lot?
You got 4 by. You got to have 2 by 2.
Yeah, hold on, 2 by 2. So this is using $400, and it's still a credit. It's a debit. Here it's using $700, and we're still getting a 72-cent credit. That's what I'm saying. When I was looking at this, I just like, hold on. If we could buy that 3, this is defined risk. If Serve Robotics goes up, great. If not, we're the proud owners of it at 7, actually 6.
And I've seen, like, from looking at some of this, like, Bob style trade, we often see where basically, like, what your buying power is what you can make. So if you're here, you're risking 700, make 700. Before risking 2,000 to make 700, it wasn't quite as good. But we've seen other setups where what you're risking is what you can make. Yeah, kind of like risking 1 to make 1.
I mean, I think that this is a very wide market, but I'm pressing send.
Wait, can you please? I want to look if there's this much premium out there. I want to just see if monthly we sell the at the money put what we can make in Serve Robotics, because I think
that's pretty good. You're getting one. It's $1,200 to put it on, but you're getting $140, $45.
And now I know these markets are very wide, but you could even give yourself room. Like you can give yourself room, or you could do a big lizard. I don't
know. These markets are very wide.
They're very wide. Then do the long term. Throw in another Bob on Fire.
I don't think in any realm we're gonna get filled, to be honest with you. I don't. So
you know what, these markets out in the, I wouldn't fool with buying something.
Well, it takes our buying power down.
Yeah, but what, like, you're just I feel like you're just throwing away $60. Like we have the $1,200 to spend.
Let's see if we can get them. Oh my God. I didn't even remember I said you can't get the news out of your mouth fast enough.
Filled in a millisecond.
I don't think we're going to get, and we're already filled. Okay,
so honestly, so looking at one of those trades that we put on recently where the stocks moved up, Intel. We put one on an Intel 2 days ago. Let's look at how it's performing.
And Intel is performing. It's doing great.
So someone might think, geez, going out to January, it's not really it's gonna take forever to get anything out of it. Well, we put this on 2 days ago and it's up $210. And we know when we put this on, Intel was trading 50 and now it's trading 54. You're getting about a half of the stock move, which is what we've kind of seen just since we started looking at these.
Yeah, but it's still decent if you're getting half the stock move, because then on a pullback, you can get back in.
But in the same breath, like, don't you remember, what did you do it in AMD or something where AMD was up 1,400 and you made 700, half of the stock move?
It's always half, right?
Yeah, half of the stock move.
Which I think is pretty good considering it's a January position. So what it does, and thank you, Bob on Fire, we really love you, but it really kind of eases your down moves. I'm trying to think, did we put one on, we have one on IBIT, right?
No, I wanted to look at it in IBIT. We've got...
Oh, we have a zebra. We have a residual call.
No, but I'm thinking of changing my IBIT zebras to this Bob on Fire trade.
Yeah, we'll take a look at that. Maybe we'll do that tomorrow.
And Liz and I later today are on Wealth 365. So I want to bring Bob, if it's okay with you, if we get your approval, and I'll give you full credit. I want to bring Bob's trade idea to Wealth 365.
Oh, I think it's a great idea.
In IBIT. So if Bob gives us his blessing.
Well, he can't not, so we'll give him credit for it.
We'll get full credit.
Okay, so the other thing, Jenny, is here's my question. And I'm going to go to Twitter in a second, too, because Bob on Fire did send us these, and Intel's on deck for earnings tonight. Now, so we've got this Intel position, which is 358 days. I would say we take our $200 and do something that's going to get some oomph really quickly out of these 1 days in earnings. And if not, we go back and switch it back in.
I do I think like earnings or no earnings, getting $200 in 2 days. I think we take our $200. I'm not quite sure what to do for Intel earnings. And me, like,
You're on defense mode.
I'm not sure what we should do in a show account. If I had nothing, I don't know what I'd be doing for Intel earnings because it's had such a run. I am a little nervous about it falling back down. If I had nothing, might say I'm just going to wait till earnings are out in Intel. I don't know if I wanted to. I just have my stock and I bought my call spreads back and just rolled up my puts. So I'm throwing away money on protection against my stock. That's all. And I hate that, but I'm kind of afraid of it.
Honestly, it's a high class problem. You've made money in it. You're in defense mode. You're throwing capital at protecting it. Okay, but I just want to talk through our position. So I understand what you have, but this is.
I'm just saying I would close this and maybe not even do anything on earnings.
So we could, but taking a look at this, you're going to get it's 72% of the credit that you received. That's what's happening right here. That's why it looks like the percentage is so high. So you kind of got to keep that in mind. But $218 when we were risking not that much isn't bad. I'm going to cancel replace this.
Yeah, I would say like we got it so quick, I'd take it off. If it went up on earnings, we could make a little more. But even if if it goes up, $4 on earnings, we're going to make another couple $100. But me personally, I am a little bit nervous of Intel earnings. Because I know there's all this hype and everyone's like, there's all this hype behind it, but what if their earnings are not great?
This might be wide markets, Jenny. We might not. You got to keep that in account too.
Well, yeah, when you're 350 days out.
We're only going to that level. So we'll leave it there.
If we took in $3 credit and you pay $1 debit, we made $200.
I'm changing this from GTC though. Oh, I guess if GTC hits, it's fine.
But I think you didn't move it at all. Move it up to like $92 or something. Then we still made over $200.
Oh, I have pennied it up. It was, when I opened it, it was something else. I'll go 95. Yeah. I don't think we're.
And then maybe just let that work.
I mean, I went up by, when you were talking, I went up by 7 cents, then 7 cents.
It is wide markets in those leaps. I mean, I don't think that $200 profit is a lie. The stock has gone from 50 to 54 since we put this on. Yeah. I do think you have to give up something when you're trading those leaps.
Yeah. And that is it. It's the for every gimme there's a gotcha. Okay, so we'll leave that. And if it stays on, it stays on. It's not the end of the world. That could be our earnings trade in there.
That's true.
I know we're not taking this off, and I know it's not 1,000%. It was the spiked lizard.
Oh.
But I just want to see how much time was left. So we're sitting on it right here. It stayed right here. We're leaving it. But the one thing I will do is see if we can take off any risk. What
you would have to buy. I mean, we could just take the $87 out of it. I don't have a problem with that. It's trading right at the center of our strike. We've had this on for over 2 weeks.
So it's trading right at the center of our strike. We've had it on for over 2 weeks. I just wanted to see. When I have a spike lizard on like this, my eye line will go to if we can buy this back for very cheap and then you leave it on.
And it's still...
Because then you have the symmetrical butterfly. I mean, if we bought this back, we would have paid that butterfly.
Right. So I can see, like the first thing I looked at, trade price 9 cent credit. If we could buy one of those puts back for 9 cents, I would do it. But they're 24 cents, and I don't want to have a debit locked in on this. I would just say take the $84 and close the whole thing.
I kind of agree with you.
Because the width of the spread is only $4, so the max profit here is $400, and we made 20% of that.
So this is also a little bit of wide markets when you're in the money there. So I've got it in.
Yeah, we made 20% of max profit, which on a big lizard or spiked lizard, that's pretty good.
I know, but so what I was going to say is, look at this, Jenny. This is 4:30 at 6:30. You're looking at wide markets and on all of them. So I've got it in, but sometimes those mark as if it's a better trade than it is.
And SMR. I'm surprised the markets are all that wide because it's not like that's far out. That's just a regular monthly.
Yeah, it's just a regular monthly. Okay, let's pop into Twitter real quick. We'll go back and forth. We are going to be trading some more, but I did start with Bob on Fire only because we love him. Okay, Intel, ISRG, COF, what is that?
Citigroup, I think, or Capital One.
Capital One. AA, CSX, and SLOB. So that's what we've got today. I think all eyes, in my opinion, are going to be on Intel. This was for you. Billy Bob Thornton on CBS Morning Show.
Well, and for you because you're watching Landman now. You're more of a pro. What was the thing that he wrote the other day
CTT Oil and Cattle, and it's Cooper Tommy Thomas Oil and Cattle. Yes.
Billy Bob Thornton, he's such a goofball.
Yeah. I mean, it's a good show, though.
You know what always amazes me? They make him kind of look old and tired in the show, but then when you see him on like a talk show, he always looks younger than he looks on the show.
Jenny, if I wore that outfit where I wore something up to here and covered everything, I'd look younger than
You'd look younger too. If I covered all my face and you only saw my eyes, I'd look younger too.
Yes. I'm going to wear that outfit to the SIBO on Tuesday and see how well that travels. I mean, yeah. You look younger too. It's true though, because I do think then I've seen him in some commercials where he's got his beard dyed, where it's white and white and white in the show, but he dyes it brown, and it's kind of jarring.
I just know when I see him on something else, I always think like, oh, he looks younger here than he does in
No,
Landman.
it probably was something he filmed 10 years ago, because there's this show Goliath, because I just finished that, and then I went to go to this show Goliath. I was like, wow, he looks amazing. And then I looked at the date. It was from 2007. I was like, oh, that tracks.
Oh my gosh.
He is younger.
So yesterday was, have you ever seen The Great Gatsby?
I read the book, I think.
Okay, well, I know. Yesterday was Logan's birthday, and we told him, you pick whatever you want to watch. We will watch. You pick it. We'll watch whatever you want to watch. And usually he comes to us with like The Big Lebowski, Tropic Thunder, some goofy movie. And last night he's like, you know what? I've never seen The Great Gatsby. And we all looked at each other because I've seen the Broadway play, we've read the book, I've seen the movie, and we all kind of looked at each other and snickered and said, sure, we'll watch The Great Gatsby. We had no idea it was a love story. And
you didn't know that?
He had no idea. No idea.
He didn't know. Okay, got it.
And it was so long. And at the end, he's just like, what a birthday. What a birthday.
It is totally a love story. I do want to go to this though too, because I know it was 23 hours ago, but we do talk about them every day. When you guys do your 0DT SPX put spreads, what delta are you trading and how much credit do you expect to receive? Then your target is 25%ish, ?
So here's what I put on this morning. Sold a put spread at, I don't know, 5 after 9, 10 after 9. Sold a put spread.
So what deltas are you using? It's wrapped around the at the monies almost.
Yeah, I sold a $5 wide for $250. That's it. Right where it's trading, like $5 wide for $250. So I was risking $250 to make $250, and I put in a GTC to take $100 out of it. That's it. Like it wasn't a percentage. It was, which probably violates Jacob's rules.
No, but it's not a percentage. This is more Jajun-esque, but we're kind of blending all the rules that we feel like. I did the exact same thing. I brought it up a little bit. Usually, I used to go down one strike, but now you have inspired me because I love going Jajun. So I did the same thing. And Jajun, we used to try to take $50 out of it. Now we're just trying to take a little bit more because it brings the drawdown down.
I honestly think that's a game changer because with Jajun's trade, same thing, a $5 wide for $250, and we take $50 out of it. So if you make 50, make 50, make 50, and then lose $250, it takes so many wins to make back that $250 loss. So now taking $100 out of it, if you lose $250, it's like 2.5 trades and you make back your loss. So
yeah, that's kind of what we brought up yesterday.
Yeah, so I have been liking it. So today I actually did the calendar at 8:30 on the open, and I did the put spread at 9:05, or shortly after 9.
So these they've been pretty good this year. So and we're going to continue to talk about them every day because we are in the SPX pit. So we do like to talk about the 0DTs. Yeah. Okay, that's back on Bob on Fire. Hold on. Now this is
just to go back to it real quick. We were saying like those calendars got really expensive. So when there was all the pending news and Trump speaking and where the Supreme Court announcements, those calendars got really expensive. Where we saw them trading $11, $12, they're trading super expensive. Well, today the at the money calendar 8:30 was $7. So I thought, oh, it's cheap. I'll put it on. And honestly, SPOOs were up 50, then they were only up 20, then they were up 40, and it already came off.
And what are they doing right now? So they're back to where they were almost the high of the day. Okay, so everything's already off, which is great. And I like having that because then there's no risk on. Then you're done.
Then you're done. Yeah.
I'm trying not to overtrade, then I'm done. Okay, there's Bob on Fire's list. And I want to do this because Frank the Great pulled this from the chat. So question for Jenny. Jenny once mentioned a goal of $200 a day for using 0DT SPX trades. What are her preferred trade mechanics? And we just talked about them.
Yeah, that's all I was doing. $5 white spread for $2.50, closing it for $1. And I had said I've been doing two. If I do two a day, if I do two at a time, and I take $100, that's $200 a day. You would think, well, okay, if I'm doing that, that's $1,000 a week. But I said I've been doing that, and trying to do two a day to make $200 a day. And right now, my total in SPX from like January 1 to now, I'm only up $1,200. So I have not been averaging two a day. That's because I've been having losers mixed in there.
But there are losers mixed in there. So we kind of talked about this yesterday when we were on the trading floor. If your target goal is to have $200 a day and you're looking at it as a whole, you have to up your size because there will be losers. So Jacob's studies have been pretty good about this, showing that on average with your wins and your losses, it should, kind of net out to be about a quarter of that. So you'd almost have to do a 5 lot and take $200 and take $100 a day out of it with the losses and everything in there.
Right. So, because you're not going to win every time. You're not going to win every time. Yeah. But the reason I like those, and after I put my calendar on this morning, I threw on that calendar, and that was $700. And after I threw on that calendar, I thought, you know what, I shouldn't have done that because if that turns into a $700 loss, that's going to take a big chunk out of my profits in SPX, and then it's going to take me too many of those put spreads to make that back. That's why I like the low risk on those. I don't know.
I like the low risk on those too. I really do. That's been my go-to trade for a while, and I did it all last year, and it was very, very good to me. Welcome to the dark side, Jenny.
It's like the Jajun with a little extra oomph. And I don't even know what Jajun is doing now, what trade he's doing in SPX.
Well, and it was just a Jajun study where he said between 9 o'clock and 10 o'clock, there's more 5-minute up bars than there are down bars. And that's really all we're trying to use.
But what we have been getting is market movement. We're not in a period of time where we're just sitting here and the market's not moving and it's like watching paint dry. If we were in a period of time where it's just like watching paint dry, then maybe we are better off selling your condor or selling just further out of the money. Yeah, or you're right, the calendar.
So if you're talking in my preference, you've got the iron condors or the calendars. And so iron condors, butterflies, and calendars, they all have some type of relationship. And in my opinion, if you do that, the calendar, it will maintain some value because you've got an option that's got a day to go. So even though yours was $700, no matter where it went, that will remain some value at the end.
And Punished Pixels must have tuned in a few minutes late. It was the first thing we talked about. Punished Pixels. We closed it. Thanks very much.
There we go at 10:05. Punished Pixels, and we took almost $400 out of it.
Yeah, like if you go to just ES and look at our history for the week in ES, you'll see 2 days. You can see it going on and coming off.
Just ES. Hold on, I'm gonna go.
Just go.
30 days. That's all we got.
On for $17.25 debit, offer $27 credit. Thank you very much.
You got to cut that in half, and bada bing, bada boom, we got about 4 something. So yes, and Punished Pixels took he was going to take a quick $200 profit.
Nice work.
Thank you very much. Billy Bob's only 70. He should still look good. Yeah, for sure. I agree.
I said he does. I said when I see him in commercials, he looks much younger in commercials than he does in Landman. And Liz is the one who said anyone would look good in the outfit he's wearing.
Well, that's what I'm saying. It doesn't matter how old you are. He's completely covered up. He's completely covered up. It's funny. It's a great show. He's a good actor. You know who else I like on there? Yeah. I really like the female lawyer.
Oh, yeah. Tony loves Billy Bob's wife.
Oh, Ellie Lauder?
Yeah.
Yeah. I mean, I think that's a mismatch, personally. But yes, I get it. So, yeah, he does. And I appreciate that. I like it, Florida 7. I just finished it. It's fresh in the brain. I can't wait till the next season comes out.
Well, I'm glad you're finally hooked.
I'm going to say unpopular opinions, but I can't stop myself. I do not like the son.
Oh, why?
Cooper?
Yeah.
I don't know.
I don't mind him.
I've never seen him in anything else. I'm just not a huge fan.
He's fun. I like him. I don't know.
Yeah, I couldn't particularly leave him.
I'm trying to think of other good shows, other good series. What are you going to watch on the plane to Mexico?
Jenny, how long have you known me?
Okay, I don't know why I was asking the wrong person.
You're asking the wrong person if I'm watching TV on a plane to Mexico. No.
She doesn't know what she talks to everybody around her. She'll have a million friends. And
I'm sitting next to Kathleen. Like, Kathleen's not going to be able to, she's not watching anything.
And I know we're on air and this is a trading show, but I just want to let you know. So my husband had so many those extra miles that are going to expire end of the month, just like yours. So your husband threw it on like a bunch of our friends to try to upgrade them to first class. And then yesterday, my husband said the same thing. Like, I'll throw it on to your other friends to try to upgrade them to first class. First class is sold out.
Oh.
Mm-hmm.
Oh, okay. Well, good.
I mean, I'm just like, I like everyone who we tried to upgrade, it's sold out.
Okay. Well, that's fine.
Yeah, whatever. I mean, it is what it is. Just letting you know, no one's going to get the boost up.
Okay. Well, they would have got it already, so it doesn't matter. Like, you get it,
Get it that day, unless like someone in first class cancels.
Yeah, for sure. For sure. All right, let's pop back into Twitter if we can, or not Twitter. Let's pop back in the platform. We did some good cleanup today, and I don't know if you're doing your job, so I'm going to.
Oh, I haven't. You know what?
I'm gonna see. You haven't pushed anything out yet?
No, I forgot. I totally forgot.
We've done some. I can't believe we got filled in that serve. That's what I think is crazy. So we got filled in serve
instantly.
Immediately. Johnson & Johnson, we're still trying to work closing Intel, which is not filling, by the way. And
Go up to $1. Go up to $1.
But now 110 is the midpoint.
Is Intel down?
Yeah, I mean, it was right where it was when we were trying to close it.
Serve. I would love to know what price we got in and out of serve at. I've totally forgotten. And when we saw the serve machine, I looked in my account and I don't know how
last year it was gone.
It was gone.
Serve Robotics, we're back, baby. You can't keep a good one down. You know what I want to do? I just want to see if there's any interest at all in any of the rest of these earnings, okay? Because we don't have positions in ISRG, COF, AA. Remember when AA used to kick it off? Let's go to AA.
Yeah, but there was never, it'd be like, oh, earnings are starting, AA's out. And then we'd look and be like, wah, 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 wah.
Alcoa. What is Alcoa? Is Alcoa aluminum?
I mean, you're asking the wrong person.
I'm going to pop out the side and see what information I can get. I'm going to go news, Alcoa. Yeah. I don't know if that's true, but it says Japan aluminum buyers agree to pay Q1 premium. So they're talking all about aluminum whenever you go into AA.
And okay, and then what else was that? Was there Slob on the list? Because I was going to say, was Slob and Halliburton, are they all both in, because are they both in the similar industry? Was Halliburton doing on earnings?
Did you say Halliburton funny?
Halliburton. Oh my God.
I just want to finish AA. So is aluminum, what other aluminum trades are there?
I'm just going to tell you, when I Google search AA and like, what does the company do? It just takes me all to Alcoholics Anonymous. It's not giving me any news on Alcoa.
Did I tell you about the day when Annabelle stumbled into an Alcoholics Anonymous meeting?
Oh.
And she said they were all so happy to see her there. They all got up there like, hello, it's good to see you. She was trying to
get on the cruise and went to the friend.
No, she was trying to find a blood drive. She likes to donate blood because she's got a rarer type. So she signed herself up for a blood drive, went to the church where it was, but it's St. L. St. Pat's. And St. L. St. Pat's, I mean, it's exactly what it says. There's two of them. So she walked into the AA meeting and they're like, welcome. Would you like a donut? She's like, what is happening? I'm in an AA meeting.
Well, on every cruise, we our families go on cruises and their kids like the cruises, and my kids are always looking at the daily itinerary of what to do, and it's always in the daily activity of like
it's called something else.
Yeah, like Friends of Bill W. So this last cruise, Logan's like, I wonder who is invited to the Friends of I think it's like Friends of Bill W. And he was running
something. Yeah, it's called something else.
Yeah.
All I'm saying is they were very welcoming, so it was wonderful. Okay, but AA, I just wanted to see what other aluminum stocks are there. Because I want to see, you've got gold, silver, palladium, all this stuff that's through the roof. I want to see if all the metals are. I know copper's at its all-time high. And I want to see if AA has been on the same trajectory as all the aluminum stocks.
All right, I'm looking.
Here's CENX, KALU, Alumis. Let's try this one.
Here.
Yeah. I just picked a random one. I typed in aluminum.
And then RIO, RIO, CNX, KALU.
So they all are. Jenny, look at them. They're all up through the roof. So, AA, aluminum. So it's going along with all the metals.
So I don't even know if this exists anymore, but growing up, so my grandparents they lived, up in Wisconsin for 50 years. They lived up in Wisconsin on an area where hunters would hunt and fishermen would fish, and they had all these acres, and my grandpa literally got his money from, we would walk around, we had this spoke spear that would spear the aluminum can, and then we put it in a bag, and we would just walk the property and go get, and there was a state park nearby, so we would just go around and get bags and bags and bags of aluminum cans, and we'd bring them all in for money, and that's how he made extra money.
That used to be a thing. You'd bring them in and they'd give you cash for the cans. Wouldn't they give you 5 cents or something?
And thinking back, every time we'd go for vacation, he'd be like, all right, Jenny, time to go get the aluminum cans. And I actually, it was such a treat. And then we would go carry the bags and get all the aluminum cans we could get.
And then you take it straight to the casino with your 5-cent nickel slots.
Yeah. But you're right. Yeah, they would give you 5 or 10 cents a can.
Yeah, that's true. It's funny. Okay, I just want to see it is an aluminum. It is aluminum. I can't get rid of that thing. I'm sorry. I don't think we're going to do anything in AA. Is there anything that you want to get into after you see a chart like that, knowing that it's aluminum?
No.
Okay,
then looking at some of these stocks, like aluminum stocks, they're not, I'm going to guess they're not really moving much on earnings. They're moving more with
They're moving more with the aluminum move. Yes, I kind of agree with you. It's kind of like when we looked at, your GDX doesn't have earnings, but you look at, your Exxon Mobil's, those move on.
Right, like the oil company.
Do. Yeah. Okay, so then what was the other one here? So, no, we're going to cross off AA. Slob is on the list. And only because it's fun, I'm going to go on this. Okay, so stocks on the move, this was yesterday, was Oklo, AMD, and Lam Research. That has nothing to do with Slob. What is Slob?
You know what? It says, I always thought SLB was Schlumberger, and now it says formerly Schlumberger. So it's not Schlumberger anymore.
I always thought it was Schlumberger too. Did they just change the name or did they change the company?
Securities lending and borrowing and finance, or no, that's not it. But SLB, formerly Schlumberger, a major global energy technology company. But
why? So when you type it in, it says SLB Limited Common Shares. We wouldn't know what it was.
Formerly Schlumberger. Why did they change the name?
I have no idea. No idea. But take a look at this. So I think this is energy. This is everything's parabolic.
Global energy technology company.
It's a lot. Okay, so Jenny, let's close. I want you to just take your mind eraser shot. Okay.
Okay.
Mind eraser shot. So you take a look at this, and so you don't see Slob. Okay.
Mm-hmm.
You don't see Slob, but you see a 7 point. I'm going to give you all the details. You see a $49 stock, right? That's got a 7.8 rank. That is up from 30 to 50 within, I don't know, October 1st to now. And then you go, and I tell you they have earnings and there's only a $1.26 move. What would you say?
I'm not going to trade it.
I would say close this up and move on. I don't care what they do. I don't care what they are. I don't care if they were formerly called something else. It's weird, right?
I wouldn't trade it. What I do want to look at, and I don't know if there's a trade, but I do want to look at, after listening to Glenn, I want to look at the Canadian dollar. Can you go to, or the Aussie dollar? Can you go to 6A or 6C?
6A. Let's take a look there. I can't get rid of this bar. It's driving me crazy.
It'll go away. It goes away eventually. It will go away in a second. Just click on the chart. Click on the chart. We've got 6A. Moving like crazy and a 40 rank. Are there options in 6A? Can we sell a call spread or do an upside broken wing butterfly or something in 6A?
Okay, let's go to the 15-day. It's not going away. It's driving.
There it is. Gone. It's gone. Just don't move your arrow up.
No, you have to go up to get rid of it. I had to move it all the way through it and then come back down.
It's gone now. So we have 10 minutes and let's find some kind of upside.
So I don't do upside. It's kind of tricky with this one.
To do an upside broken wing butterfly?
It's such weird, wonky strikes. Do you know what I mean? Like here we're getting 380 as our max profit, but that's the distance between these strikes as much as whatever we're collecting, and I can't tell what we're collecting.
Well, we can't do a ratio spread because I don't want to do naked options in 6A. Try an upside broken wing butterfly. I'd just like to see how much we would collect. Just you look at how much you would collect and what's your risk. So,
it's not much risk.
No, it's not. So where it says 280, we're probably not getting that much. We're probably only getting 30 cents. Yeah, we're only getting 30 cents.
That's right. I don't like these because it's a weird thing. Like you're playing for the up move because you're only getting 30 cents. You're not going to.
Well, then let's look at a call spread.
Well, what was the other one you wanted to look at? It was 6A or?
Well, 6A. I mean 6A. Try a call spread and just see what we can get on a call spread. Is 6A or 6C?
Are you bullish or bearish?
No, I want to fade this move it's been having.
Oh, you want to fade the move. Then you definitely don't want that upside broken wing butterfly. Your max profit is 60 cents.
You have to widen it.
Here your max profit is 140. Your max loss is, this is a $5 wide.
Yeah. 140. Or what about a reverse big lizard?
Okay, let's think. So here, we know this is a $5 wide. We're collecting $6. That's $1 over. I'm going to pull this in. So no, it's a $5 wide. It's a $2.50
wide, and you're getting
So it's a $2.50 wide, and I'm collecting.
That's not bad. That's not bad. That's not bad.
That's not bad.
You can go to the analysis page and show what this looks like and kind of see better there.
Curve analysis. So here, I just want to make sure. So anywhere to the downside, this is what I wanted to double check with our math down there. And what I love about knowing options is taking a look at that. You can kind of figure it out, even though what doesn't make sense to me is the 0.00370. But you look at your max profit, your max loss. I mean, the buying power effect doesn't even do anything with it either. So your max profit up here is 120 if it goes down. We know we're collecting 120 over 250, which is factually accurate there. And your max profit is if it pins at your short strike. And your risk is only 380.
380
there.
And if you again, I heard Glenn talking about the Aussie dollar and the move. And in FX, we could certainly just make a trade in FX, but with the 40 rank, I thought of taking a look at the options here.
It's not bad. It's just interesting. It's a very unique situation because if I looked at this, and that's why I love knowing what we know is we know if max profits here and max losses there, and you can look at this and it's defined risk, and all your numbers add up to what they're supposed to be. It makes sense.
Yeah, so it's helpful to use the analysis page when you're throwing things in some of these futures where the multipliers are all different and you don't know what this 0.00370 is really giving you.
I'm sending it.
Yeah.
So we'll let that percolate. See, I'm going to try to percolate as much as I can until we get to Mexico.
Can you do the beep pop, beep pop, beep pop?
Oh, we're going to try to let that percolate. We'll see if we can get filled on that. That's pretty good. Hold on. Here's what I want to do. So I'm going to take it down by one. I just keep an eye on max profit, Jenny. Okay. I'm going to take it down by one tick. So it goes down to 60.
$10. Liz, I might have some bad news after watching some videos on the resort and some YouTube reviews on the resort. I don't think there's going to be any DJ at the resort that is going to play It's Time for the Percolator.
There's a nightclub.
But it's all kind of high end.
Oh, you're telling me the percolator's not high end. Is that what you're trying to say?
Yeah.
Okay, well, we'll see. I might have to bring my own track.
I'll bring my own CD.
That's pretty funny. Yeah, well, we'll see. We'll see if we can get the percolator percolating.
Okay, so
I don't want to put a GTC in for that, do I? No. And what I do like is it's only 15 days. And Jenny was saying she was listening to Glenn this morning, and this is fading that move.
Well, he didn't say fade the move. He was just talking about the big move.
No, Glenn is so politically correct. He doesn't give a directional assumption one way or another. He says if you'd like to, you can go with it. If not, you can go against it.
Yeah, he doesn't really. And again, nobody on this network gives trade recommendations. This is just what we put on trades that we come up with or trades our viewers come up with, but everything has risk. Nothing is a trade recommendation.
Well, and we're going to have Glenn on Monday so we can shake him down if this doesn't work.
Glenn, we put the Aussie dollar on.
What were you saying you were saying Canadian dollar too, right? 6C?
Yeah, I think there's a big move there too. But not nearly as extreme looking as the 6A.
Yeah, 6A looks extreme.
Do me a favor and do $6A and see if it really is as extreme as it looks. Because then this will give us a longer term chart.
Yeah. That doesn't, and once again, it's kind of funny because we were talking about, we've been talking about call skew and put skew. Just because it's up, that doesn't necessarily mean it's coming right back down. This could be the beginning of some trajectory to the upwardness. We don't know. But we do know that in the next 15 days, we put on a high probability trade.
Right. Yeah. And we have a little room. I mean, we could go to FX. Like if you go to FX and, I just got the message. Due to extreme cold, no, Friday will be an at-home learning day.
Really? Okay.
So,
hey, Paul, can you please take it off of us and put us on the
full screen?
Yeah,
full screen.
Let me know when we go full screen because I have
the desktop launcher.
I have to relaunch my platform. It just quit. So as soon as we go full screen, I will relaunch. Until then, I'm going to ignore this.
There, that's off already. It's off.
No, I can't. No, I can't go to the platform. Oh, there we're on full screen. Perfect. Okay, so I'm gonna go back to the platform if that's okay. Give me 2 seconds. I have to reload it. So
that's fine. And honestly, Liz, I don't know if it's worth it. We have 2 minutes left in the show.
Oh, that's it.
So let's go to Twitter. Let's just go to Twitter, and here we're on Twitter. And
hold on.
Here we are. We got it. Back on Twitter. Liz is back on Twitter, and we will shoot the breeze for the next minute and 30 seconds.
Look at this. Look at this handsome guy. See, this is the look we're talking about. You put like something on under a hat, then you put a hat on. What you're missing is this.
You're
missing this section where you go all the way up. I love it. Look at that handsome devil.
And he's even got the earring.
Yes.
All right, and then up on top, this came from the chat. The lovely ladies still have the PLT. Do the lovely ladies still have the Palantir calendar on?
Yeah, give me 2 seconds and I will let you know. And we do. We have the 190 calendar in PLTR. It's the 8-day, 29-day. And yes, it's an earnings setup calendar.
And where is PLTR right now?
PLTR is trading 166.
So
it's a loss right now, but we have another day. We have more rolls because it's the 8-day, 29-day, and we will address that on Monday.
I didn't know Palantir had such a fall since we put that on.
So I think we did the upside. Palantir, yeah. It's 166. Palantir was about 180 2 weeks ago.
Okay.
Yeah.
Well, so we still have it, but we've got it through earnings, so earnings could save it.
Well, and there's a bunch of rolls built in, and we'll sell something else against it, or take.
No, but when it gets so far, there's nothing to sell. Like when it gets so far, you're not getting a credit to sell anything. But we're out of time. We'll take a look.
190 is still worth $5.
Through earnings. Through earnings.
So there is
through earnings it is, but like to sell a weekly that's going to expire before earnings, I don't think there's
no. We have the earnings week to sell is what is that.
Oh, okay. All right. Well, you know what? First thing tomorrow, we're going to look at that Palantir calendar.
For sure. And we're going to end. We're going to end on Florida 7, so hopefully everybody can see him. But everybody have a wonderful afternoon. Jenny, I'll see you in about an hour.
See you on Wealth 365 in 1 hour, Liz.
Everybody remember to trade small, trade often.
Laugh with us, learn with us, and watch the Liz and Jenny show.
See you tomorrow, everybody.
Global markets never sleep. Explore them with Forex, now available on tastytrade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on tastytrade.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Got big goals for 2026? Get the big deal. Earn a 4% cash match on all qualifying deposits, up to $10,000 total. Plus, unlock 30 days of commission-free trading. Trade with confidence using active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. Earn a 4% cash match when you open and fund a new Tasty Trade account today.
What sparked my interest in trading was the probabilistic nature of it. I used to play poker a lot, still do, and if you understand the math for poker, you realize that it's a probability game, it's a number of occurrences game, and you want to put yourself in good spots the majority of the time and have good risk management. All of these things apply to options trading and trading in general, so that was my initial pull into the trading world. My trading style really revolves around implied volatility analysis. I like to look at specific markets, look at the differences in implied volatility between the weekly cycles and the monthly cycles, see if there's certain strategies that might play into that more than others. My favorite strategy of all time is a short put, simply because it allows you to acquire 100 shares of stock at a lower cost basis. And it's a position you can manage or push forward in time forever if your trade size is small enough.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
Got big trade ideas? Get the big deal at Tasty Trade. Make moves with confidence using smart tools and dynamic charts. And trade what you want, how you want. Earn a 4% cash match when you open and fund a new Tasty Trade account today.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
What's up, Tasty Nation? Welcome back to the show. This is Options Trading Concepts Live. My name is Mike, and I'm here solo for this fantastic Thursday session before a very frigid Friday tomorrow. It's going to be wild. It's supposed to be like Frostbite edition in Chicago. But as it stands, E-mini's up 40, NASDAQ up 180. NASDAQ selling off a tiny bit, but seeing another rally today after yesterday's pretty seismic reversal after the big sell-off we saw a couple days ago. Did take the opportunity to remove some downside hedges into that sell-off. But yeah, Bitcoin down $1,100. A lot of other things moving under the hood. If we look at the futures market specifically, we can take a look at downside moves first. ETH down 3%. Crude oil down sub 60 again. So seeing some chop there, but a lot of other stuff moving within 1%. To the upside though, we've got wheat, we've got silver ripping higher. Oh my Lord, almost at 100 here in the futures market. This thing cannot be stopped. It's been a wild ride and it continues to be just craziness for the precious metals. Looking at GLD as well, up 1%. How about platinum, our favorite, up 2.5%. So yeah, seeing all these things just rip higher. Bitcoin is kind of muted, nothing too crazy. 1,000 points is not much to bring to attention, but yeah, E-minis and NASDAQ surging higher, and we'll see what happens throughout the rest of the day today and into tomorrow. But real quick, just looking at SPX expected move, only 35 points through tomorrow. And then if we look further to next week, January 30th, we have the end of month cycle that is boasting a 105 point implied move. So 105 points is pretty decent. I mean, we haven't seen too much crazy volatility or implied volatility, I should say, in recent weeks, but I think the sell-off that we saw this week certainly helped boost the volatility futures in the VIX a little bit, and that's being reflected in the near-term implied volatility in SPX for sure. I haven't done too much in this portfolio. If you want to join me on the YouTube channel, we're streaming live there. You can head over to tastylive, throw in your trade ideas and questions along the right-hand side chat. I'm just going to quickly walk through this portfolio, show you what I've got here, and then we'll talk about some of the trades that I made this week. If you want to see anyone on the follow page, if you have a Tasty Trade account, you can just click on anyone's symbol here and then filter for this week if you want to isolate just this week's trades, or you can see all the trades or search by symbol if you want to look at the history of a year-long trade or whatever, what have you. But looking at this week, on the 20th, made a lot of adjustments here on Tuesday. That was the big sell-off day. Closed this downside portfolio hedge. So I had this 6,600, 6,700, 6,800 symmetrical butterfly that I bought for like $500. It was a great hedge, and I think I'm going to throw another one on, considering we've completely reversed the sell-off that we saw just a few days ago. And this thing was only $500, and even while the market was ripping higher, it wasn't really losing that much value, which is nice to see. And then when we did get that sell-off, this thing was a $155 hedge winner. So I gained back like $200 on that sell-off. And I think it's just a nice thing to have as a portfolio hedge, especially when it's nice and wide like this. 100-point wide butterfly for $500 is a really good risk reward when you consider the fact that if you're willing to burn that capital, if it expires out of the money, if you get lucky with timing, you could be near expiration week or at expiration week and realize a nice big sell-off. And that's a really cheap hedge to have against a larger portfolio, all things considered. So we can look at throwing that on again for sure, especially into this 150-point rally or around there that we've seen over the last 2 days. I also took Tuesday's sell-off as an opportunity to remove the risk in my broken wing butterfly. So I had a 10 by 20 broken wing butterfly where I financed a 10-point wide debit spread with a 20-point wide credit spread. To remove the risk from that 20-point wide credit spread, you just have to convert your 20-point wide credit spread to a 10-point wide credit spread, because then your 10-point wide debit spread that you bought completely offsets your risk in the 10-point wide credit spread that you'd be rolling into. So I collected $100 to route that broken wing butterfly on the upside, and I paid 20 cents to remove the risk, and most importantly, remove the buying power associated with that trade. So I now have a free butterfly to the upside that's 10 points wide, and I've locked in a credit of 80 cents. So love those strategies when they work out. Got lucky with the timing, certainly, because I placed that trade a couple of days before we saw that 100-point sell-off, and we haven't seen a sell-off in quite some time. But was cognizant of that, took the opportunity to remove that risk, and now we're looking good on that position. Had a UAL earnings put spread. Earnings for UAL were good. The stock price was up a little bit. As it stands right now, this trade isn't quite near 50% profit, and I'm totally fine holding this risk, but we can review that in just a second. Netflix had a put diagonal for earnings, and that one was nice. It was a $4.71 debit. It was a 7-point wide put diagonal spread, long March, short the 1 day, and I closed that for a $160 winner the morning of after the announcement, with Netflix down like 3-4 points, somewhere around there. And then, yeah, other than that, just got filled on a Natty Gas short put spread here, sold the long put spread, bought the 37537, looking for a slight reversal in Natty Gas, considering we had a 25% rally in that thing. So just looking at Natty Gas right now, we're still seeing a little bit of a continuation to the upside here, but this is such a short-term trade. It's a risk one to make one, $250 in risk for $250 in profit. And as you can see, Natty Gas futures, the G contract, still ripping significantly higher. So this one looks like it's going to be a dud here, but there's no reason to close it as it stands. 25 cents is what it's trading for now. And I've got $500 of max value if we do get a reversal to the downside. And given the volatility of this product in the G6, I mean, look at this thing. We could easily see this thing come down, especially if this is, some kind of short covering, some fund blowing up by being short Natty Gas and with too much leverage. We could see this thing come down to more reasonable levels, but not expecting it. But again, not going to close it. There's no reason to close it. So yeah, circling back to the UAL trade here, I think I might actually just get rid of this. So this was the put spread. I went out to Feb because with earnings credit spreads, I typically like to give myself a little more time. And just in case I'm wrong, at the very least, you have time for that reversal to potentially happen. We've seen it time and time again. So I went out to Feb. If I went to the 1 day, this would be a full winner, but I would rather have the defensive time mechanic on my side versus that, binary event, win big or lose everything type situation. So yeah, trading for a 65-cent win. It's actually 15 cents shy or about that, around that 50% profit target. Collected 160, 82 cents is 50% profit. So yeah, I'm just going to close this, especially considering the strength that we've seen in the general market altogether. So let's buy this back. Can we get a dollar for this thing? There you go. Filled for $1. If you want to hold it and see if you can squeeze more out of it, by all means, don't mind it. But these are one of those situations where market's been strong. UAL had a nice earnings report, but it is kind of coming down from the recent highs. So don't really love that from a chart perspective. And again, we're 15 cents off of 50% max profit, so nothing to do there. Let me put on a new butterfly here with SPX just ripping higher. I mean, kind of crazy to see. We are back at the lows of the close on the 16th. So the close was 69.40. The low was 69.25. We're currently at 69.26 after dropping all the way below 6,800. 2-day reversal, completely wild. But at the same time, does this surprise us? Not really. Volatility did spike a little bit, but not that much. We saw vol futures flatten out into that sell-off. Now we are firmly back into contango. When you look at the G, the H, the J, the K, and the M contract, 1815 rolling up into 1910, rolling up into 1980, and then you get into the 20s. So we're back into a steep contango here. And unless we see a big sell-off followed by a continuation, like if we saw that sell-off and then another sell-off of 100 points, we would have probably seen volatility go into backwardation or at least flatten out across the curve. And that's where you can run into much more uncertainty, or at least the pricing is reflecting much more uncertainty. Not really seeing that right now. So yeah, if you bought the dip on Tuesday, you're looking good today. But with that said, let's put on another 100-point butterfly, and let's do it into the Feb end of month cycle. So I think what I'll do here is just go to the 6,700 expected move. Let's see if we can get this for $500. That's the goal here. Yeah, it looks like it. All right. So 6,800, 6,700, 6,600. This is basically the position I just closed. the Feb 20th, 28 days to go, 66, 67, 68. So we're going to the end of month, giving ourselves another week, give ourselves some more time. But yeah, 550, let's call it 550, 100 point wide butterfly. And again, if we continue to rally to new highs, this trade or this butterfly is really not going to lose too much value because the short options offset a ton of the cost in the longs. And we already saw that happen. We saw volatility collapse. We saw the market rallying. And this butterfly, at the worst, was only like a $150, $100 loser. And then we get that one-day sell-off, and it reverses back to a $160 profit. So going to throw this on just to continue on putting on that downside hedge. I really like the risk reward. And again, if we get lucky and time this perfectly, where we're selling off closer towards 6,700 near expiration, this can be a couple $1,000 winner. I mean, the max profit's almost 10 grand. And if we're near expiration and we get closer to this butterfly, let's just say we can actually review this. If we go to SPX with the 7-day cycle, let's just see what a put butterfly is trading for right now. That's 100 points wide. So 69.25, 70.25. Let's sell 2 of these. And then the 68.25. Yeah. So right now, 7 days to go, given the current implied volatility and an at-the-money butterfly, this is trading for $3,100. Now, if we do get a sell-off, it's a 250-point sell-off to get to the short options in my butterfly I was just routing. Maybe you see a little bit more value with an increase in implied volatility, but maybe not, because that would increase the extrinsic value in the shorts, and that would prevent you from realizing all of that intrinsic value that we're seeing here, $3,200. But still, if I buy this for $500 and it appreciates to $3,000, it's going to offset a ton, if not all, of any kind of losses I might see on any bullish positions, and it's a cheap way to hedge that. So we'll get filled there. I'm going to leave it and just see if it works. If we can get filled at 550. But if not, we can bump it up 5 cents and make sure we get filled there. But yeah, nothing else really to discuss in this portfolio. The micro E-mini year-long trade working out nicely, sitting right in between that range, 66.50, 7,200, already rolled into Feb. Let's give it another week or so, see where we're at, and then we will roll from Feb to March and see if we need to make any directional adjustments. But as it stands right now, we're probably just looking at a roll out in time, and we'll likely go into that March cycle. This is the last roll that we will likely do in the H contract. And then we're going to have to roll into the M contract, which brings more complexity because the M contract is at 70.14, where the current H contract is trading at 69.60. So to keep our existing position in place, we're going to actually have to shift this thing up like 50 points to delta match the new contract that is trading for a higher amount. So we'll cross that bridge when we come to it, but year-long trade in MES looking good right now, and IBIT as well. We're just churning along. Eventually, we need to roll this position to avoid assignment risk, but even if we are assigned, not the end of the day, not the end of the world, because we'll just roll a short call and we'll take those shares at 50, especially with my 60-65 inversion. So that's that. I would love to check out the YouTube chat here, see if we've got any earnings ideas. The bulk of the earnings are really going to come next week. But if we look for the time-based earnings, it's the 22nd today. We've had some movements pre-market. We've got GE Aerospace moving down to the downside, 5.6%. Abbott Labs down 8%. McCormick & Co. down 7%. And then on the other side, Procter & Gamble up 2%. And Northern Trust up 6.5%. What else we got? Freeport McMoran down 0.8%. So nothing really crazy there. But after the close today, on this watch list, we've got CSX, Intel, ISRG, and Capital One. Capital One up 2.6%. Intel's interesting, though. let's check out Intel. $54 price point, $4 implied move. I want to play this to the upside, but it's always scary to just rip an upside call spread or diagonal spread into highs. But let's see what the YouTube chat has to say. We'll do that right now. At the top of the YouTube chat, I've got the referral program linked. If you want to check that out, a couple more months left on that promo as it is structured right now. But yeah, if you bring in someone with your referral code, you both get $100 if they deposit $2K or more into a new account. And yeah, you can find your referral code on the mobile app as well as the desktop app. You can just go to your settings. You'll see that referral link. You can copy it, send it directly, and it will send your friend to a landing page with all the information related to that promo. You can scan that QR code as well to get to a similar landing page. But yeah, I'm going to pop over to the YouTube chat now, see what we got here. Welcome. I feel like IWM is an easy short here, but also feel like it's too easy. Could it be a trap? Yeah, sometimes it be like that. Feels too easy to short, and then you short it and it rips to 300. All kidding aside though, just looking at IV rank 4, okay, I like that from a debit perspective. And then you look at the actual implied volatility, you're looking at 22%. So yeah, if you wanted to short this, I would say it is pretty cheap to do so. Just looking at the premium here, March, Feb, 270. Like you can get into a cheap calendar spread to the downside. With IV this low, I prefer to go with a diagonal spread route. And you can see this here, like you could buy a 270, 260 long March, short Feb for $5. This thing will fill up nicely if you get a sell-off closer to 260. We're seeing a 3-point rally today. So if this move reverses tomorrow and you get a 3-point sell-off, this $5.44 debit probably trades for around $700. You probably see a $150 winner, somewhere around there, because if you do get that move all the way in the money, this is going to be trading for $9, something like that. Maybe a little more, considering you've got a lot of extrinsic value in March relative to Feb. But yeah, I don't mind something like this. And again, if you wanted to go the calendar spread route and really just make it super cheap, looking at the value here, paying $450 for March, the 260 put, collecting $240 for the Feb 260 put. So big cost basis reduction there. You can get into any of these calendar spreads for about $2. And a similar story still applies here. If you get that sell-off, even if it's a cheap calendar spread like this, if you get a sell-off towards 260, and assuming you get a little vol pop, you probably make $100 on that thing, which is nice. 50% of debit paid, that's a home run for a calendar spread. So don't mind either way. What about an earnings trade in Intel? Let's do it. I like a calendar on Intel here, honestly. I bet earnings ends up being a nothing burger, but nothing that would warrant a huge sell-off. Let's check it out. And yeah, I don't mind, especially when we're at highs. If you're still bullish, I like going the calendar spread route just to eliminate some of that risk. But let's just see what it looks like here. Let's compare two different calendar spreads. We can do a neutral one right at 55, and then we'll look at an upside one at 60. And we'll look at this for just premium in general. Okay, so the 55, let's look at it this way. The 55 call for March. So I'm definitely going to March, first of all, because if you look at the 55 and 60 options in March, trading for $5.50 and almost $4 respectively. If you go to Feb, you're looking at $4 and $2.40 respectively. So it's the same thing every time. Every time I look at this, Feb has a 73% IV, March has a 70% IV, and you're paying like $1 more to get twice the amount of time for this to work out for you. And I'm always going to take that, because for $100, if you're wrong, you're going to want that extra 60 days or extra 30 days relative to Feb for that thing to possibly reverse. Sometimes it doesn't, and you're out that $100, but sometimes it does, and your losing trade that would have been a max loss in Feb turns out to be a scratch or a small win in March. So anytime I can pay $1 or less even to get twice the amount of time, I'm always going to do that. But when you look at April, it gets a little more expensive. So you're looking at $1.30 for the 55 strike, and you're looking at more than $1, about $1.20 to get another 30 days or so to go to April. But again, April is going to give you another 30 days, another month, and it's going to have less implied volatility crush implications with a 66% implied volatility relative to March at 70. So you can play it however you want it, but looking at the March 1 day, back to the curve mode, let's just see what this premium is looking like. So if you do a 55 calendar right at the money, you're looking at about a $3 calendar spread. And then if you do the 60, you're looking at about a $3 calendar spread as well. But the 60 is going to have a higher profit potential if you get that upside move, because your 60 call is going to appreciate a lot more, and your 61 day is still going to go to zero tomorrow. So if you're looking for a slight upside move, I kind of prefer the 60 strike calendar. If you're looking for a true neutral move, the 55 can work. But the problem with calendar spreads for earnings, especially right at the money, is the market is still pricing in a 4-point move in either direction. So if you go with a straight up at the money calendar spread and it goes to 60, you're going to be at a scratch. Where if you are placing this as an upside play, now all of a sudden your scratch at 55, if you go with the 60 strike, you're looking at a $100 winner. So I lean towards giving it a little bit of direction just because the market is pricing in some kind of movement. And if you're going to place it to the upside, I think it makes sense to give yourself a little bit of movement to the upside there. So yeah, I'm going to go with this. I'll throw this on. Doing this at highs is a little scary, but again, if we do get that sell-off, we can just hold the 60 call and see if we get a reversal back. But I'm going to go with the slight upside move and assume that, you know, maybe we get this continuation through tomorrow. Intel reports good numbers and the market digests it well, and we get a slight up move, but nothing too crazy. So that's that. We're in. Why do a long put spread in Natty Gas instead of a short call spread with vol so high? Good question. So looking at the debit paid here. So really, I think the question is also, like, we got into this G contract. We bought this put spread. It was a very small put spread. Thomas had a similar one, if not the exact same one. And really, we just wanted to have a risk one to make one. So the thesis behind paying $240 to make $240 or around there is just that if you're wrong, you're going to be out $240 in this case, and that's that. And if you're right, you're going to make $240, which is likely more than a credit spread would offer. So looking at the same width here, we're looking at the 3.7, 3.75. If we go to this G6 contract and we pull up the same sort of trade, the 6.605, you're picking up $1.20 for $3.90 in risk. If you go to the 5.7, 5.75, you're picking up $1.50 for $3.50 in risk. So you'd have to go basically right at the money to get a similar risk reward. And even right at the money, you're picking up $200 to risk $300. So our idea here was, hey, let's reduce our risk. And this can be an issue with out of the money credit spreads in high IV. And this is likely due to the call skew here. So we're trading at 523. Let's just call it 525. Let's look at a 425 option, and we'll look at a 625 option. So the 625 option is trading for 21 cents. The 425 option is trading for 8. So you can see there is almost 3 times the amount of premium on the upside relative to the downside. Now, if you're selling a naked option, you're collecting that, you're taking advantage of the premium. But if you're selling a spread, you're taking advantage of that premium on the short option, but you're also working against that premium on the long option, because now your long option is significantly more expensive than it would be if there was not call skew. So another way to look at it, but that was ultimately the idea. The idea was, hey, Natty Gas is up 25% today in this contract. Let's buy a debit spread that is an equal risk reward. If it keeps ripping, we're going to lose less than a credit spread. And if it doesn't and it sells off, we're going to make more than the credit spread offered us, because the credit spread would offer us less premium. So that's why we went with the debit spread. And sometimes, skew can help you, but skew helps you the most if you are selling a naked option on that side. So in Natty Gas, if I was comfortable being long a contract, I would sell a contract against it above the basis of my long, because that's where you're taking advantage of that call skew the most. When you spread it off, that additional cost on the long option reduces your overall net credit. So something to consider when you're selling spreads on a skewed side where there's plenty more premium than the other side. Yes, like a G6. Yes. You know what's up. Couple minutes left here. Can you set up a new IBIT year-long trade as an example? I'm already in the 60-65, but year-long trades, I don't really overthink it. I would just go to March. You can go to Feb if you want to. But you're going to be in this trade for an entire year. So your actual strike selections don't really matter all that much, because last year in IBIT, I made like 14 rolls. I made plenty of adjustments. So I know I'm going to be making adjustments later on. So my starting position is just a standard strangle at the expected move. So this would be an example. 45.55 strangle for 270 in March. If you wanted to go to Feb, you could do a similar thing. I might bring it in a little bit just to collect some more premium. You could also start with a straddle. Really the world is your oyster with these types of things, because you're going to manipulate the strikes. You're going to roll it out in time. So that's all you really need to consider. But MES, we're in. IBIT, we're still in. And we'll just keep rolling it as we need to. All right, I need to jet out of here. It is 11:30. We have a special edition hour-long segment from Gus and E, the Risk and Reward boys. But if you have any additional comments or questions, I see them in the YouTube chat. You can send them to me on Twitter if you'd like. I'm at Trader Mikey B there. But we'll be back, same time, same place, 11 a.m. Central tomorrow for a full session. And we'll do another Q&A as we always do on Fridays. So bring your questions tomorrow if they're not timely with earnings and whatnot. But we did get filled with Intel, the 60 strike calendar. I'll post that to the Tasty Follow page shortly. But yeah, have a great rest of your trading day, and we'll see you tomorrow. Peace.
It feels good to get smart. Get even smarter with the ultimate how-to guide. Learn 31 different option strategies, covered calls, iron condors, jade lizards. Become a trading mastermind. Get the guide at tastylive.com/guide.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Got big goals for 2026? Get the big deal. Earn a 4% cash match on all qualifying deposits, up to $10,000 total. Plus, unlock 30 days of commission-free trading. Trade with confidence using active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. Earn a 4% cash match when you open and fund a new Tasty Trade account today.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
Earn a 4% cash match when you open and fund a new Tasty Trade account today.
What's going on, everybody, and welcome back to Risk and Reward. Today's Thursday. The market can't stop, won't stop. Got a lot of volatility in the market. We'll catch up on everything. Hope everybody's doing well. Let us know what you're looking at. Let us know what you're trading. My brother Gus, how are we doing today?
Doing good. Full hour. No cuts.
Yeah.
Exciting times.
A lot of volatility in the market at the same time, right?
Yeah. Lot going on. We got things moving up, things moving down. Greenland news making all kinds of shakeups. Tariffs coming off yesterday, or at least being pushed back. No more February 1st deadline. So yeah, quite the series of shakeups that we've gotten here, and excited to dive into all of it.
I mean, it has been. It feels like we're kind of in one of those markets right now where it's like we sell off 200, 300, 400 points, and we're back up the next day. Are we going to be back down? I don't know, but we're kind of in that spin cycle right now with wide ranges. But I'm not complaining.
Yeah, happy I spent yesterday and the day before really just kind of firing on some longs.
Yeah.
The volatility.
Definitely take advantage of that.
It never lasts long.
Yeah, you're able to take advantage of that. I know we'll circle back around to it, but even VIX, right? We had a little bit of a long VIX. I mean, VIX popped.
Yes, managed to get out of the long VIX, pretty much right at the top, right around 20, and then got short again, which has despite the collapse in VIX, has not borne as much fruit as I thought it would on my naked puts here. So we can get into that here in a little bit, but I will probably be exiting those out as I don't expect it to go too much lower. 1540 is very reasonable.
No, I got you. Brandon said kick rocks. We're about to kick some rocks into the platform, Brandon. Good to see you here today, Brandon.
An hour with these losers? Unsubscribe.
No, I mean, with that being said, we'll jump into the Tasty platform here. SPY up on the day. We had a huge gap down a few days ago. We sold off. Then we rallied the next day all the way back towards its highs, pulled back a little bit before the close. And then we're gapping up and then rallying to the highs once again. Not only that, I mean, we're rallying towards the highs, rallying back to the lows, and then right back to the highs. So we might take the morning / pre-market high here soon, maybe. We're close.
Yeah, certainly. Seems like a reasonable possibility. And I mean, just we continue to chase down 7,000 on SPX. Looks like we're right back on the.
Are we right around there?
That. But it's just, I don't know. I'm always curious. It's been a pretty firm psychological resistance right at that 7,000 range. I don't even know if I can call it a psychological resistance. There's been substantiated reasons for why things have stalled out kind of every time that we've tried. We would love to see SPX get over 7,000 here. Crypto still tanking today. We have a little bit of a further pullback going on Bitcoin. There we go. Back under 90K. It's looking bleak. I was getting excited as we were retesting 100,000 and started to look a little bleak since then. The shining star in my portfolio today is Meta, which is flying. They had double bullish news going on.
Double bullish.
Yeah, double bullish. On one side, they rolled out their first AI from their super lab, I believe is what they're calling it. And apparently it's been well received. Additionally, they have struck a deal with Oklo to build nuclear facilities.
Okay.
So that's a double whammy there. And that led me into a bullish Oklo trade that I put on this morning. Oklo just didn't seem to be responding to the news very much. Very rare time you'll hear me say this, but we're bull flagging as well. A little bit of bullish consolidation going on here. And yeah, well, I don't know that we'll necessarily return to the highest highs, retesting 190, 200, those kind of crazy levels. I do think that it's very reasonable we could get back over 100, maybe back up into the 110, 120 range. So I have gone short put vertical there at 95, 100 strikes, March 20th expiration. So looking for
7 days, couple months.
Yeah, looking for a move
time.
back into the triple digits.
Oh, that'd be nice. Got a lot of volatility in there. Oklo. Oklo's one of those sleepers for me. Oklo, whenever I look at the chart, I forget how volatile this thing is and the type of directional opportunities it offers. So this would be a good one.
Yeah, and Oklo isn't. This was one where the whole time it was on the run up. I was like, I don't know how substantiated this is. There was a lot of hype involved there. I mean, it was basically on the same schedule as CoreWeave on that initial giant run, and it was like, I don't want to get long. And it's one of these things. It's the same thing I keep doing with silver, where the whole time Oklo's running up, it's like, oh, well, that was crazy. I don't want to get long at 135. Oh man, okay, well, I'm certainly not going to get long at 150. It's at 200. What's going on?
Right.
But yeah, now that we've had a little bit of a breathing period and there's some substantiated news breaking there, willing to buy in and see if we can't catch a little bounce. It's been a pretty sustained drawdown here. I mean, what is this? 7 out of the last 9 days are red. So just wouldn't be surprised, even just in a normal market health perspective, to catch a few green days in a row here.
Down $100 from the highs on Oklo over here after it went on this parabolic run. I wonder if this is what gold is going to be looking like in a month from now, a week from now, 6 months from now, a year. I don't know, but I feel like we might get a little bit of some topping action like we got on Oklo. I have no idea, but that leads us right into silver just quickly. Do you have any thoughts on silver and gold today? I mean, good Lord. I mean, it's the same story every day, every week, but I mean, it's putting in another high.
Yeah.
What do you say? What do you do?
It's never going to stop.
It's got to be a difficult trade.
I've decided that it's never going to stop. We're just going to go silver to infinity. Everybody if you have one single solitary ounce of silver in your house, congratulations, you'll be a billionaire by the end of 2030. It's absurd. It's absurd, this run that silver has been on, and I don't know what could possibly stop it. Looked like it was going to lose the steam yesterday, but we've seen this story 100 times now with silver, where we get the big down move, and then suddenly it retraces a bit on that down move, and all of a sudden we're back to higher highs. So I have no idea what could stop the run here, and. Yeah,
it's a tough trade.
As I say all the time, gold back to all-time highs as well.
Yeah.
And as I say all the time, I respect anybody who's willing to get long in the face of all this. It's a scary prospect because I feel like it could come crashing down anytime, but it's a broken record. Keep saying.
I think it's interesting. I don't mind if we really beat a dead horse. I wouldn't even say this is a dead horse, but I don't mind if we do, because we're going to look back on this and be like, yo, remember we were talking about silver and gold at all-time highs for like 6 months?
Yes.
And that's going to be for the books.
We're not going to ever have to look back on it because it's going to infinity. It's
right
never, ever going to stop. It's clearly.
Yeah. No, all seriousness, though, this is a tough trade. Like, if you're on the long side, you're on the short side, this is a pretty difficult trade psychologically. All right, so a lot of the points that Gus made, I mean, if you're long the psychological position that you would be holding in there at these astronomical anomaly numbers that we never really see. And then to the short side, not wanting to get ran over, right? Picking up pennies in front of a steamroller. So it's a tough trade on both ends. But I got to say, I mean, if you're long, you're definitely on the better side of the move. So let us know how those trades are going for you.
Yeah, standpoint now to, it went away. SLV $100 target is what the comment was, but yeah, I think that's a very realistic target. And honestly, with SLV, I think maybe 100 could be enough. Could be the psychological resistance of 100 could potentially be enough to at least make this move sideways for a few days. I mean, that's like where the barometer is at now for silver.
That's not in the vocabulary of SLV, brother.
Yeah, if it moved sideways, it would be like the craziest thing ever. If we could have a week of sustained just sideways momentum, not even downward momentum, with the way that this thing has been running. But I don't think 100 is out of the question at all, for real. I know I've been sitting here making the infinity jokes, but I think 100 is very reasonable. Which is just insanity because, I mean, literally 10 days ago, 100 would have seemed like a kind of crazy amount to be targeting, let alone, 30 and 60 days ago. But it just can't stop, won't stop.
No, can't stop, won't stop. And I mean, it even looks like SLV, this product in particular, is a little bit more impressive. I mean, the gaps on this product is wild. The gapping goes, and just, again, same story, different day. Very impressive, though, very impressive. With that being said, we had a little bit of SLV. We're going to be patient with it. We still have 29 days left to expiration. To give it a little bit of perspective with how fast these products have been moving, we sold the February 20th 78 on SLV. right? And that was one of the nice things. Like, okay, we could take a little lower risk by dabbling in some of the out-of-the-money calls instead of taking the futures contracts, because if we were to short the futures contracts, right, you might be getting a call from your buddy Margin, here soon, depending on how, these products are going to continue to move throughout the week. But we sold the 78, 78 right about here. So what, just about a week? And now we're trading at around 87, just about 10 points higher. So nonetheless, it does seem that this is in play, like SLV is in play. I think CVX, another one I wanted to touch on, a little bit different, but kind of still in the same baskets
Chevron,
of these underlines that have been in play with some of the natural gas moving to some of these other oil names. SLV, CVX kind of lands in those two.
Natty Gas going bonkers. I keep just seeing everybody saying, like news outlets, that is mainstream media, saying cold front driving up natural gas. Is that really why? I don't believe that's really why. I mean, it's Greenland stuff too as well, right? I mean, or am I tripping? Is it really just a cold front causes this?
I mean, I bet there's more to it than that.
We're going to have to use a lot more.
Yeah, of course.
The cold front. My Weather Channel app sent me a notification.
No, but I see the point though.
The wind chill is going to be negative 32 tomorrow, so I'll definitely have to turn the heater on.
Yeah,
but
I mean, so I have no idea, but kind of my same stance for literally any information that we get in the market. The way that I see it is like the information is just the straw that broke the camel's back, and it could have been any piece of information.
Yes.
So I think if natural gas is going to go up, I think it's for whatever reason it was going to go up for, and then we just attach whatever big headline that makes us sound good and feel good.
Yes.
We like to know why for a lot of things, but I just think that we scapegoat every headline.
Well, and it's all psychology too, right? I mean, the entire market is driven by the psychology of individuals, and therefore the psychology of the market. So perhaps if that's all it takes. I shouldn't even say perhaps. That's all it takes is enough people to believe that a cold front could do this for it to actually, substantiate it in reality. Nice boy with some great commentary on Oklo here. Can't be cheap to make those reactors. Imagine the eye-watering loans that they have. Can't be bothered to look at their books for them. Yeah, I'm sure. And to your next point, what's their PE ratio? I've done research here. Negative 179 is their current PE, because they are not a profitable company at this time because of the loans that you're referencing. Is there something special? Wait, why put money with them? Are they special or something? Because the market cares not for frivolous things like profits. Okay, the market cares not for things like PE ratio or valuation. Okay, the market cares about clout, and Oklo has it right now.
I got to check the temperature. Put a 1 in chat if you get the meme of that reference. The reference of that meme. I got to check the temperature right now.
Yes,
because that was good. That was good.
But it's it's absurd. But I mean, it's all just. I don't know. I feel like we're in some of the most speculative, forward-looking times that we've been. I mean, I equate it to the dot-com bubble a lot, and I don't know that this is that we're necessarily in a bubble, but with the way that everybody is, speculative, there's so many companies that are just have PE ratios, flying like over 200, 400. Oklo just keeps on moving up, and obviously has had a bad run since the peaks, but I think will continue to move higher despite having a deeply negative PE ratio. Yeah. Everybody is just trying to price in the relatively distant future, and I don't mean 50 years, but I think we're 10, 15, 20 years from nuclear energy becoming like a super mainstream thing where we have large cities that are powered by nuclear energy, and I understand everybody's excitement for it. I just think the excitement might be a little too early. But that said, I'm happy to trade that excitement.
But that said, I'm wrong.
That it presents. Yeah, exactly. But yeah, I mean, all these nuclear companies have just gone nuclear. I mean, it's insane. I mean, GE Vernova, the year that they've had. Is pretty crazy. It's everywhere.
No doubt.
0.9.
Take a look at the watch list here. See some of our biggest movers on the day, and also take a look at some of the premium that we could finagle our way into. But just looking at the high options volume watch list, we go from highest to lowest. Let's see what's been moving the most on the day. We got some NASDAQ, some SPX, some Russell. We got some Meta. Right, we got Meta on the board. Not surprised by pulling Meta up right off the bat. I mean, that's a really aggressive move to the upside. What?
I'm just seeing this big gap on Alibaba for the first time as well.
Oh yeah, some of the Chinese names.
Yeah, unsure what the catalyst is there. If anybody knows, feel free to fill me in. I hadn't caught that today.
Huh? Kind of want to get short. It's just.
Oklo reminds me of Aerotine from Wolf of Wall Street. Oklo office building is just a tiny little office.
Is it really? Did somebody do their research on
I believe that. I'm willing to believe that. And I think there's probably a fair number of companies that fit that mold to this point, where everybody, has in their head that they could do big things in the 10 to 15 year time horizon, and people might not even be wrong in that regard. But I just think a lot of the time the excitement is coming too early. That's something that I've been saying about Palantir for I don't know, 6 to 9 months now. It has begun to cool and run sideways really since mid August. We've been moving sideways on Palantir. But yeah, that was one where it's like we're talking about a $400 billion company that does $4 billion in revenue a year. Like I understand that Palantir could take over the world and be this insane military industrial complex powered by AI and all these crazy things, 15 years from now. But I feel that we're pricing in too much of that information right now. And the market has finally begun to agree with me in this little bit of sideways trajectory that we've seen out of Palantir.
100%. I know Palantir was one of the first names I think I traded on some of the options, but a lot of volume, a lot of liquidity, really solid IB rank. I mean, it's a very tradable product.
Yes, absolutely. Yeah. And honestly, I think it's even a little bit easier to trade since it has found this range and begun to channel a little bit because the volatility is still always there, and you can get these big runs and big returns in a very short time window. But at the same time, it's not this thing where it's just constantly moving up, and every single next candle makes you just a little more scared to want to get long against it. At least that's my personal sentiment. I know plenty of people hopped in the middle of the Palantir run and did a lot better than me, because things can keep moving.
Most of the time, what I recognize with my behavior is I either catch the whole run or I catch zero.
Yes.
It's like if it runs without me, I'm like,
I would say the same thing.
I just watch.
I'm very seldom playing continuation. I'm almost always playing reversal. Yeah. Like if I'm getting directional. Yeah. Is kind of just the way that I choose to attack things. I don't know. I mean, it's just there's definitely arguments to be made for both, but my philosophy has always just been that I feel reversals are just a little more comforting, especially when you're looking for a large reversal. You have a grounded reason to believe that a reversal could happen. It just doesn't take as much. It's if something runs down $20 and then moves back up $2, you consider that to be confirmed and you hop in, and then you catch the next $8 and you get out. That's a lot less scary to me than when something is running up $20 and it could go up another 10, and you might want to get involved and try to grab that 10. I don't know. It's all just the psychology of it, and everybody has their different reasons for doing things. But it's semi-contrarian, but also I'm usually not. I'm not the biggest contrarian in the world either. I'm not jumping in. Yeah, I'm not jumping in trying to short Palantir 100 times over the entire time that it's running up the way that I'm doing with silver right now. But it's just there's too many good stocks to trade that do too much moving to try to get involved with things like that. Has always been my take.
I hear you. I was actually watching a podcast the other day. It was from I totally forget. But he was talking about how he enjoys shorting parabolic type moves. And it's kind of interesting. We're seeing a lot of like parabolic type behavior in the market. And I think they were talking about something really similar about when things are getting to the top, like parabolic moves, not just like a breakout, like parabolic moves. These things have been running for days, weeks, and eventually it has to top out. I think he has said one of his best trades, what was it on? I think it was NVIDIA, I think it was. And when they were near the top, and then he started to buy the calls, like 10 calls, whatever it was, buy the calls. And then just in case, if it continues to put in a new high before, sometimes there's like a blow off, so like an aggressive move off the highs. So just in case of that, then they'll sell the shares at the highs just in case the market continues to keep running. So it's like, his kind of way of trading the parabolic was buying the calls just in case it's not the exact top. You catch a little bit more of the run. Typically, you could see that in your behavior if you're typically early on trades. It's all personal. We're all different. And then anyway, selling those shares because you have those calls at the same time. So that really kind of locks the trade in a little bit more. And I don't know, it's difficult to hop on those big moves. I think I'm just thinking about silver right now, silver or gold, and like how we can kind of manage that, because I think it's gonna be fun into these next couple weeks, right? Like I'm not doing too much in silver, not too much in gold right now, but this is something that I think we can get a little creative with. So we're gonna be patient, but we'll continue to stock it. Maybe we I don't know, maybe we sell something a little further out in the day as we rip to these highs and to these numbers that we've never seen before. So
yeah, I mean, I can tell you right now, I'm going to try shorting silver for the 4th time. At some point, I am going to try to do that because it's just, it's become so insane. And I don't know, and I totally agree with the getting opposite parabolic moves, but I find that I'm much better at that in the short term than I am with a longer term, more sustained parabolic move to the upside. I don't know, there's just more timing, more room for error. But some of the best trades that I've ever made and still do make consistently are just overreactions to things, whether that be, a bullish or bearish overreaction. But we live in this age of instant information, and there's so many retail traders in the market trying to do things that often, and particularly after earnings calls, you'll see this just giant gap up based on just a narrow beat and pretty good guidance. But it's like, does that warrant the 8% move that we're getting? It almost never does, and I love getting short in those spots.
Yeah, 100%. I mean, earnings season coming back around too. Maybe we get some more fun names to check out. I know all of last year I didn't take too many earnings, but maybe this year's going to be different. It's kind of wild. Another year has gone by. Can't even believe it. But no, again, silver at these highs. This is what we got going on in the portfolio. We got a little bit of Netflix, still being patient in here. What did we do in Netflix? We sold an out of the money put spread on Netflix, $5 wide. We collected about $1 and some change on that one. What was that? We collected $1.65 on that. So not too bad. We still have 29 days left to expiration. But no, Netflix has been taking a hit. I don't know if any new news has came out or any new headlines has came out about Netflix and Warner Bros. But it hasn't changed the sentiment over the last couple months on Netflix at all. So that's where we're at.
I saw Paramount today said that they don't believe regulators are going to allow Netflix to acquire Warner Bros. At which point I say, look in the mirror, big dog. What do you mean? Like, you think that's a bullish variable for you? If you think they're going to block it, Netflix is trying to buy less of the company than you are. And right. Netflix is, I would imagine, at least in a monopolistic sense, probably has less of a monopoly on media than Paramount, which has all types of offshoot companies and all these media companies and news outlets and everything. Netflix is just Netflix.
That's so valid. They're just more consolidated into like a one framework business, kind of what they do. They're one-stop shop. 100%. Yeah, that's a good point.
Absolutely.
That's a really good point.
Some funny comments going through here. SPX high day, very nice. I'm buying some space ETFs for similar reasons. They might come good in a decade. Yeah, absolutely. And I mean, I think that that's a totally valid thing. And it's just, it doesn't even, to me, it's not even about what could or could not happen in a decade. It's about, in a trading sense, what the public thinks will happen in a decade right now. And because that is the way that things are going to move, and what we've been seeing with the AIs, with the quantums, with the nuclears, with the outer space, it's all just a perception is reality situation, and you have to trade that reality that is defined by perception, even if you think the perception may be incorrect.
You just broke down life.
It's true. Did Gus say negative 32 degrees tomorrow? Don't forget your jacket. I will not.
Did you say negative 32?
Yeah, that's the wind chill.
Oh my gosh.
Wind chill tomorrow. Yeah, it's 30-mile-an-hour winds, negative 32.
That's different. This morning when I went out there, I hid behind a pole real quick, and I went and I felt the gust of wind. I literally went back behind the pole. You know that Shaq meme when he's like, that was literally me this morning hiding from that gust of wind.
Gus, you're short silver. Unfortunately, yes. For the third time, I am short silver. I just keep trying. I love pain. I'm a sadist as it pertains to silver. I don't know why I keep trying it. I'm totally going against my own line of logic that there's so many other good things in the market that I could be trading. But every time we move up another $10 in SLV, I'm like, oh, this is so juicy. It could collapse anytime, and it never ever does. So anybody who's been short puts on silver at the same strikes as me, you're welcome for the
liquidity.
For the free come up. Yes.
Free liquidity, right?
I'm happy to take those off your hands. Man.
No, I love it. Love it.
It's insanity.
Quickly, off the front list of the high options volume, we got a little bit of Eli Lilly. Did you bring that up earlier today?
No, Novo Nordisk maybe.
Novo Nordisk.
I brought up.
What was the ticker of that again?
NVO.
NVO.
Yeah, NVO having a solid little run here off the lows.
That is gapping and running, gap and go.
Putting in some new highs for the day. This nice little run that Novo Nordisk is on puts me down only 80% on my Novo Nordisk position. So we're coming back, but we got to start somewhere. In a world where I managed to profit on this position, it starts like this. So I'm at least a little bit pleased with how that's going right now.
All right. What's the best way to eat an elephant? One bite at a time.
Yep, absolutely. But yeah, so Novo Nordisk, thank you, production team. But happy to see that logging some highs. And then also UNH having, I was gonna say having a good day, but I see it's moved well back down.
I was gonna say having a good day.
In my portfolio. No, we're good.
Good.
I just missed it. Yeah, having a good day here.
Actually, but they're having a terrible day. They must be having a bad day in that office today.
Yeah,
I wonder.
Been waiting on this to move forever.
For like some of the most, we'll get back to it. For like some of the most popular tickers, like I wonder how their HQ is. Like legitimately, just watching people talk about your company online.
Yeah.
Like, things are going up and down. Things are volatile today. So I think that's kind of a funny perspective.
Absolutely, or on Twitter or whatever else. Yeah, it'd be really funny if you like have the inside information. Like, say your earnings is tomorrow, and you have the inside information on exactly how it's going to go, and you could just hop on Twitter and read everybody's like bad breakdowns of exact. They're like, oh, I see the matrix on what's going to happen with UNH earnings, and they just fire off like 5 bullet points of BS, and you're sitting there and you know what's going to happen.
Yeah, and you're like, they're completely. Everyone just says whatever. I bet they sit behind there like,
oh, I'm sure.
This world is crazy.
Yeah, you're chuckling about it.
Oh yeah, Micron. I mean, there's so many tickers at their highs. There's so many tickers we pull up that look just like this. So, with that being said, 38.5 IV rank, 25.5 volume traded on the day, pretty liquid. Just another difficult one to trade at the highs.
My ex-wife hid behind a pole. She didn't even know what cold weather was. I'm picking up what you're putting down, Brandon.
It's good.
A hoe never gets cold.
Not out here.
Yeah, we're early today, Theta. We got a full hour, 11:30 to 12:30. Marathon, baby. It's fun.
No, yeah, we're in here.
Yeah, but UNH earnings on Tuesday, so looking forward to that. And then yes, Micron. This is it's been on a crazy run as well, and kind of one of the quieter ones.
It has been quiet. Has it been quiet, or is it just quiet relative to what's been moving lately?
Yeah, certainly just quiet relative to what's been moving. It's it's screaming as loud as it can, but it's just in a room full of people that are much louder who are also doing the same thing.
No, I was even just looking at the March strikes, $10 wide, just a little bit too large for me, so I'm not gonna do anything in here. But definitely a lot of names moving. Like a lot of these contracts have more than enough premium traded in them.
Yeah, MP. Yeah, I saw MP is a big mover today. That's moving on the Greenland situation.
Oh, is it?
Yeah, this was much higher amid the quantum and materials run that we saw going in early October. Actually, very, very, very similar chart action to Aklo here, even though they're not necessarily tied together. But yeah, it's taking a nice little move. Yeah. ASTS is another that skyrockets daily. Is that a pun intended?
I mean, I don't know, but I mean, it does look like it rockets. Maybe not daily, but maybe monthly. It's looking like you get a lot of volatility to the upside on ASTS.
Yeah, ASTS is another one with just great volume and volatility. A great vehicle that you can trade in both directions. Although it has obviously been working up in aggregate, staunchly throughout the last year and change since the beginning of 2025.
Oh yeah. Very low IV rank right now. We got earnings around the corner March 2nd, so we'll keep an eye on it. What's going on, Big Deal, here early? What's up?
Somebody named Pun Intended popped into chat and said you rang. That's awesome. Oh, that's so good.
That's good.
What's going on, Big Deal? Yes, we did start early.
Just peep that.
Yes, Andrew, I am a glutton for pain. And you got to have a high pain tolerance when you trade when you're more into trading reversals. Like I was saying earlier, sometimes you're just going to get burned, and the continuation people win out. ISRG, I saw some discussion about this being had in Mike's chat as well. Wow, very interesting chart action on this one. Yeah, this is weird. This is a big unfilled gap right here. Like this would scare me a lot as it pertains to trying to get long on this. But I will say, in broader strokes, I do not know anything about this company, Intuitive Surgical. But yeah, this is a wonky little chart.
That's a massive gap. I wonder what news they had there.
Yeah, fascinating stuff. I'll shout out my favorite penny right now, Resolute RZLT, logging another good day for me. I've mentioned this one a number of times in that I bought it when it took this gap down without doing an ounce of research into what they do. I just saw it pop up on the biggest movers list, and it was down 92%. And so I did like 2 seconds of digging just to make sure they didn't declare bankruptcy, and then I was like, screw it, I'm getting long. So I have 100 shares loaded at $1.29, which is obviously now almost a 3x. Then additionally, I have a naked 10 call, which has 10x. So I'm quite pleased. And I'm just gonna keep holding. I'll actually take another 50 shares off here. That's kind of been my profit taking angle. Is just take some shares off every now and then, and let the option continue to run.
So is TK Tim Knight? Is that who we're referring to? I've seen it a couple times in chat.
I presume so. Oh yes, TK. Yeah, would be all over this gap. We're talking about a TK that likes charts. I only know one of those.
Yeah. No. Tim Knight. I'd be really curious to see how he perceives a lot of these gaps in the market and how he kind of approaches it. Because honestly, when it comes to do with gaps, like I'll consider it, but not much I really do with that information. But would be interesting to hear for sure.
So would Tony for different reasons. Stop it. Naughty. Yes, TK equals Tim Knight. Good clarity. We got tickers for our host now.
I like that. We got TK ECGD.
What?
GD? You're GD.
Oh yeah. Okay. You rolled two together.
Yeah.
You're EC.
Comma,
I'm GD. Okay.
TK, comma.
I see. We are ECGD.
ECGD.
Yeah.
GEC, ECG.
I'm with it.
EDC. You know
like maybe EDC. I could just be ticker Gus.
You haven't been to EDC, have you? You're not a festivals guy, have you? Are you?
No, I haven't. I'm a big festivals guy, but I have not been to EDC.
Interesting. Total knockout, yeah, something like that. We can go ahead and jump to the TradingView platform, and we'll go ahead and take a look at some of these metals and kind of see where a lot of this trading activity was taking place through a lot of these products over the last 24 hours.
Oh, Bitcoin, must you remind me?
Any wheelers in here? It's a wheeler. One of my friends, just sister's friend's best friend or girlfriend's friend is named Wheeler. What comes to mind?
That's a distant connection there. We're playing the 7 degrees of separation.
Friends, pets, rocks. No, just taking a quick look at Bitcoin.
Anybody ever have a pet rock? Share in chat. If so, let us know what his name was.
I know somebody's had a pet rock in chat.
Yeah, surely somebody's had a pet rock. For sure.
I'm not judging either.
We're too young for the pet rock craze, but I'm well versed on it. If you had a pet rock, let us know.
The Guster, if you're not into the whole.
I've gotten that before.
It's going over my head. I'm not gonna lie.
Oh, the whole brevity thing. Yeah. I'm not a brevity like
the Guster.
Yeah, I'm whiffing on that too. I've been called Guster before. That's in the vernacular. Gus index, not just a small little.
Are we trading today? GUS. We're getting in some GUS.
Yeah, I'm long Gus.
Yeah, I do the wheel sometimes, but more often I do a super wheel. I think the wheel strategy was the first option.
Any wheelers
I think like the wheel strategy. Yeah. No,
we whiffed on that. We started talking about pet rocks.
Yeah, I think the wheel strategy was one of the first option strategies that I think I came across. I think it's one of the more popular ones, maybe because it's a little bit more passive. It's not as scary getting into these wheel strategies.
Yes, absolutely. Yeah, that's one. And I've said this before. My entire options education was just so backwards. That actually was a little bit later stage for me. But yes, if you're doing things the right way, I do think it's a good one to stumble across early on in your.
Yeah, this was just by accident, by what people were marketing, putting out there. So. Anyways, with that being said, we got some Bitcoin action going on over here. It's been a little bit quiet. We've been getting a lot of consolidation from the end of November. So the time frame that we're looking at right now is the daily chart. And what that means is each candlestick that you see on the screen is representative of one single day. So I know sometimes we have on so many different charts. We just kind of flip through them without even saying anything. Like sometimes I'll just go to the 5 minute, the 1 minute, 15 second. You don't even know what chart we're on sometimes. So I'll preface that a little bit more. But
that's the New Year's resolution for you? Is talk about the time frame?
I guess so. I guess it is right now. It just popped in my brain right now. So I guess it is right now. We'll go ahead and do that. But with that being said, just looking at the daily chart, we just took the fixed range volume profile, and what we did was we just took the highest consolidation level that we have on Bitcoin right now. This is an interesting one because Bitcoin kind of moves like this, right? Like Bitcoin kind of moves like this. Like it's not the same as a lot of the individual assets that we trade, unless it's the last 6 we've looked at.
Serious TA here, people. Bitcoin kind of moves like this.
It does. It kind of moves a little bit different than it moves a little bit different than like a Tesla or whatever it is. This Bitcoin moves a little bit like a Ponzi scheme. If we're keeping it a buck, like that's how it moves. But with that being said, what we're going to be doing here is what we're looking for is finding just the levels that have the most volume traded, especially near these peaks, right? Because if we get any type of sell-offs beneath here, we have the potential to run towards our next high volume node because the market likes to seek liquidity. Those high volume nodes hold the most liquidity and give large players in the market the best ability to even fill their positions. So they need guys like me chasing the market so they can fill their positions. So whatever it gets down there, we'll take another look at it. But that's the gist. That's what we're keeping an eye on. That's what we're looking at right now. And this volume profile right here is just showing us the chunk, 70% of where the trading activity took place. So we're just going to be using that as a benchmark as we move forward over here on Bitcoin. But not too much of a story here. Just kind of been consolidating the last really 2 months. I mean, I'm just thinking about like Bitcoin traders or crypto traders. I mean, I can't imagine trading in the same range and that small of a range for literally 2 to 3 months straight. So I'm just kind of thinking how they approach this market. It's a market you definitely have to have a little bit more patience with in terms of your sentiment or bias, I would say. But current thoughts on some Bitcoin.
Yeah, absolutely. I just saw a video yesterday from like, I don't know, mid 2000s of this like 16, 17-year-old kid. And it was his mom filming him, and she was like, "What are you doing?" And he said, "I'm buying my 1 millionth Bitcoin." And she was like, "How far in are you on this?" And he was like, "Oh, a little over $1,000 now." And so then that led me down a whole rabbit hole of research, and I found that he sold at $20, and it was 20 million. $1,000 into 20 million is a insane.
That's
gain.
phenomenal.
But I just say this as a reminder that people always will talk about, oh, this so-and-so person loaded on Bitcoin in 2007. If they're still holding, this person's worth $200 billion. They're not still holding. I guarantee they're not still holding. There were so many exit times before now. Anyone who had Bitcoin at 1 cent has liquidated by this point, and rightfully so. Yep. Rightfully so. Of
course.
That guy could be a trillionaire or whatever it would be right now, bag holding 1 million Bitcoins, but $1,000 into $20 million. Who's mad? Who's mad at that?
No,
return?
I mean, if you do that, and
life-changing
you don't,
amount of money. What are you going to do?
Bitcoin is such a weird thing to analyze. Not that we shouldn't. It's just not like any other thing you would typically analyze. Sure. Yeah, it's a lot different. It's a different product for sure.
Absolutely. Theta also informed me that I missed a Big Lebowski reference. My father will be so ashamed. Sorry.
A big what?
A Big Lebowski. The Big Lebowski.
Bro, I hate that these always go over my head.
That was the brevity thing that we were discussing earlier. Was a Big Lebowski reference that I whiffed on.
Yeah, that totally went over my head. I knew it was something. I just wasn't catching it at all.
Yeah. Freed, the trade desk is working as hard as they can out there. The hold times are just long right now. There's a long queue. Dearest apologies, but I can assure you I can see them right now. They are working through people as quickly as they can. It's just a lot to manage, but they'll get to you as soon as they can. And then I saw a good question. Curious why you would pay exercise fee over just buy back and resell the put. That's a fine question. I mean, yeah, I suppose you totally could. I mean, I guess it just comes down to, well, I don't know, because if you're going to rinse and repeat, well, yeah, but you're talking about buyback and resell. That's a good question. I mean, I suppose you just totally could. I don't really have a great answer. My girlfriend broke up with me because of my manhood, and I'm like, how can you let something so small come between us? Where's that coming from? I wish I didn't start reading that. I was too committed once I started reading it out.
You already went to the climax.
You wouldn't. That's why I don't like the wheel. Yeah, there you go.
I reckon
a fine point.
I reckon wheel would be good on Bitcoin related. Not tried it. Something like iBit. Yeah, check out iBit. Check out Beto. Check out whichever ones have more premium. Those are typically going to be a little bit more attractive for doing something like that. And then, I mean, something that you can do for Bitcoin, at least if you're not trading it directly, you can still do your analysis on something like Bitcoin and then trade off of iBit or Beto because they're highly correlated products at the same time.
Yeah, Theta Trader making a great point here too. Could have bought Apple for 20 cents or whatever. Woulda, shoulda, coulda. Yes, absolutely. And everybody will do if I had bought $1,000 of Apple at IPO, I'd have $8 million. No, you wouldn't, because you would have sold 50 times before right now. You would not still be holding your original Apple position all the way to this point. It would, and no one could fault you for doing so. It would be irresponsible to do so. You'd be talking about holding Apple through forcing Steve Jobs out, the dark ages, Steve Jobs back in, stock goes flying. But there is so many points along the way that you would have sold and should have sold and locked in a very nice profit before right now. It's just, it doesn't make any sense.
Just taking a look at Platinum over here. It hasn't been getting a lot of love, but Platinum is looking like it wants to set up for a little bit of I wouldn't even say a breakout, but just to take out the highs at least.
And we always say it hasn't been getting a lot of love, but somebody's showing it love because it's always at all-time highs.
No doubt. You're right. That is an understatement. Should have bought all the gold today. LOL, no matter the price. I know. That's a tough one, Brandon. I don't even want to hear gold for the next 20 minutes because that's a fresh wound still. It's a difficult one to watch, to be honest.
I've had Apple since $30. Hell yeah, Jambo Life. Congratulations to you. That's a nice position now, I'm sure.
Yeah.
I couldn't even do the split adjusted math on how many times your shares have probably multiplied by now, but I would assume you're sitting on a nice chunk of change there. That's awesome.
Gold ripping to the highs as we speak. Yeah.
Oh, the moon.
Yeah. That's what I was just about to.
Yeah, we didn't have the moon on the chart for a little while.
It's actually
yes.
kind of cool. It feels like those flags that you plant, the markers, whatever they're called. They're like markers whenever you're traveling or something, or you just plant it to make sure, I was here, or somebody was here. And
Yeah.
that's exactly what this feels like. Right?
Yeah, this moon, for those who weren't here when we initially put it on, this was something when gold was at GC was at like 3,600 maybe, and we were like, oh my gosh, this run is insane. We can't believe it. We put the moon at a level that we believed would be like impossible to attain. We threw this so far above where gold was at the time, and we were like, haha, yeah, the moon's up here. It'll never get to the moon. And then it literally went directly through the moon, and it's gone so much higher. We are double the price, or I suppose double the gain would be a more accurate expression of the moon right now. It's bonkers.
It's nuts.
Yeah, and no respect for value areas. Just disrespectful.
We haven't even had any value areas, actually.
Yeah, it's just been straight inbound.
Yeah, I think straight inbounds for real, straight price discovery, no joke. Because I think the last value we had was at 3,335, and we've been in straight inbound, straight price discovery since then. So
and
we're
we
just
keep on discovering new ones.
Yeah, we're surprised. Yeah,
we're discovering how high this can possibly go.
We definitely are. Through the moon, right to the other moon. Check out.
Yeah, we get like a galaxy or a star or something. We gotta move our goalposts here.
Oh.
Through the moon, right to Uranus. Well put, Stephen.
Let's check over here. I wish I would have had the trades to be able to show over here and the executions on here, but we did have a lot of great opportunities for the day, so we can do a little bit more analysis on kind of just how NQ's kind of been lining up for the rest of the week and then heading into next week. Let's go back to M&Q. Old faithful. Old faithful.
Old reliable.
Old reliable. You think Tim Knight is slinging minis in silver?
Sure.
What you doing, Tim Knight? What you doing, Tim?
It's got a chart. I think Tim Knight will sling it.
I'll be slinging the minis in silver.
I think them's the rules.
No, taking a look at NASDAQ here on the daily. Just going to clean this up a little bit. Clean that up, clean that up, clean that up. There we go.
Interesting. Interesting on the humidity comment, Theta Trader. It's you get higher indoor humidity when it gets this cold outside. That makes sense. I have a humidifier. When I woke up this morning, my entire window was like
was it foggy?
Completely fogged. Yeah, it was funny. I was confused because I obviously don't sleep with my contacts in. So I woke up and opened the window and it was foggy, and I was like, my vision is so much worse. Like there was like 2 seconds of panic.
I get a new subscription right now.
Yeah, before I
looked
up and I could see it.
Subscription.
Yeah, subscription.
Let's just take a look and see what NASDAQ's been up to the last 45 minutes since we've been on. I mean, wow. Not much of a rhyme or reason to the price action today. A lot of traps in the market, but a lot of volatility. The market's been moving very quickly. Gas heat gives 20% humidity. Gas to a big deal specifically.
Yeah, I guess that makes sense. It has to. Gas produces some liquid as it burns. I don't know how it works, man. I push the buttons on my thermostat.
Right? Solid liquid gas.
Solid liquid gas. Those, three states that matter.
Yeah. Dang, that kind of scratched something in my brain. I don't know why. Let's see. I know we have a few hours left to market open. It's going to be interesting, right? Because we rallied all the way over here towards these lows, and now we've been trying to develop a little bit more of a range over here towards these highs. So we will keep an eye on this as well.
Yeah, I'm liking this longer term volume profile here, though. I mean, you can see all the different areas of value that have presented themselves here in the skews.
100% of.
TK is buying long puts 90 to 120 days out and breathlessly anticipating a pullback. I live in South Florida. What's gas heat? Man, I was thinking that yesterday. I mean, looking at the map of the country, I mean, it's literally just like South Florida and Southern California are the only people who are spared from this cold front that's rolling through.
I didn't turn on my heat not a single time the 4 years I lived in Florida.
Yeah.
Not I don't think there was a single time it was needed.
I would have to kick it on every now and then in Texas. Like just occasionally we'd get down into like the, you know, like 40s, usually not the 30s, but we'd get a few days in the 40s and you'd have to turn it on. But I'm a cold inside the house person, not a freezing cold, but if it's in the 50s, I'm happy to just open my windows and turn everything off. I like that little fresh air. Cool fresh air is good for you.
No, 100%. I'm in the same boat over there.
I do it here too, but then I'm like, is this Chicago air really that fresh? What's the standards on fresh air? How many ppm before it's not fresh air anymore? Yeah, that's right. That's the right metric. I know air quality metrics.
Market might have a difficult time at these highs over here because this is a developing value. I know we haven't used that term too much, but the developing value is just where you're starting the value from to where it's at right now. So this volume profile, as of right now, would be dynamic because we're taking it from the morning's price to where we're traded at right now. So this volume profile is going to change depending on where price goes and depending on where more activity is taking place. But with that being said, once again, we have this massive gap here. So if the market, for whatever reason, wanted to decide to fall, there's a very thin amount of liquidity sitting down here. So, I mean, it could do it. And the morning lows wouldn't be too much out of the picture. But, I mean, that's if we can even get down below 25,540 before looking for something like that. But again, as for today, especially with all the Greenland news and things of the sort, I want to push it too much.
Yeah, this is an interesting exercise as well. Can you scroll back to where we can see that the volume profile? Because I would think that this would actually you would break this off as two ranges of value up on the top there. You know, one for those top 3 candles, and then one for like the bottom 5, excluding those two in the middle. Yeah, but
you definitely could. It's subjective.
It's just subjective. Okay, sure, but yeah, it's just it's interesting.
Subjective to you, your process, whatever it is.
Yeah, but I suppose the candles reinforce what you have done much more than doing.
Yeah, for the most part.
Fascinating.
Yeah, I preferred SoCal areas in the 70s. You could see it. You could taste it. You knew it was there. Is there a waterfall on natural gas right now? There is.
Bang.
Let's get to that. Is this the NG we want to be seeing?
Yeah, I was going to say, is that. The differences are, that's it. So, I mean, yeah, same diff, but has come down pretty aggressively. I'm looking at 1-day candles over here. It's just Doji City. We, made a move up to, 37.10, and then we just cratered all the way back down to 35.08.
Oh, wow, yeah, getting hammered. This is a 30-minute chart we're looking at right now. So each candlestick represents 30 minutes here. So the last 2 hours, we've been really selling off from the highs.
Yeah, waterfall is well put. That's a good analogy. Plasma too. You guys are getting scientific over here. I saw a big deal talking about entropy. This is good. Got a little chemistry class going on the side. I was never good at chemistry. Physics was my thing.
I was more biology.
Chemistry, stuff too small. I like.
You know what's funny?
Physics, stuff bigger.
Physics was fire. I just wasn't that great at physics, but I thought physics was fire. I was a lot better at biology, but I liked chemistry more.
I did well in biology.
Yeah.
Just never.
I liked chem though.
Never really spoke to me, but didn't. Chem is like the one STEM class that I just could never quite get down.
Yeah.
Always messing.
Gotta watch out for that. Friend pulled up carpet and had mold by the door. Air leaks out the bottom of the door. Yeah, no. Definitely good to know. Learn from that. Let's go ahead and check out gold quickly as we continue to rip towards these highs.
Having a look at what else we got moving here. I got long some Amazon at the bottom the other day. That's they're logging a good day right now. What's Google doing? Can we
some Google
look at that? I haven't looked today. Yeah, red against the green day in Meta. I was the analysts with Meta outside of the new AI developments and the partnership with Oklo and all that good stuff. Analysts are pointing out that Meta and Google should probably be pretty equally valued, and they're not right now. There's an imbalance there, and so there was some. I was reading a paper that was basically suggesting that people should rotate from Google into Meta because that's where the gain upside is. It's interesting to see that manifesting today, where Meta is totally flying and Google's coming back down a little bit.
There's an imbalance.
There is.
It's looking to seek balance. It's
alleged imbalance.
It's looking to seek equilibrium.
This is not my TA. I'm passing along the TA of people who are probably much more qualified than me to be giving it.
Oh no, I more so thought you meant with the actual companies themselves outside the market, but. In terms of the valuations, I'm not even sure what the valuations of Google versus Meta is.
Yeah, Google is in a really weird spot to me. I don't know. It's strange. Google is one that I thought that with this AI revolution would kind of begin to collapse. And collapse is a strong word, but stagnate a little bit. I thought it would start to get left behind in the Mag 7. And that just hasn't manifested at all. Everybody's all in on Google. I guess they're doing well with their pivot, or at least the market perceives that they're doing well with their pivot.
Yeah. Perceiving it at least.
Meta currently at 1.6 trillion, and Google is at 4. Actually, Google has moved into the 4 trillion club. 4 trillion on the nose as of this very moment, right now.
Which one is that again?
Google.
Oh, okay.
Them and Nvidia are the only two members of the 4 trillion club right now. Apple has slid off that a little bit. So yeah, I mean that would be insane. I mean, you'd be talking about Meta doubling to chase Google's valuation down. I don't think we're necessarily going to see that happen, but I do think that a $2.4 trillion difference between Meta and Google probably is too much. So something's got to give there to me.
You know who hasn't been in the headlines like as much as of late? I feel like Sam Altman and OpenAI. I feel like it just hasn't been in the headlines as frequently as they really were over the last.
I suppose that's true. The last headlines I saw in that regard was that ChatGPT is doing ads now.
Okay, I didn't recognize that.
Yeah, they're going to let people buy ads, and then people who don't have ChatGPT Plus Premium or Enterprise will be fed ads similar to like when you Google search and the first few results are sponsored or whatever. If you have ChatGPT, the free version, and ask for some recommendations for a kitchen table, you'll get paid results pumped in there. So
dang, I feel like that.
Beware.
It's probably maybe a good business. I mean, these are some of the smartest people, so I assume.
It's a fantastic business idea.
Checked all their, but for the
user,
for money, of course, yeah. But for the user, of course,
it sucks.
Yeah,
for sure. I've had Pro forever anyway, so it's not going to affect me too much. But I just feel I don't know. I guess OpenAI probably thinks in their mind that other companies are going to pivot into doing the same thing, because I think that that's the only reason that you would make this move. Yeah. Because I feel that lots of people perceive AIs, large language models, chatbots, as perfect substitutes with one another. Like in an economic context, they are pretty much perfect substitutes. And so I feel that if you're a ChatGPT free user and suddenly you're getting all these paid ads and realizing it, because they're going to have to make it clear that they're ads, per regulations, it'll say it's an advertisement or sponsorship or whatever. I don't see why people wouldn't just rotate into whatever they perceive as the next best thing, be that Claude or Grok or Gemini or whatever they like. So yeah, I don't know. I think it's an interesting play, but I think that OpenAI probably rightfully believes that everybody else is going to move into that for their free versions as well.
Hey, well, they got a great head start. So it'll be interesting to see if they can keep the lead in the next 5 to 10 years.
Yeah.
But they have a massive lead.
If you're not paying for the product, you are the product.
Yeah.
Beware.
Which is valid,
Yeah. No, it's true.
Yeah.
Gotta get their money somewhere. I'll pay you with my eyeballs if I don't want to pay you with my wallet.
This is why I still do think though, like the Brave browser for that's built on the blockchain and for Web3 is low-key valid, because it does cut out the middleman, like people like Meta and Google. It's valuable because then you can accept to opt in if you want ads. Now, when you opt in to see the ads, you get paid to view the ads as well, right? Where that used to just go straight to Meta or Google's pockets, then they would use the data to push it out to the people you're looking for your business. With the with Web3 platforms and things like the Brave browser, if you have the option to get paid, you're getting paid by the person running the ads to target you.
Yeah.
So then you might be able to buy their product. So I think that's pretty cool to cut out the middleman. Anyways,
that is true.
But I feel like, anyways, OpenAI, they got the lead. We'll see if they stick with it.
I like Meta headset thing. I use it to practice USPSA and movies. I have a Meta Quest as well. Really like it. That's kind of what initially spurred my bullish case on Meta.
Have you still been liking it?
So deeply long Meta. Yeah. I still really enjoy it. It still has great performance. And I think that could become as they get smaller and more mobile and have better battery life. I think we're not long from seeing people walking around with them on the street for real.
So I only had the 2. Battery life was atrocious.
Yes, the battery life I have the 3S.
Okay. And is it still
it's still poor. Okay. Yes, it's.
I assume it's better, but still poor, huh?
Yeah, I mean it varies game to game, but like if you're playing a demanding game, I mean, it's like 90 minutes. It's really not very long at all. That's kind of the main restriction to it. But honestly, I don't mind that too much, because if I wear it for like too long, when I take it off, it's like this whole thing with my eyes. I got to readjust for 30 minutes or whatever. So 90 minutes is about perfect. But if they want it to become an actually more practical thing, like for instance, it would be cool if you could take that thing on a flight, but it's too bulky to pack at the moment, and the battery life is just too short to even make it worth it to me. But in the future, I think that that's absolutely something that could happen, and they have the glasses as well. So if they can merge those two things together.
Do a little something, and then just throw in the colorblind VR headset at the same time while they're at it.
Yeah. What's the snot flu I'm hearing about? Everybody's sick here. I can tell you that. Lots of sniffles, lots of coughing in the office today.
Oh, I was close. I was close a week ago.
Yeah.
I could feel it. I was close. Emergency immediately.
Yeah.
And I was like,
vitamin C
so
that
I take
away.
some inhaling out, and I try to not cough so I don't develop the habitual habit of coughing. Like, I'm just like, not me. I'm not trying to.
Yeah, it's hard to do. I know we're gonna have to wrap here shortly. But,
Yeah.
I will close with a small personal anecdote. I was in the elevator on the way up this morning to our office, and it's a packed elevator, like 8 of us in the elevator, down from the parking
Sardines.
garage, and then also over and back up. And there was 2 guys that worked together at a different company in this building. I'm not sure which one. And this guy, they're just having a total conversation about how one of them was like, still totally sick. And I was like, do you guys need to have this conversation in this crowded elevator right now? Yeah. They're like on comically opposite corners of the elevator. And the one guy's like, oh, how you feeling, Bill? And Bill was like, oh, I'm probably back about 50, 60%, still feeling pretty bad. Yeah. And the guy was like, oh, do we know what it is? And Bill was like, no, I tested negative for the flu and COVID, but it's still pretty bad respiratory stuff. Yeah. And I was like, shut up, you guys. What are you talking about? This crowded elevator is the place for this conversation. So now I know I was exposed to Bill this morning, so I'll have to be careful. I threw some hand sanitizer on as soon as I got out of the elevator. I'm not taking any chances.
Like, I'm good to go. Good. We're good. No, that's hilarious.
But yeah, that would be
Which elevator was that? A, B, C, D, or E? Which one? No, I'm just kidding.
It was D. It was D. D elevator is contaminated.
That being said, anything else top of mind before we wrap for the day?
No, that's all I got. Hope Meta keeps going, and hope I can get a little more life out of Aklo. We've kind of been running sideways since I threw that on, so we'll see.
Cool.
1 hour.
We'll see what we get. Got a lot of volatility in the market, a lot of rips to the highs, a lot of rips to the lows, back to the highs. Let's manage our positions. As always, thanks for taking the time to hang out with us today. Be sure to stay tuned for more segments coming on next. We'll catch you guys next time. Peace.
Global markets never sleep. Explore them with Forex, now available on tastytrade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on tastytrade.
tastytrade is now on TradingView. Trade stocks and futures directly on TradingView charts with tastytrade's low commissions. Try it out and leave us a review.
Grow a strong community with tastytrade's referral program. When your friend joins tastytrade, you'll both receive $100. As your community grows, you get more bonuses. Only at tastytrade.
What's up, everybody? Check out my new series, Life Cycle of a Trade, where I show you my real-time trades with insights into strategy selection, adjustment mechanics, all the way to the closing order for all of the tastylive core strategies. Got big goals for 2026? Get the big deal. Earn a 4% cash match on all qualifying deposits, up to $10,000 total. Plus, unlock 30 days of commission-free trading. Trade with confidence using active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. Earn a 4% cash match when you open and fund a new tastytrade account today.
Just for a minute, let's forget about your favorite stocks. Just for 1 second, let's leave specific strategies on the shelf. Let's talk about what really matters. Your portfolio. How do you build it? What should you target? How do you manage it day to day? The answers to these questions and more are inside our newest crash course. So I'll see you there.
tastytrade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Earn a 4% cash match when you open and fund a new tastytrade account today.
We're back. It's still Thursday, January 22nd, 2026. This is Futures Power Hour, sponsored by CME Group. I'm your host, Chris Vecchio. He's Thomas Westwater. Thomas, good to see you again.
It's good to see you. Are you? Do you got the salt piled up? You got the shovels ready?
Shovels are ready. Salt is being piled up. Have firewood to chop today and tomorrow, Saturday.
There you
Just delightful. Unfortunately for my poor daughter, we're going to have to reschedule her birthday party from Sunday because the forecast is now for 18 inches of snow. Well, something to deal with. The fun thing, though, for us, Thomas, is that the forecast through February 3rd says 27 inches total, which means there's probably another storm lurking around the corner. Either way, though, finally some white weather here, which is nice. It feels like we have way more snow this year than we did the last year or the past few years, for what it's worth. But I got to check out that feeling.
Yeah, we had a big one in November for snow, but nothing really since that. A couple of dustings. We got a lot of cold coming over the weekend, but yeah, you guys are getting all the snow up there. I remember the New York snow. I used to live upstate in the Tug Hill region. You'd get crazy snow up there, but yeah, it's fun.
Well, we see today that the market is, at least one corner of the market's comfortable with the weather. Natural gas prices have actually turned a little bit lower on the day. Their ascent had stalled. It wasn't another day where they're up 25%. And in at least the contract that's now popping up as the default on the platform, the G February expiry, you're looking at one that has pulled back in. That's about the only red you're seeing in the commodity space today. That's energy, because it's still a pretty good session as it pertains to what's going on in gold and silver. It's a pretty good day for stocks right now. Volumes are lower than they have been the past few sessions, but we do see that volatility is coming in a meaningful manner. The VIX with a 15 handle again here, Thomas. I'm curious if we're looking for a new catalyst, though, as we go to the slides here, gentlemen, production team. We are wondering who the next Fed chair will be. Because as we look for catalysts over the coming week, the forthcoming Fed meeting next Wednesday does not really offer much by way of a market expectation that anything substantial will happen. And in fact, if we were to consider the CME Fed Watch odds for the next several months, it really doesn't look like the market thinks anything substantial will happen until potentially June. So from my view, if it wasn't a GDP report, if it wasn't non-farm payrolls or CPI, then this is probably the next most important thing on the macro side. Is, of course, we have numerous earnings releases over the next week or two that are likely to move the market as well. Rick Ryder seems to be someone whose popularity is gaining steam here once again. Kevin Warsh has been losing a little bit of popularity. Of course, we know that Kevin Hassett fell out of favor at the end of last week. Thomas, is this the next big catalyst that we have to look forward to?
Yeah, where did Ryder come out of? I haven't seen this. I haven't looked at this in a little bit. But I'm not sure. Who knows? He could announce it at will, right? So I mean, it could come now, it could come later. Something to watch in any regard.
Which one of these, last week the market wasn't necessarily thrilled with Hassett being taken off the board. Which one of these would be, do you think, the one that makes the market most comfortable?
Waller, probably. I mean, that's probably who I would say.
I was just working backwards from, of course, Hassett's the one that probably is going to push hardest for the cuts, but people may see him as a Trump acolyte. Wouldn't someone like Waller perhaps be the most credible person to make the case for cutting rates, given where he stands among Fed officials right now? And a Waller pick would actually probably be a little bit more effective in getting lower interest rates.
Yeah, I mean, that's a good point.
That should be the dark horse.
He's already like one of the more dovish ones on the board. Yeah, I mean, I agree. I think you have a better insight into all of these people than I do. But so Ryder's been rising. Waller's been kind of unchanged if you look all the way back to the end of December, up a little bit, but not a lot of volatility in his name. It's the Warsh and Ryder that's really been moving. I don't know. I think, given the uncertainty probably around these forecasting, it probably would inject some market volatility depending on who it is. But either way, I think we can say that we're looking at a Fed that is going to be more leaning towards a dovish position where they can.
Stands right now, the aggregated probabilities for the next few months. June only a 73% chance. A few days ago, 2 weeks ago, we were looking at high 90s. April right now is the month in the first quarter, in the first half of the year, that still is under Powell's current tenure, 31%. Once you get to June, there is an assumption that maybe Powell's no longer going to be the chair, but given recent events, perhaps that leakage out of a June cut is reflecting the possibility that Powell doesn't give up his governorship seat, and maybe he sticks around, Thomas, which I don't think the market would have a problem with per se, because Powell's, again, delivered this stability that we have, relatively speaking, in financial markets. That's the third rail. Unemployment rate's below 4.5%. Inflation's a little bit stickier, but how much could they do there? Stocks rises, vol plummets. That's really where things stand today, Thomas. I want to go over to the S&P 500, which is up 54 points on the session, 69.64. We were rejected at that 1 week, the 1 month moving averages yesterday. Couldn't quite scale them towards the end of the session, despite that late day rally. Today, we are making a little bit more progress there. And I think it's that vol crush that warrants our attention first and foremost. This is a VIX, Thomas, that's now at a 1545. The front month contract, because the F rolled off yesterday, that was expiration. We're now into G, 1805. Here we go over to, say, March, H, and you're now looking at 1905. This would be the second lowest close of the year, third lowest close of the year thus far for volatility. Why did we get to this point so quickly after starting the week where it looked like we were going into another mini March, April 2025 episode?
I mean, for me, I think it's the Greenland stuff, geopolitical tensions or uncertainty. It seemed like it got to a point where, the market discounts this rhetoric from the U.S. administration until a point that it becomes, it boils up. I think that's what happened. And then, I don't know, you can argue that the market forced a capitulation from Trump and party. You can argue that, that was a negotiating tactic all along. I think he's done things like that before, so maybe it was, who's to say? But the market, it did react, I think, to those headlines. And, trading it, I think it makes sense trading now geopolitical inflammation in the VIX and then, fading it or trying to fade it when something like this happens, where it's like based on rhetoric coming out of the U.S. I think that I might trade it like that the next time this happens. And I don't know what that's going to be, but I'm sure it's going to be something sooner rather than later.
Sooner rather than later, when we go into another episode, I got to imagine, Thomas, that we're going to get this Supreme Court decision at some point in time. Maybe they kick the can down the road to midterms. That would be a disaster, from my view. Very annoying.
Well, can't they also just push it back to Congress and say Congress needs to decide on this?
One would think, because it's not, the question here is whether or not it's an Article 1 or an Article 2 power. And the Supreme Court could just remind everyone that there's nothing in the Constitution that affords us to the executive branch's ability to levy tariffs. There's literally nothing mentioned alongside tariffs in the executive branch in those first two articles of the Constitution. So I imagine that the originalists on SCOTUS are going to see it that way as well. Because just the word just isn't there. So I'm not sure why it would be there in one section, not the other, and it's not tied to the executive, but it's very clearly distinguished and mentioned under the legislative section. So, you're right. SCOTUS could just say, Congress, do your dang job. Congress could always enforce these and pass these into law.
Yeah. I mean, I don't have enough legal, knowing to really interject a big opinion on that, but I think it's something to watch out for. definitely a negative market reaction, I think, if they rule against the tariffs. But we'll see.
Yeah, it's the useless knowledge great use of my time in college, Thomas, studying government and law with a concentration in constitutional law. Clearly have used that use of my time very well over the past 18 years. So much for law school. Thomas, the stock markets today are bouncing back in a meaningful way. NASDAQ is clearing yesterday's highs, which takes us through that 25,500 level that we were eyeballing during yesterday's show. And with that, it's getting a little bit better, technically speaking, in terms of the structure. We do have a 1 week that's now back above the 50-day, and both the 1 week and the 50-day have positive rates of change. Even the 1 month is giving us a positive rate of change. So a low volatility volume crush reassertion of a little bit more of a bullish momentum profile completely changes the outlook from where we were at the start of this week. Now, the question is, can we advance further? Because I see here in the futures on that 16th close, a close of 25,689. We've now just closed the gap. And as we've closed the gap from the open earlier this week, the market has started to slow down a little bit. So almost like yesterday, right, where we certainly have cleared that 25,500 figure. This is the next level where if I'm a bull, I'm going to keep an eye on it, because failure here, okay, then we got to see how we handle 25,500 again on the downside. But the pieces feel like they're starting to get back in place, where we did have an attempt lower. It's been shaken off. Path of least resistance perhaps is for another attempt at 7,000, at least over the next few sessions before we get into that pre-FOMC stickiness where the markets tend not to move all that substantially.
Yeah, I'm long a couple individual names, but I'm actually looking at maybe trying to buy a put spread on ES. I don't know. I'm not feeling it. I'm not feeling like we just get back. The enthusiasm isn't, I don't know if it's going to stick around for too long. That's just the feeling I have. But, after the technical structure is broken, and you get these retracements where it's looking like everything's good again, but then it falls apart. I think we've seen that before, a couple times over the past year. I might try to exploit that view a little bit in a small way. But
well, I mean, look at the volatility. It's a 1.3 IVR. If we get to a gap fill in the S&P 500 at like 69.77, laying out a small position that's an long out of the money put spread, it's going to be cost, especially if you're trading a bunch of things on the long side, right? Structuring it could provide a little bit of a cushion, given the fact that the market has quickly shifted into what appears to be kind of a complacency mode.
Mm-hmm. Yeah, I mean, I'm long a couple names. I'm long Tesla. I'm long Nvidia. I'm long like smaller names like Rocket Lab. So this would be kind of balancing the long single names in a way, but I'd probably do this ES trade, not a really long time frame. I think I'd go to the 36-day. I'm going to look there right now. Long put spread. And yeah, maybe you're right. Go a little further out of the money. Around the 1 standard deviation. I might do something like that. It's a long shot, I'd say, for a big drop, but I think it's going to pay if it happens.
Well, in any event, there seems to be a corrective move that took place here, where if we think about the high near 70.36 and the swing low near 69.25, you are talking about just over about 110 points, Thomas, and the low in that range break gets you down to 68.14. Which from 69.30 or 69.20, 25 or so, I mean, that's about 110 points. It feels like a correction that we did here recently, almost to say that we had this inverse head and shoulders pattern. We make the exact measured move up into the highs and the market then pulls back a touch. So we have our measured move to the downside and then we bounce. Now we're back into the throw of the uptrend. It's still not the prettiest looking chart in the world. It's certainly no Russell, which is a comment I didn't think I'd be saying here, but sure enough, the Russell is up for what? It's only had 2 red days this year in the futures market. It's now looking at a new all-time high of 1.06%. I mean, at least there's that today. More rotation, more small cap strength. Good news.
Yeah, there's rotation. I'm not sure. I'm not going to trade the Russell. I do have an order in for that put spread. I went 6,600, 6,625 on that put spread. So it is far out of the money. But the volume today, the chart doesn't look that good. Greenland is over. We're on the verge of earnings, and we're only up. We're up a nice amount, but it's not huge. It's not like anyone's trying to chase this or anything. I think sentiment could fall apart pretty quick. And economic readings have been good. It just doesn't seem like we're as enthusiastic as we should be to really carry this to new highs or get back to levels where the technical structure is reasserted in a strong way. The Russell, what's carrying the Russell today? Is it the regional banks? Those are doing okay. Energy's doing okay. I'm not sure. Regional banks are reporting this week. I haven't been watching any of them. But yeah, this seems to be also mostly rotation. Is it defensive rotation? If you're getting out of these big names that have been leading us and going into things like the Russell, or is that, sometimes in late stage bull cycles, small caps do outperform before everything gives way.
That is very true. We were flagging this yesterday. Is it a concern? Are we happy that the breadth is improving? Which generally speaking, we should be. Or given the NASDAQ underperformance, are we watching kind of a replay of the start of last year where tech's soggier before ultimately things fall apart? And this mega cap underperformance, it's one of the things that makes you uncomfortable if you're a bull, because you really can't get the NASDAQ into new highs until you get your Microsofts and your Metas doing a little bit better as things stand. The other side of this, though, is the sector rotation is still holding up. A KRE now at a new high. It's breaking through the November 2024 highs. It's not quite an all-time high yet, but you can see how what's really standing in the way of banks, just on a charting perspective, of trying to make a more meaningful breakout. If it's a triangle, if it's an inverse head and shoulders pattern, either way, I know it's been something on our radar for a number of weeks, at least as a leading indicator here. We have telecom, for example. This is a weekly chart, but telecom here, gaps open higher and currently sitting at a new all-time high. And then you have your semiconductor names, which it is a red day during the US session, but still up by 0.5% from yesterday's close, which would mean another new all-time closing high here. So when these pockets of tech are doing exceedingly well, broadly speaking, it's just difficult to be a bear in a very constructive manner. You got to really pick and choose your spot. So I didn't get shaken out at the start of this week during the pullback. I'm entertaining a bunch of long deltas in names like Broadcom and Peabody Energy. Thomas, I know you and I have been talking about this a bit. This has worked out really well. BTU, short some put spreads in Delta, retaining long call exposure in Google. The IBIT trade's been a disaster, again, trying to pick a bottom. But Meta at least is doing better. Tesla's doing a little bit better. And the retail stocks, they are sitting in breakout-ish territory here. So I like my long equity exposure here. I don't see a reason to get away from it. The market's performing a little bit better and giving us an improvement in the structure that we needed to see follow on from yesterday's bounce.
Yeah, the calendar is pretty empty for the rest of the week, right? For the economy. We have Intel after the bell. I forgot about that. Intel, one of the first semiconductors to report. And then next week it heats up. Intel, 8%.
Intel highest since January 22. Big surge this week, excuse me.
Yeah, like an 8,
I'm not trading
9%
it.
Expect to move today.
Yeah, we're looking at plus $4 and a nickel either way on a $54 stock. The way it's been trading recently, it seems more meme stock than rational. I wouldn't be surprised if it breaks that range, but there's a reason why we don't trade earnings reports until we get to the end of the year and we forget the mistakes of the past year trying to trade around earnings reports. Thomas, I stick to the futures and the macro because that's what works well for for me here. Other than that, we have our levels for the S&P. We got to sustain that bounce over the 1 month today. That's 69.40 for the NASDAQ. Similar situation. That's 25,641. If we can get gap fills and hold the gap fills, even better for the NASDAQ. That's going to be 25,689. And for ES, that's going to be a little bit higher than here. That's going to be 6976.75. So varying degrees of confidence coming out of this. But if we close those gaps, we close back up into the uptrend, Thomas, from the lows that we had just seen here in November, December, January to start the year. And that in and of itself, I think when you start to get back into this steep uptrend, okay, the posture is feeling a little bit better. We warded off a breakdown attempt. We haven't gotten anywhere in several months. Let's make an earnest push for a new set of highs.
Yeah, I mean, this environment is way different than last year. You know, trading anywhere from April to November last year, you could pretty much, there was a strong trend. If you bought in April, you started being bullish in April. You know, you figured the tariff liberation day was a one-time big volatility event. You got long. You did all the way good till November. All you had to do was keep on buying or keep on getting bullish positions. The chart is way different now. I think you need to be a lot more tactical in how you take positions and even look at the data. I don't know. I think this is just, it's already a harder trading environment for equities this year, I think. And I think the outlook is less clear. So is earnings season going to give us the push that we need to get to new highs, resume this bullish continuation? I think if it doesn't, then you're looking at a lot more chop ahead.
Thomas, we turn our attention here to the bond market this Thursday, which had a little bit of a better day yesterday as the Buy America mindset returned following the earlier Sell America mindset. Notes here are fading off a touch, however. We did get a rally back to our 1 week moving average in today's session. That's more or less where the market stopped. You could make the argument that there's a head and shoulders pattern here, and we did just get a more definitive break below a neckline in our ZN H6 contract. So seeing further weakness isn't necessarily out of the question. Given the range, it's about 2 points. That gives you a 110 or so downside target. And if we go to the continuous contract, 110 more or less coincides with the swing lows that you have in July. So sometimes the math just happens to work out neat. ZB is a little bit in better shape right now. It gapped open higher and has stayed up here. I don't know if we could say that it's cleared any significant levels to declare that this recent thrust to the downside is over. But the volatility that had been pumped in here, the IVR high of 24, nearly 25 the other day, we're back down to 2. How are you approaching these? Because I just feel like I am, for whatever is good is happening in stocks, especially precious metals, I am a man up a creek without a paddle in the bond market still.
Yeah. I mean, the economic data, it's getting stronger. It's going to push the Fed into more of a, even with, politically motivated dovish chair, I think it's going to, if the data keeps going this way, how much room for a cut really is there,
There's room for 0 cuts if the economy is growing at 5%.
Yeah. But what happens to the bond market if you cut when the market's telling you you're really not supposed to? I don't know. I think I'm still in a ZN position. Yeah, I'm still.
Is it working?
Still in a ZN short put spread. It's not really working. I want to get out of it. If I wasn't in a position right now, I'd probably be more willing to buy a put spread than to sell one. An iron condor, does something like that work here? I don't know. Moving out of this recent range, I don't really like iron condors when you break into a range that hasn't been tested in quite a while. Yeah, I don't know if I'm going to trade anything in bonds right now.
I mean, I think you could make the argument, right? What we really should be looking for, notes have 13.5 IVR. Okay. the lows that we have after Liberation Day last year. And I know that last year we traded around them for a little while, seeing as how, like, are things really going to get worse than they were during Liberation Day? No. We could sell puts down there and feel confident that unless that breaks, this whole episode is over. And that, in hindsight, it did work out. We got close to it, but we never got down through 109 in notes. So if we find ourselves trading closer to 110-ish here, I'm just going to take a Fibonacci retracement and just find the midpoint of the post Liberation Day low up to the highs here in the market. And that's going to give us a midpoint, roughly speaking, of just check something out here. Go to 5. Slap you up. About 111 and 19. We'll call it 111 and 20 ticks, which is basically where we are right now. So going back to the ZNH6 contract here, Thomas, thinking about a market that's about 2.5 points wide in either direction, forget the reverse iron fly, but 2.5 points wide in either direction gives us about a 109 downside and maybe something closer to like a 114, 115. This isn't great risk to reward, so we could play with it a touch to try to figure out a better setup right now. But you could start to see the contours of, if we hold the lows that we established around Liberation Day and we don't break the highs that we had in the fall of last year, that's a little bit better than a 3-to-1 risk to reward at 56% probability of profit. So longer term, right, if you don't think the Liberation Day lows are going to break, you have something to do here in a short vol play in a more typical tasty manner. Unfortunately, there's not a contract that's listed right around 45 DTE, so you would have to go to 64 to execute a view like this. I'm partial to it. I just don't want to put anything else on in notes and bonds right now while literally nothing I have doing on them is working. I'm going to wait till I get out of this reverse iron fly and then getting into this short iron condor position, a more typical 3-to-1 near a 60% pop. That will work for me. I can then stop complaining and being worked up about whether or not bonds are going to move directionally at all.
Yeah. Directional. Yeah, I'm looking at ZN options right here, and the 64 days, where you'd have to do something. Oh no, I'm just gonna wait. I don't really see anything that's jumping out like, that I really want to take this trade. And I think when I feel like I have to force it a little bit, I just pass it over.
Yep. That's a great point. If you see a trade that you feel like, you don't want to force any trades. We did have a 10-year, 20-year bond auction this week. It was pretty good. We've had 10-year tips. That was pretty good. Did it? No, it was not good. It tailed by 2 basis points. Ooh, ugly. That may help explain the divergence in notes and bonds here over the course of the session, although it's not obviously a 1-to-1 comp, but tips here, not great. The 20-year bond auction after the Greenland TIF, whatever it was great. So we can't say that the market's really revolting terribly after the recent news, and it seems to have moved on already in some segments. The metals are a dog with a bone right now, though, sniffing out new highs seemingly on a daily basis. 49.19 here in the GC-G6 contract, Thomas, which is great news, I suppose, for the people who are staying long. It's been something that you and I have been partial to, staying long in gold and silver. There has been a dramatic fall off in volatility here, though, because of various re-anchoring of IVRs. So now it's only a 28.6 IVR, perhaps an artifact, but it is a new high. So I want to focus on the price action here. Thomas, is this just a market that's reaching for $5,000 an ounce?
We're reaching for 5,000, and like I said, I think I said earlier this week, just because we hit a round number, like when we hit 4,000, we didn't immediately sold off. We kept going. So hitting 5,000, it's going to generate those news headlines. A lot of people that aren't trading day to day are going to see that gold hits 5,000. They're going to go to their computers, buy more. I think there's every reason really to stay bullish. There is uncertainty around politics, conflict, monetary policy, fiscal policy, around where rates are going. I have an order in. I wish it would fill finally, but long call spread 5,000, 5,010 in GC, the J6 contract. So that's 63 days out. That's going to be my position I get into and ride out for the next, 2 to 4 weeks. We'll see. I think we could hit 5,000. I think once we do, I think we'll keep going. By the end of the year, I don't know where we'll be. Who knows? If you asked me the start of last year, I don't know what I'd say, but it's been a wild ride in gold and silver. I'm going to stay long. I'd have to work too hard to convince myself to be bearish, and I don't want to do that. So long it is.
Long it is. Long has been making it easy. As for the positions that we have on here, we're going to go over to the 33 DTE. That's deep in the money, and so riding this out, 4,600, 4,625. If we ring the bell on 5K, Thomas, maybe we take some profit there, but it's not even close to 85% of probability or max profit potential yet. So a little bit more to go. And then, hey, these were put on weeks ago when we were, trading closer to $4,500 an ounce. So the 5,000, 5,100 call spread is working out neatly here. We could flip it today for a quick $2,000, but we got more money to make in this. So sitting on our hands, Thomas, as Jesse Livermore said, let the market do the heavy lifting for you. You make your money when you let your plan play out and you sit on your hands. And gold is certainly doing the heavy lifting here. Silver, likewise, I suppose, deserves a nod because it's just up another 4% today, which at 96.39.5 right now, it is a new all-time high as silver continues what could be an ascending triangle breakout up towards $103 an ounce. I know these are just round numbers, Thomas, but it feels like for the folks who've been actively in these markets and watching the news and the sentiment out there, it really does feel like traders are trying to push gold and silver to these big round numbers to say, oh, silver hit 100. Oh, gold hit 5K. There's like a countdown for it. It almost reminds me of what was happening in Bitcoin. What was that after the election in 2024? People would tweet out every hour or two, Bitcoin, 77K, 78K, 79K, right? That kind of feels like we're in that same melt up market. So no reason to fade it off here. The decline in vol is, an artifact of situation changing year over year. It doesn't necessarily mean anything to me per se. I'm looking at the actual raw volatilities. The IVs are still in the high 70s, Thomas. That's where they were yesterday before the rebasing. And IVR is a one-year look back, as people should be aware of. So to that point, just stay on the ride, I guess. Who knows when it ends, as you pointed out. Who knows where they're going to close this year. But if you're a momentum person, the mechanics demand that strong momentum markets deserve more coins put into them, and just got to keep feeding the beast.
Yeah, there is momentum. And, a smart guy a long time ago said something about motions and objects in motion, stay in motion. I think that works for the market too.
I agree. Here's the blemish. Why isn't our friend copper doing a little bit better? We did get to this trend line from the November, the December lows. We started to bounce from there. I would hardly call this an assertive bounce, a convincing bounce. We're barely up 0.6%, whereas gold up nearly 2, depending upon what contract you're trading. Right, you go over to GC M5. We're starting to see, or M6, excuse me, like 5Ks here. We're $4 away from it. It's about to happen. Silver nearing 100. Copper has not done anything in a few days. I see that copper struggling a little bit today, and I see that crude oil's down 2.3%. And then there's just that little macro mind of mine that gets me in trouble from time to time saying, how come the growthier commodities are not having a good session if everyone is so exuberant about this climb down from these Greenland tensions over the past few days? Can you help me square the circle?
What exactly was that, Chris? I'm sorry.
Why isn't copper doing as well as gold and silver?
So I mean, yeah, I know we can't bring up LME prices on our chart, but LME copper has been behaving a little different. I think yesterday the spreads were like blown out wide, and now they're contracting. So there's a lot of backwardation. Yeah, I don't know. I am long copper. I want to stay long copper. This is a pullback to where we were almost, end of December, pretty much. I don't know. You figure better economic data would support it, but a lot of that has to do with what's happening in China, things like that. I wish I had a good thesis for short-term movements, but I don't really see much that I can put together. Spreads. Yeah, I think this is something where I want to stay long, but this pullback here, I'm not sure what it is. Maybe there doesn't have to be a good reason. I'm going to stay long. My position is my copper trade. I have a short put spread at 5.7, 5.75, 33 days out. So I'm probably going to move this pretty soon with 33 days. Go to the next one, which is 63 days out. And probably move up the price just a little bit. Maybe I'll keep it the same.
Could I point to something on the HGH6 contract? December 30th, right? We have our right after Christmas rally. The CME raises the margins. We bounce back a little bit. But that low that we have after the initial margin hikes hit the metals market, that comes in at 553.50. The 50-day moving average here is sitting in at 556.77. I would point to the behavior of this market in recent months. The market has respected the 1 month, our yellow line here, but it's really been respecting this blue line, the 50-day, a little bit more. Drops below the 1 month haven't lasted long, a few days at best. But it's been the 50 that really has held price action up. So if I'm thinking in this market where we can go to CPR to get the IVR reading as the equivalent, 62 IVR is not anything to dismiss. If I go down to say 550 at 63 days, what could we work with in this area? 555, maybe 545. I could wrap the 1 month, the 50-day moving average, more or less. I could get a 2-to-1 risk to reward. I can do a 64% probability of profit and a short put spread there, risking 1650 to make 850. Look, the volatility is higher though. And because of that, these are not small positions. I think about a $25,000 account balance, Thomas, here. This buying power is $2,000. So just people should be mindful of how they're structuring these. Maybe 10 cents wide is too much. Maybe 5 cents wide would be a little bit better. It reduces, obviously, the max profit, max loss potential. Ratios more or less stay the same, but the buying power then is diminished. It makes it a little bit more, I think, accessible for a retail trader. So the way that you execute this vision matters, but there are levels to work around given the behavior of this market, I'd say. And I think that may be the better way to express it than what I'm doing, which we both could be right here, except if you're short a put spread and I'm long a call spread, this market just needs to stop falling for you to win, whereas I need it to rally for me to win.
Yeah. I don't know. We'll see. I think a lot of this has to do with longer term things in the economy, but overall, I think copper is going to keep on having these, retracements and going back to levels higher. Maybe you have to be a little more tactical versus gold, where you could just buy it. Like today, I'm buying gold on an up day, right? Copper. If I wasn't long already and I wanted to get long, I would wait for a pullback like this. So I'd be getting in a position here. So my approach to them is a little different.
Gold may break $5,000 while we're here on the show. 49.97 and change right now. 49.98 and change right now, Thomas. We can turn our attention to what's happening in the energy market, where Natty is running out of gas. The upside move here is seemingly falling apart. It's down by 0.06%, so that did hold up over the course of the show so far. It did begin the day with another up move because we do have this terrible weather system making its way across the country. High of 3.712 in the H6 contract. So we could go back over to G, but it's a similar type of price action. This, to me, is incredible that we broke through 5. We hit a high of 565 earlier, Thomas. We're back down out of 5. Is this the exhaustion point? Should we be selling calls now? Is this the signal that we need to sell calls in natural gas?
Yeah, I mean, it's the biggest 3-day price rally in natural gas on record from what I've seen on the charts. It's pretty significant. It's like 75% or something. Something crazy like that. Something insane like that. And, obviously it's been moved on this huge, storm, this Arctic weather that just looks like it's going to engulf a huge portion of the United States. So it got as bullish as you can get bullish regarding weather. And that came after, shorts were piling in, driving the price down after a very mild December, very mild first half of January. Tuesday on OTCL, we talked about getting short term because I thought exhaustion was nearer after that big 25% move, whatever it was on Tuesday. That position didn't work out for me. I had to get out with a loss on the short term. But I was using that to balance against both of my positions. I have 2 short put spreads on. I'm keeping those on. Those are well into their profit zones right now. But you have to wait. After you get such an immense move, there's going to be profit taking. It makes sense that the price, you can't go up forever, especially at the velocity we've been at. So yeah, what do you do right now? I think selling call spreads, I think you can do that. There's plenty of liquidity and volume there to put on a trade where you can get in and out if you want to. So I have no problem with that.
Little pinprick here, call the high. We say that the high today is 565. What if we were to sell a call spread right north of that? We could get a 75 here. It's closer to a 4-1. So not the best odds, Thomas. But it's something to do. You could do it if you want to be the hero. Not often does natural gas rise 75% over the span of 3 days from low to high. Not often have I missed a move like this so thoroughly. Really kicking myself.
I mean, it's been a crazy week. It's been a crazy week. I'm just glad that I was mostly long in it. It's definitely helped out the portfolio for this week. Helped with hopefully looking at ending out a solid January. But natty gas is usually something that I'm always in, and this is something like, it's been crazy. I haven't seen anything like this. Who knows when we'll see anything like it again? But it's going to be something, you're talking about in 10 years. Remember the natural gas rally, 2026, it's something like that.
Yeah, natural gas traders getting to make about 4 years of returns in 3 days.
Maybe we'll see that some funds or something that were blown out on their natty gas shorts or something. Someone somewhere got, steamrolled
Smoked
on the short side. And, it brings you back to that one video where the fund manager's sitting there with a Rolex on saying, sorry, I lost your money. But
Thomas, oil's back in here a little bit today too. And you're seeing that volatility has come off. It's now 21.5 IVR. I still feel very comfortable staying long oil as long as we're holding through that 58.75 area, where in recent sessions we've seen not only former resistance from the end of December turn into more of support on a pretty clear technical basis. It's also where post-Iran de-escalation or step down last week, the market found somewhat of a floor. To that end, the 1 month, the 50-day, they both risen into that area as well to kind of help firm up that as a legitimate support zone, which then reinforces the view that if we're on the other side of that, 58.50 come tomorrow, then it looks like we're back in the downtrend from the June and the September highs. And then whatever best laid plans of a breakout here, you have to then tuck into your back pocket in October of last year, as long ago that was. Do you have any do you have any particular feelings on oil here right now? Is there a risk that we're wrong in a meaningful way?
I'm have an order in for a iron condor between 57 and 64, so that's the range I'm playing. This is for the 54-day out contract CLJ6. I kind of see it staying there. You know, it was pumped up on geopolitical tensions. We're giving some of it back now. Venezuela, there's like some oil deals going on or sales that are starting out in there. USS China could get Venezuelan oil. Iran, that situation is kind of looking like it's, passing now. Trump set a red line, kind of not talked about anymore with the protesters, what happened there. I don't know. I'm just playing for 57 to 64. I think that range is pretty established in the chart. So that's what I'm doing.
Highs here in the CLH6 contract, 69.80. If it's a bullish falling wedge, that's where we're aiming. That's where I am sitting for the time being with some positioning. I have some short put spreads on. I think it's working for now. 26 days to expiration. This is doing a little bit better where we get back towards the midpoint of the short iron condor. I tried getting out of it yesterday. I could not get filled. No one wanted to play.
Yeah, I did the same thing yesterday. I couldn't get filled on iron condor and oil.
I'm going to try again. I don't see much of a reason going into a weekend where we still see what more U.S. military troops building up in the Middle East. Yeah, I want to get out of directional neutral stuff because if today's 26, tomorrow's 25, Saturday's 24, Sunday's 23, Monday's going to be 22 DTE. What am I really working for here? Another like 20 or 30 or 40 bucks? Let's just get out of this. In fact, depending upon what we're doing here, let's just replace this.
Yeah, and if you're directionally neutral, you're right. That's too little time, especially ahead of a weekend to have it on. If you're betting that some kind of geopolitical premium comes in oil, you want some duration to kind of protect against that, so you have time to work out that geopolitical premium.
Yeah, that's it. I had to give up $10 of profit to clear the position. That's fine. Not a big deal. So silver, gold, we ride with you. Natural gas, oil, we leave you in the dust. Dollar recovery floundering here. It's sure good day for stocks. It's a good day for the metals. We're undoing some of the Sell America stuff, except in the currency space where this has continued to prove a little bit more difficult for the dollar to capitalize on. DXY itself the other day tried to make an earnest attempt to get back through its 50-day moving average, a level that we scaled here at the start of the year, treated as support. And then, of course, we're knocked down at the start of this week. The 50-day yesterday was 98.81. Thomas, we closed it at 98.76. Today, we are fading off of those levels. And now all three of our moving averages here for the dollar have negative rates of change. Those slopes, momentum, showing signs of deceleration. It's really not what you want to see. Not what I want to see, at least, because I'm sitting short a call spread here in the British pound. I have a long put spread on in the euro, which smoked as of 2 days ago. Oh, that was close to working out. The yen is still a disaster currency, not getting any semblance of a bounce. I think that's the most alarming thing. If I'm like betting on a yen long right now, how has the yen not been able to take advantage of the situation the past few sessions? So if I want to be a dollar bear, the yen is not the place to do it unless it's an intervention kind of lotto ticket. And that's just not a sustainable way to trade. So
yeah, the yen not showing any like flows, especially during in the Greenland thing. There's nothing. It's given nothing. Yeah, a long put spread. I am also in that in the euro. That's obviously not working out. I don't know. I just have to take that off right now. The case for the way I'm trading them.
We can get away from fiat and go over to crypto for a quick second here, Thomas. That break above 95K looked really nice for a brief, ever fleeting moment here in Bitcoin. If we wanted to go up a little bit higher to previous swing levels, we couldn't quite scale through that 99-100 figure. Now all of a sudden we're teetering on the uptrend from the November the December swing lows. Momentum getting more negative right now. Is the movement that we're seeing in crypto alarming, concerning anyway? Does it help inform a broader view that you have on the market about sentiment, risk appetite, yields?
I think it shows the same thing. That's kind of what's happening in equity markets with the big tech names not leading. There's not a whole lot of enthusiasm. There's not a whole lot of reason to get really bowled up. At the same time, I don't know. There's not really huge reasons to sell speculative assets. I think it's like a complacent, like, what do we do here kind of, mood. Bitcoin, it's got a lot of digging its way out of the grave here from October to do. I don't know if it could get there. I don't know how sentiment comes back into such a speculative asset. I mean, in what feels like kind of a later stage in the cycle here. But I don't trade Bitcoin too much at all. So, take it for what it's worth.
Bitcoin not being able to stand up, maybe one of those things that prevents stocks from going too far. It felt like 2 weeks ago when Bitcoin was beginning to rally up here, stocks are going towards their highs. We're less than 2%, 1% away from a high here in the S&P, less than 3% away from the NASDAQ, and crypto's rallying. All of the pieces were kind of falling in order. And then yields took their trek up, and then the dollar started to fall apart again, even though yields were higher. And okay, that move higher that we had in Bitcoin was during the buildup to the Iran tensions. But then once Trump backs down, what do we see? They go away. And then we get the Greenland news and Bitcoin doesn't rally on that. It's kind of a tough sell right now with an 11.8 IVR. I mean, I have long exposure, more ways than one, and none of it's working out. So hopefully the stock stuff does work out. Again, those key levels before we just close this out, Thomas, here today. Can we fill the gaps? Can we close 6976.75 in the S? Can we get up to 25,689 here in the NASDAQ? And you know what, Thomas? We're at 25,710. So one of the two has worked out. Can we keep this party going? We have more Tasty Live coming up for you after this, though. So what's next on the calendar? Tomorrow is a busier day. PMIs are coming out. Those are always worth paying attention to, particularly for the currency market. If you're in spot FX or any of the futures, we do have U of Mish sentiment here for the United States. That always draws an eyebrow, some interest a little bit now and again. We're still in the Fed's communication blackout window, and we're preparing for a busier week of earnings next week. So if it's another low volume day, Thomas, barring some tweet, some new development, which is always possible given what's been happening recently, we may have a little bit of a sigh of relief here as this week comes to a close. But hey, we're on 5,000 watch for gold, which is a heck of a lot of fun.
5K, here we come.
Get those hats out. Get your golden hats out, Thomas.
Yeah.
For Thomas, I've been Chris Vecchio. We'll see everyone later on today, overtime 4 Eastern, 3 Central with Ilya. Other than that, though, take a brief break, get some coffee, grab some lunch, come back. The doctor's in the house. He's here from theory to practice. Dr. Jim Schultz, up next on Tasty Live.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
Earn a 4% cash match when you open and fund a new Tasty Trade account today.
Jim Schultz, and this is From Theory to Practice. Welcome to the show today. Welcome to the broadcast. Now, welcome to the Thursday edition, the Taco Thursday edition of what it is that we are trying to do. Man, I'm so glad that you guys are here because it is only because of you all that we can do what we do. So thank you guys so very much. If you are watching over on the Tasty Live Network, I would actually bounce on over to YouTube because you can join the conversation and join the discussion, and you can communicate with our brethren who are also watching in the show. Man, you can celebrate. Man, you can celebrate if you're an equity bull. You can celebrate if you're a gold bull. You can celebrate if you're a silver bull. Man, it is nothing but celebrations across the board unless you are basically short any asset today. Then it's going to be a whole lot of commiserating. But you can do it with your brethren who are watching the show. It is indeed a good time had by most. And of course, guys, remember, drop any questions you have for me in the chat. I will try to get to as many as I can right around the halfway mark of the show. I typically get to... the expected move, you can check the tapes yourself. I get to between maybe 1.1 to 1.6 per show. So the earlier you get your question in, the higher the delta that I will get to said question. And don't forget, the most important objective for you today is to drop something in the stream, drop something in the chat, simply for the love of the algo. So Josh, bring us into the market, man. Let's take a look at what's going on. Man, what is happening out there? Yeah, baby, let's do it. EMI S&P is up 52. I got the risk-free instrument, also known as the NASDAQ futures, extremely high-risk product, up 235 on the day. You've got the boomers up 443, and the Russell 2000 futures index up 27. You got bonds up a couple ticks. You got notes down a couple of ticks. You got oil down a little bit over $1. You got UB40 up a little bit. And then, guys, look at the shifties. Gold up 81 on the day. Silver, my Hunt Brothers, up $3.27 on the day, up to almost 96. It was a little bit over 96, I think, just a little bit ago. We'll take a look at the charts and take a look at the tape and do all of the technical analysis that you guys have come to know me for on the program here in the next couple of minutes. Don't you worry. I will not forget. You got the British pound is up, the euro is up. And everything is right in the world. Volatility is probably going to be down on a day like today. Got volatility futures down 41 cents. And you've got the spot volatility, the old VIX, down $1.50. Man, that is a quick contraction. Like, that is really something, down to 1536 on the VIX. Man, that's some really, really crazy stuff. I want to talk about some things in the portfolio here in a couple of minutes. And then, of course, get to you guys, maybe even put on a new trade or two or three. But let's talk about the VIX really quick. So if you look at, if I bring up a chart, now some traders, some volatility traders or volatility, monitors. volatility watchers, I guess I would say. Some people like to look at the future volatility. Some people like to look at the spot volatility. I tend to prefer the spot volatility, the VIX, as broken and archaic and as irrelevant as it might be. It's kind of how I started. It's how I started back in the 2000s. And my first ever, I've shared this story a few times before on the show, but my first ever research project as a doctoral student at the University of Memphis, it was year one. Like I get in there, Dr. Wood is like, hey, I need you to do some research for me. I'm like, I'm your guy. What do you need me to do? He's like, I need you to figure out something in the market that has never been figured out before. I'm like, I'm on it. So I'm on Yahoo Finance. I'm using spreadsheets. I'm like figuring stuff out. And I pulled off the VIX and I pulled off SPY and I ran a very, very simple regression. And I'm like, I got it. I found it. Look at that negative coefficient. Look at that negative correlation. I'm like, this is crazy. It's so obvious. It's so clear. It's so easy, right? When volatility is up, the market is down. When volatility is down, the market is up. And so I brought that to Dr. Wood. I walked into his office. I closed the door behind me. I'm like, hey man, listen, I got something here. I don't know that anyone's ever seen this before, right? And I showed that to him. And he was like, Jim, I can't believe you didn't already know that. Like, I'm actually not so sure we should allow you to continue in this program. Like, everybody in finance knows that. Like, everybody in the markets knows that there's an inverse relationship between the VIX and SPY, but it was new to me. And I was very, very excited. But those hopes and dreams were squashed pretty quickly. And so the VIX is what I tend to look at. But look at the VIX. Negative correlation coefficients aside. Just look at like a daily chart. And then going back I don't know, let's just go back like a few years. And what's really interesting and what I want to draw everyone's attention to, I mean, what you see happening right now, right? Like the other day, obviously with the tariff stuff and the Greenland stuff and the Iceland stuff and whatever other stuff it was over the weekend. But volatility spiked. And the VIX was, I think it was just over 20. Yeah, it got up to almost 21. And then look at that sell-off, man. Look at that rapid contraction. That is a falling off the cliff dynamic if I've ever seen one. Well, that's not that uncommon. This is the point that I wanted to make. Old PhD stories aside, it's not that uncommon for volatility to fall off the cliff pretty quickly. It's not that uncommon for volatility to rapidly contract after it does indeed expand. Now, it's no guarantee. Like, there is no promise that it's going to, fall off the cliff right away or when you need it to. It may stay elevated for some period of time, but it's also not that uncommon for volatility to just kind of, rapidly move back lower after some closure has been reached. Now, whatever the uncertainty in the world was, or, some of the open loops in the economy are closed and what have you. Like, if I just scroll back on the screen, I'm just scrolling back on the screen just kind of randomly. And this takes us all the way back to, April of 2024. So about a year and a half ago, right? You can see, I mean, there's a little bit of a spike up to like 25. And then what does it do? It sells off. And then it lives down here, right? And then what do you have? You have a huge spike, right? Huge, crazy spike. Again, you got to check the VIX HQ Twitter to know if we can use this print. I don't know that we can. But still, you've got a huge spike in the VIX. And then what does it do? It falls off a cliff. And then it lives on the lower end of the race. Now, there are a couple little blips going higher, but you can see it doesn't tend to stay elevated for very long. And then, of course, it stays down here. You've got a spike, and then it goes back down. You've got a spike, and then it goes back down. And this pattern essentially continues, forever and always. Like this pattern in volatility with the rapid expansions, but then the very, very quick contractions, it's not that uncommon at all. And this is why we like to sell volatility when volatility has expanded. It likes to live on the lower end of the range. So that requires a good amount of patience. Like, this requires a lot of sitting on your hands, finding other things to do, maybe selling some premium when volatility is low, but not going crazy, not going berserk and just, putting all your capital, to work when the VIX is 15 or 14. You're waiting for 18, 19, 20. You're waiting for 21, 22, 23. Because as we've seen, and again, this is not my opinion, right? You can look at the tape yourself. You can look at the charts yourself. Just pull up a daily chart of the VIX and you will see, after the expansions, it does tend to come down very, very quickly. Now, of course, you don't know. I mean, like right here, for example, this is actually, let me delete all that because this is actually a good illustration. If you look at like what happened in August of 2024, right? You can see there was a little bit of a lift off, and then there was this candle right here. So this guy right here, you can see that looked like, all right, this might be it. like this might be the end of this little volatility expansion. And it was not the end at all. I mean, there was another, it went from 30 to 65 or whatever. There was another 35 points left to be expanded in the VIX space. And so again, there's no guarantee. There's no, okay, this is absolutely going to contract after this expansion or what have you. But probabilistically, on average, this is what we like to do. And of course, as we all know, and we've talked about so many times before on the show, what's the solution? The solution is position size. The solution is to make sure that you're not putting all your chips in one basket on one single trade and one singular VIX spike, and like it's all riding on the next, 5 to 7 points in the NASDAQ. That's not a good spot to be in. And so that is not at all what I would do. So, okay. So there's some VIX commentary for you. I mean, is it going to make you a better trader? Maybe a little bit. Like maybe a tiny bit. I don't know. That might actually move the needle a wee little bit. So, okay. Let's go ahead though. Man, I see you guys. Man, look at you guys. I see iPod Touch in the house. iPod Touch, what's going on, my friend? I got back to you, my man. I appreciate you so much. Sam L in the house. Old Two-Face in the house. Man, look at Jared Kramer in the house. Ronex here. Man, Joel James. Trader Scotty S. Man, what's going on with you guys? Rex Kramer's here. Rook Denu, Wolf in the house. And so many others. Stephen Bivens. James Roberts even showed up. Man, I appreciate you guys so much. And so let's go ahead and let's look at a few things happening in the portfolio. So number one, let's talk about, let's start with the good news, right? So the good news is, take a look at GDXJ. Like, don't focus on the gotchas just yet. We'll get to the gotchas. I'll spend at least 6 to 9 seconds per gotcha. But let's spend 8 to 10 minutes on this GDXJ trade since it worked out pretty well. So GDXJ up $7 today, and we are short a put in this guy. We put this trade on, maybe a couple of weeks ago, or maybe only like a week ago now. Hold on. This was maybe pretty quick turnaround. Let me bring up some chains here. Wow, less than a week. How about that? January 16th, we sold this put in GDXJ. We sold it for $3.95. It is currently marking for $1.35. And so I'm no Julius Spina, but it looks like we cleared 50% of max profit there. Like it looks like we were actually able to kind of, move past 50% of max profit on that trade. So that is pretty solid. That is pretty solid indeed. And so for GDXJ, there's really nothing else to do here. Like there's nothing else. There's no reason to stay in the trade because remember, if you want to try to squeeze more juice out of the orange, and I know it can be tempting. I know you can get to 50%. And I'm kind of lucky here because we're actually a little bit beyond 50% of max profit. We're probably more like 60 or 65%. But that's just because I try to do most of my trading on the show. So sometimes that works for me. Sometimes that works against me. I mean, it all kind of, comes out in the wash, I think, in the end. But a lot of times when you get to 50% of max profit, it can be very, very tempting to hold on to that trade and go for a little bit more. Go for 55. Go for 60. Go for 67, right? What have you, because the trade is obviously working, right? The trade is working. Things are going the way that you would have hoped they would go. And so it's like, well, let me just leg this out just a little bit more. I don't generally love that strategy simply because remember, when you put a trade on, right? Like you put a trade on at trade entry, hey, I'm risking 2 to make 1. I'm risking 3 to make 1, whatever. Okay. Your risk in the trade, let's assume it's defined risk just for the purposes of this example. Your risk in the trade is $3, let's say. If the trade starts working, right, and now all of a sudden you have 50 cents of profit, you have 80 cents of profit, you have $1 of profit, and you've hit 50% of max profit, now all of a sudden your total risk in the trade is no longer $3. It's the $3 that you had on entry plus the profits you've accumulated to that point. So now all of a sudden, you've got $3 of the original loss potential. You also have the profit loss potential, if you will, where the profits could go away if the market reverses course and things turn around and what have you. And the same is still true for an undefined risk position, but it's a little bit more abstract simply because the maximum loss is not known on entry. But that's mainly why I don't love the thought or the testing of maybe going for greater profit targets. I think 50% of max profit is a very, very sturdy number. I mean, it's the tried and tested and true, man. Like it's been through the ringer when it comes to, the tasty research over and over and over again. And there's other ways to do it, of course. You can manage even more aggressively. You can take it off early if it's overperforming where you thought it would be at that point, like, a week in or 9 days in or 4 days in or whatever. That's fine too. But I think 50% of max profit, I mean, it's got a little, it's got a little feng shui-ness to it. It's got a little, all is right in the world-ness to it. And so I like it, man. So for GDXJ, let's go ahead and let's close this guy down. So GDXJ, Let's see if we can just get it filled for, let's just do like $1.39. It looks like the mid price was $1.35, but they wouldn't give it to me at $1.39. Rats. Let's try $1.45. Again, remember, guys, if there's improvement to be had, there you go. We got filled there at $1.45. So that's your market, right? I mean, in a product that's pretty liquid like GDXJ, we're not trading some stock that nobody's ever heard of. Like, we're not grabbing stuff off of, the subreddits with the Wall Street Bets bros. Like, we're grabbing stocks and we're grabbing indexes and gold miners that essentially, everybody is trading these days. And so you don't have to worry so much about getting a bad fill price. You can be fairly aggressive with your price discovery, in my opinion. And I don't think you're going to get scraped up too badly. And so there's GDXJ. The other trade I want to take a look at, let's take a look at GDX. So GDX, this was, it's obviously following GDXJ higher, right? It's obviously following GDXJ to the upside as they both essentially traverse the same pathway forward through the forest. So for GDX, though, for us, this was a strangle, or I guess it is a strangle. It's not quite past tense just yet. So we're not going to have the same outcome that we had with the short put on GDXJ, because that's the beautiful thing about a directional trade. Now, a short put, it is directional, of course, but it's also kind of not, right? Because you have so many other things happening. You've got positive theta, you've got negative vega. There's a lot of ways to make money on that strategy without being right directionally. But it also does have a nice, healthy chunk of delta in it. So if you get the move right directionally, you can get paid really quickly. That's exactly what just happened to us with our GDXJ position. And so that was obviously really, really good. When you have a strategy like a strangle, now it's purely time. It's purely volatility. You're not playing direction at all. So any directional moves that are pronounced in either direction are clearly going to work against you. And so because of that, right here, we have a gold miners position, and, GDX has gone up just like GDXJ has gone up. The GDXJ trade worked really well because it benefited from not having any risk. On the upside, it was a bullish play. GDX, being a strangle, has risk on both sides of the market. So any big move in either direction is going to kind of cause, some fits for us. And that's exactly what's happening, right here with GDX. And so you can see, we're down about $4 on the trade. I think the time has come. Let's go ahead and roll that put up. Let's roll the put up. Let's roll the untested side up. Let's tighten up the strikes a little bit. The call side has now been tested. We've actually gone through the call side a wee little bit. Let's roll the put side up. Just tighten the strikes. We'll still have some real estate between the two short strikes, but the benefit is we'll bring in more premium. We'll increase our credit collected. The break-even points will widen out. And so it will just allow us to more effectively control our risk, especially on the upside. So if this thing keeps running to the upside, then we're going to be in a better position to weather that storm. The gotcha is if it reverses course and gold finally goes down, more than 9 points or 15 points in a given day, then all of a sudden we may find ourselves tested on the downside. But that's the trade that we make. And that's kind of the classic, gimme gotcha exchange here. So let's go into GDX. And let's go into the, I'll stay in the February cycle for now. I'm not going to roll it out just yet. If you're ever not sure where to roll a strike, a lot of times you want to reduce directional bias by maybe 30 to 50% or what have you. But if you're ever like, man, I kind of don't want to figure that out, or maybe you're new to this and you're not exactly sure how to figure that out, a very, very simple cheat code, like a very, very simple back of the envelope, cocktail napkin way to do this is just take your strike wherever it is. So for me, in this case, it's a 74 strike, and just roll it up to the edge of the expected move for that cycle. And obviously, if you're rolling out to a new cycle, you can apply the same principle to the new cycle. But if you're in the same cycle, just take the put that you have, or if you're obviously on the other side of the market, take the call that you have, whatever the untested side is, and just roll it to the expected move. So I could just buy back my 74 put right here. So I'm buying back my 74 put. And then I go up to, you can see the edge of the expected move takes me to about the 94, maybe 95 strike. So I could just go in here. I'm buying back my 74 put. You can see that right here, where I've got a 74 put. I'm buying it back, right? +1 on the 74 put. That means I'm buying it. And then I could sneak in here and just sell like a 95 put. And so now what I'm essentially doing is I'm just rolling up to the expected move, and I now have a tighter strangle on my hands. This is like, the dummy proof way of doing this. This is like the simplest possible way of, adjusting on a tested side and not necessarily having to figure out, delta differentials and how much directional bias I might be trimming or what have you. This is always going to keep you kind of on the right side of the equation, if you will, when it comes to collecting enough, but giving yourself still plenty of room and not maybe overdoing it on the adjustment and things like that. So for here, I think this is what we're going to do. Let's just go ahead and let's roll it up to the 95 strike. I like it. We'll pick up about $1.66. So there you go. So we adjusted the GDX strangle. And so we're in a slightly better position now than we were prior to now, which would be before this moment, I think. But I'm not quite sure. But anyway, we move on. So that's GDXJ. That's GDX. You've got your MES short puts, you got your MCL strangles. I'm going to sit tight and all that. You got SLV, obviously getting blastola on SLV, but I'm going to sit tight. I've kind of made my bed in this, and I'm like, hey, I want to be a little bit short silver right now, and this is the way to do it. This is great. And so for all you metals bulls out there, once again, you are welcome. Once again, you are welcome. I'm trying to find more ways to help you, and I just don't know if I have any more. Me being short the metals is about the best thing I could ever do for you. Now, of course, we've talked about this. Send payment to the address that I've already provided for you. Don't send checks. Don't send any paper trails. Just send straight cash. That would be the best way for you to kind of pay your debt on this SLV short. So SLV, we're going to stay short, and then that's going to be that. And then Starbucks, Starbucks was actually up a little bit earlier today. And you know what's funny? So Starbucks has earnings coming up next week. When Starbucks was, let me bring up a chart here. Starbucks was up to, look at that, man. That's quite a turnaround. Starbucks was over 97, right? Yeah, it was 97.80. So I was looking at this earlier, and when it was 97 and some change, I was like, okay, man, this is getting a little crazy. Maybe we should take off that, that long in the money, that long call that's kind of deep in the money, that leap option that we applied. Now that Starbucks has sold off a little bit, I'm like, okay, now it's a little bit personal. Like, I kind of want to get those couple dollars back, right? I mean, are you a real trader if it doesn't get personal? I don't think so. And so I think we're going to stay in Starbucks for a little bit. Again, I kind of had made my mind up on this. I was like, I'll probably ride this thing until earnings. And so we've got, today's Thursday going into Friday. And then, obviously there could be more, tariff news over the weekend. But if there is, it'll all get walked back by Tuesday of next week. It'll all get tacoed out by Wednesday of next week at the absolute latest, which will be good because next Wednesday is Starbucks earnings. Next Wednesday is USA earnings. I think Jerome Powell is going to be talking from the FOMC to tell us how the US of A is doing. And then obviously we've got Greenland earnings are coming up pretty soon here. I don't think they've posted the date on that yet, but that should be coming in the next quarter too. You got Greenland, you got Iceland. Like we've got all these new kind of, US stocks that we're going to be able to trade. It's going to be fun. It's going to be a good time. Sorry, so that's Starbucks. That's basically, we got Intel earnings, which are tonight. We did our calendar spread. We'll see what happens tonight on the Intel earnings. But and then obviously GLD, the short call spread, we're getting crushed. But that's just that's the way that it goes. And sorry, let's see here. Where are we at though? See you guys in the chat. Man, look at you guys. Man, look at you guys. I see you guys, and I am going to surprise and delight a couple people in the end. Jared Kramer said, Dr. Jet got that tip jar going. That's what I'm saying, man. Like, you think that I'm going to be able to feed Amelia May? You think it's just going to pay for itself? It's not. I can assure you it's not. You think I'm going to be able to, make enough daddy's chicken for Penelope and Eli? Absolutely not. And so, yes, we're going to keep and get the tip jar going. And so, again, just straight cash, right? You can even give me some gold. You can even give me a little bit of silver. Like, drop some silver coins. Is it nickel? Have you guys seen that stuff on the internet? Now, again, I don't know how you feel, but I believe everything I see on the internet. Because would they lie to you? Would they lie to me? I don't think so. I saw something recently that was like the amount of silver that's in a nickel, which is a little bit odd. I'm like, why are they not using nickel in a nickel? But anyway, I digress. The amount of silver that's in a nickel, because of the run up in silver, is actually worth more than the actual nickel itself. Now, I think the arb there is only about a penny or two, maybe a penny or a penny and a half. And so apparently there's these dudes that are just buying up all these nickels and putting them in warehouses, and then they're going to melt it down and then sell the silver on the black market. I'm like, that's an amazing business idea. Yeah, sure, you're breaking all kinds of laws and violating all kinds of, whatever else is, but hey, I like it. I like the out of the box thinking. And so have you guys seen the same thing? Like, I can't be the only one that has seen this stuff. And so if you want to drop some nickels in the tip jar, I would greatly appreciate that, because it's about 6 to 7 cents per nickel. And so let's see, where you guys at? Man, I see you guys in the house, man. I appreciate you guys so much. Look at you guys. Let me go all the way back to the beginning. Let's go to the beginning. And so Orgdenu's in the house. What's going on there, Orgdenu? Hello, Dr. Jim. Another day, another taco. That's right. Was there ever a doubt? So when it happens again, because it'll happen again, right? It's all there. It's all in the art of the deal. It's all there, man. Like, it's going to happen again. If we fall for it again, and I mean all of us, this is not just me, this is not just you, like, we're in this thing together. If we fall for it again by sending the market down 1%, 80 basis points, 60 basis points, whatever, we only have ourselves to blame. Like, we only have ourselves to blame, because there is no way he's going to follow through on any of that rigmarole. There's just no way. And so anyway, I digress. But Orgdenu says, thank you so much for teaching us how to do the expected move. Man, I appreciate you, my friend. And we did it again today on the GDX, the GDX strangle. You are simply the best. A++ finance and B- humor. Yes, thank you, my friend. I will take that. I will absolutely take that pairs trade right there with the A+ finance education and the B- humor. That's the combo. That's the combo back. And so there you go. N1C in the house. What's going on there, N1C? I appreciate you, my friend. Wolf is in the house. What's going on there, Wolf? Appreciate you, my friend. James Bond number 4. What is going on with Tesla today? How are you going to trade earnings with such low IVR? Yeah, I don't know. Tesla's not till next week, though, right? Wow, IV rank of 1. Huh. Yeah, that doesn't really make a lot of sense. I think but they've got earnings next week, right? Is it the 20th? Yeah, 20th. Oh, wow, that's on the Fed day. Man, that's going to be crazy stuff. And I'm going to be traveling to Chicago through the polar vortex. Like, I'm going to have to go through, like, it's in my contract. Like, it is a clause in my contract. If it's under 40, I'm not required to be there, right? If I have to find my pants, I am not required to move any further on whatever else needs to be done. And so, yeah, it's not going to be good for me. That's absolutely sure. But Tesla next Wednesday on January 28th. Yeah, I don't know, man, but the IV rank of 1.3, this is something where if the volatility is not there, but you still want to play the stock, this is where maybe doing something, defined risk, maybe doing something directional makes a lot of sense. This is where, like, an at the money vertical can be a really, really good option for you, where you're just kind of, you're buying, one strike in the money, maybe selling one strike out of the money, and then just kind of going from there. I think that can be a really, really good option. And so, yeah, that's probably how I would look to play it next week, but we'll have to wait and see. And so, because next Wednesday is such a heavy day, even though I will be traveling, I probably will be doing some trades. Maybe we'll do them all on Tuesday so we can do them together. I think that would be good. And so, yeah, maybe we'll do that. But let's see. Orgdenu's in the house. Hey, Doc, can you do a 30 to 45-minute webinar where you can show us how to set up and manage strangles? I am really struggling to understand. Sorry, no, don't be sorry, man. It's a great question. It's a really, really good question. So I think what we should do, let me think here. So I'll give you a couple of things. So number one, maybe we should just have like a strangle day here, like on this show. I mean, we've got 30 or 45 minutes. We've got the whole show. So maybe we just take a show sometime soon. Probably let's get through earnings season. And so maybe when things slow down on the other side of earnings season, and then, we obviously have Greenland earnings and Iceland earnings and whatever, but we get through all those things. Maybe we just have some strangle days, or one day where we put on a couple of strangles and then we talk through very clearly, like, okay, this is how, we would look to adjust the strangle if XYZ happens. And then, of course, if you follow the show on a regular basis, which I know that you do there, Orgdenu, then as we need to adjust those strategies, like, you'll see it happen live on the show, just like I did with GDX today. And so that's why I think it is really valuable to only do my live trading on the show. So that way, if you do watch on a regular basis, you're not left out. Like, you're not left wondering, like, what happened with that position? Where did it go? How did he end up in that adjustment? Like, what was he thinking? Like, I try to walk through all of my thoughts, for better or worse, on a given adjustment. So I think we should do that in the next couple of weeks, maybe. But also, if you go to the YouTube channel and you go to the crash courses, there's the strategy management crash course. Now, that was a few years ago now, but these are like, these are timeless, man. These are evergreen pieces. These are like the black tuxedo of options trading. I mean, the way that you adjust a strangle, it's pretty, straightforward once you get the hang of it. Like until you get the hang of it, it's obviously super complicated. And you're like, man, I'm not exactly sure what I'm doing at these various points or whatever. But once you do it a few times and you kind of put in some reps and put in the work and things like that, then it becomes, a bit of a well-worn rut. And so, or Daniel, I would check out that crash course. Check out that crash course because there is a specific 6 to 10 minute little, section on strangle specifically, talking about putting them on, talking about managing them. And so it'll give you kind of like the basic, building blocks of how to do strangle adjustment over time. And then maybe we'll have a day in the next few weeks where we do some strangles on the show. I think that would be good. I think that'd be really, really good. And so let's see. Jared Kramer says, just need to know bullish or bearish on Intel, Dr. J, so I can fade with love. Yeah, I appreciate you, my friend. We already did Intel. And this was a trade that I got from one of you guys yesterday. I forgot to write it down. Man, I'm really off my receipt keeping game. I forgot who gave me the Intel trade yesterday. Because I did this trade yesterday and it was a calendar spread. And it was from one of you guys. So identify yourself if you are responsible for the Intel trade. Or maybe wait to see how it goes and then identify yourself. That's just good giving Dr. J trades strategy, of course. But yeah, I would say I'm not really anything. I'm like kind of neutral, maybe slightly bullish on Intel. And so that's all I can give you, Jared. I can't give you any more than that. I'm slightly neutral to bullish on Intel. I mean, I'm personally still shocked they're in business. I'm completely shocked that they're still out there and they're still doing it. And so if that helps you kind of, play them to the upside, then maybe that'll be a good thing. And so let's see. James Robert in the house is still Tasty Trade having problems. Nah, man, we're all good to go. We are all good to go. Not able to open any positions today. Also, man, that's crazy. I would email support or I would call support because we've been good to go all day today. I know yesterday was kind of a difficult day and I mean, it happens to everybody from time to time. And so we appreciate you guys. So much. But I would give them a call. I would give them a call or shoot them an email and you should be good to go there, James Robert. I mean, I haven't had any issues with the platform today. And so Stephen Bivens, Jared Kramer, it will be either one of those or neutral. I guarantee it. Yes, that's correct. And again, I'm not even sure what I am. I'm doing a calendar spread. I guess I'm a little bit neutral, maybe slightly bullish, but yeah. Let's see. Oh, N1C says it was working for me today. Maybe uninstall and reinstall your client. Yeah, I mean the old log out, log back in is always a decent strategy, and so you could always do that too. E-Media says, Dr. Jim, we learned that yesterday if TT wants to increase YouTube chat algo, then just turn the platform off for a bit. Yeah. And so maybe it was planned all along. No, it obviously wasn't, but that's not a bad strategy, right? I mean, let's work this out. Let's think about this mentally, right? If the number one objective is to pump the algo, if that is the number one objective for so many different reasons, not only does it increase the engagement, not only does it push this out to more people, but it gets the robots on our side. And who do you think is going to be in control in 9 to 18 months? It ain't going to be me, and it ain't going to be you. It's going to be all of them. And so maybe by pumping the algo and kind of feeding the beast a little bit, it's just going to end up working out better for us in the end. And so I like the strategy, man. I like the strategy a lot there, E-Media. Rex Kramer in the house. What's going on there, Rex Kramer? Please give my best to Zoe out there, if I'm remembering correctly. And so thank you for being here, my friend. I appreciate you. Let's see. N1C says to use the CC cleaner. Yeah, that's like some disk space stuff. And so, yeah, man, go for it. 100% go for it. And so let's see. E-Media. Oh, I stole that one from N1C. There you go. There you go. Isn't there that line that says good artists copy and great artists steal? And I'm like, yeah, that's some good stuff, man. So yeah, don't feel bad about stealing it. It's jungle rules, man. It's prison rules in the From Theory to Practice YouTube chat. And so it's every man and woman for himself, 100%. So Stephen Bivens, Dr. J, thoughts on a Tesla earnings play? IVR is so low there. Should we avoid or rely on price action only? Yeah, exactly. I mean, again, it's going to be next week, so we don't have to do anything right now. And let's wait and see. I mean, things can change quickly, right? I mean, if we get, some action tomorrow or Monday, Tuesday of next week, we may all of a sudden see the IV rank, pop up to 30 or 40. That's not that crazy. It certainly can change that quickly if there's kind of a big movement in the market or for that stock specifically. But if it doesn't happen, then just take a directional shot. Just do something really simple, do something really small if you want to play it. Like if you want to go ahead and, play it to the upside, play it to the downside, whatever, then, just do something at the money, and at the money vertical spread is a great way to do that. And so, iPod Touch in the house. What's going on there, iPod Touch? Dr. Jim, we can feel the fear in you. Can you? I mean, you should, because I'm obviously terrified. But iPod Touch is here, man. You are here on another day when the market is ripping higher. And so, man, you are a good sport, my friend. You are a good sport. So let us know. Like here, I'm going to put you on the spot, man. When is the next event horizon? Like, when is it coming? Like, in the past, previously, you've been able to nail this thing to the day. And by to the day, I mean plus or minus 3 to 6 months. So let us know in the chat, when is the next event horizon? Because we need to know, my friend, and we rely on you for that information. And so hook us up there, iPod Touch. Manchurian in the house. Should you fade Dr. Jim on Intel? He nailed Netflix. Yeah, I mean, there's nothing really to fade. I mean, I'm neutral. So I guess you would what? You'd buy a straddle? I mean, if you really want to run this thing, to its natural end, I guess you're buying straddles now at this point, which is a terrible strategy because you're paying through the nose for volatility. You've got all that theta that's just going to wipe you out the next day or whatever. And so, yeah, I mean, I guess you would buy a straddle in Intel. Man, that feels so wrong to even say, to even suggest and put it out there. Like, just to be clear, I think that's a very bad strategy. But just to put that guy out there, it doesn't feel right at all. And so let's see. Oh, Sam L's in the house. Doc, the YouTube algo got me yesterday. I couldn't even post a comment. You can't beat the algo. No, you can't. Again, so if you can't beat him, what do? You join him. How do you join the algo? I don't know. But if I figure it out, I'm not telling you guys because I want to make sure that in the hierarchy of humans, I'm above you guys. Like when the algo looks at all of us and looks down on all of us, it sees Dr. Jim and I'm held in a bit of a higher esteem than maybe the common man or common woman, which would be quite the surprise since I am every bit the common man. And so, Rets Media. Hey, Dr. Jim, looking forward to that Intel earnings trade strangle at the 10 Delta for Friday tomorrow. I didn't do the strangle, man. I just did the calendar spread. Was that your trade, Rets Media? Did you give me that? I don't think you did, but it could have been you. Old Two-Face in the house. Dr. G, I've got a 63.5, 56.5 strangle in MCL after the recent vol expansion. This down move is helping, but I'm still down on the trade about $40. Do I close and roll or do nothing? You didn't tell me what the expiration was. So I don't know what that is, but if you're in February with 26 days to go, you're not quite at 21 days yet, so you could certainly sit tight. But if you're at 21, maybe you have a different expiration cycle, or you just want to. You've got a little profit on your hands. You're getting closer to 21 days to go, assuming you're in this cycle or one that's even closer to 21. Hey, ringing the register now makes sense to me because getting inside of 21, it doesn't really start to grow teeth until maybe 14. And so if you want to hang in to like 18 or 17 or 16, you didn't hear that from me, but I think you'll probably be okay from a gamma risk standpoint. Famous last words, of course. But yeah, if you want to ring the register here, I think you're fine. I think, you in a situation like this where, you've got 63.5, 56.5. So the stock is at 59 and some change. So stock price wise, it's in a great spot. It's nicely situated between the short strikes. And so you're not tested on either side now. You've gotten a little bit of relief, like you said, on the down move, but the volatility expansion has made, easy profits or more profits a bit challenging for you at this point. But still, you're in a good spot. So you have a lot of really good options at your disposal, a lot of really good alternatives. I don't really know. It's going to be your call at the end of the day. Do you ring the register? I think that would be fine. Do you leave it on? I think that would be fine too. And so it's really going to be your call. But the good news is, you are between the short strikes at this point. And so that's obviously a good thing. And so let's see, old Too Fair, Sam L. Doc, this feels like a pump it to dump it on Friday. Without the iPod Touch guidance, we're trading blind. Man, I could not agree more. And he's here. Like he's here right now. So you guys need to lay it on thick. Like he's our guy. Like when you need an event horizon on the calendar, again, plus or minus 9 to 10 months, he's your guy. He is 100% your guy. So iPod Touch, we need you, man. Like we need you right now. And so let us know. iPod Touch has never been a better time to sell it hard. There it is. There it is. So apparently, like we are living through the precipice of the next event horizon, according to iPod Touch. And so, man, I like it. I like it a whole lot. That's some good stuff. So let's see. Old Two-Face. I'm in the February 17th cycle. Oh, the same cycle as me. Yeah. Again, so my answer stands. You could take it off. You could leave it on. I think they're both good options at this point. It's really ultimately going to be your call. I don't see any clear, like holes in the logic or holes in the thinking, whether you choose one versus the other. If it were me, I would probably stay tight. I'd probably sit tight because you're not quite there yet. You don't really have to worry about gamma risk yet. You finally got the stock where you want it. I would sit tight, but if you took it off, I don't think that's a bad move either. And so let's see. N1C says, Dr. J said yesterday that silver won't reach 100. So let's see. Did I say that? I don't know that I said that. I mean, I might have said that, but I also may have gone back into the tapes and deep faked my way into not saying that in the last 8 to 10 hours, and so that's also very possible. But I mean, silver 100. I mean, guys, I don't see it happening. I mean, yeah, sure, it's up another 350 today, and it'll be up another $4 to $5 tomorrow, which essentially puts it at 100. But man, I mean, if we go for the next 5 days, the delta on the 100 strike is 29. Man, that's really, really nuts. So if it's 30, let's say, just to make it a bit more feng shui, that means there is a 60% chance that silver hits 100 in the next 5 days. Now, remember, 2 of those next 5 days are weekend days. Like 2 of those next 5 days are over the weekend. So we're talking about today, tomorrow, and then Monday, right? So basically by the end of close on Monday, I suppose it must be, right? It's got to be. By the end of close on Monday, this thing has a 60% chance of hitting 100. Man, I mean, all I know is there must be a stop fiesta resting above 100 at this point. Like, you think the algorithm is really going to let us get by without sweeping out all those stops that are resting above 100? The big number bros are not going to let that happen, right? The stop algos and the stop hunters are not going to let that happen. And so at this point, it appears to be a foregone conclusion. But just in case I did say that yesterday, although I don't remember saying that yesterday, I'm going to actually double down on having not said that yesterday, and I'm going to say it again today. I don't think silver's going to get to 100. I don't. I really don't. And so it's going to be, it could be the greatest prediction I've ever made in my lengthy trading career. And so let's see. Bernard Don is in the house. What's going on there, Bernard Don? I appreciate you, my friend. Thank you for being here so much. Bernard Don just says something for the algo. There you go. You got to mix it up. Right? Sometimes you do like for the love of the algo. Sometimes you do something for the algo. Like you got to mix it up. Like otherwise the algo is going to know you're coming, and none of us want that. So Joel James, Dr. Jim, I think Tesla is going to go back to 500 post earnings over the next 2 to 3 months. IVR is low. What sort of trade would you think about in there if you were going to put one on? Well, if you were playing for it to go up to 500, I would probably want something. I would probably want something with more upside potential. And so maybe a poor man's covered call. Like maybe you're doing something where you're going out a few months. Maybe you're going out 90 days, 120 days, whatever. You're buying some strike that's maybe 70 to 80 delta. Obviously, the higher delta you choose, the greater the cost of the strategy. So that's obviously the balancing act that you're going to have to decide what makes sense. But the higher delta you choose, the more that long call will feel like long stock, right? And so it's a balancing act. Of course, it's gimmies and gotchas. But if I wanted something that has a good amount of upside potential, like up to 500 or beyond, I think a poor man's covered call would be my choice there, because it's going to give you a lot of that upside potential, and you're going to be able to choose like where you set your your short strikes. Like for example, like here I'll even show you really quick. You've got earnings. Maybe you want to do this after earnings. Maybe you want to do it before. I mean, that's going to be your call, of course. But maybe you go out to like if I go out to May 15th, 113 days. Maybe I buy. You could buy like a 360 call. Right? Which, I mean, that's going to cost you 10 grand. So that's a pretty large position. But keep in mind, this is a $450 stock. And so it still is, less than 25% of the cost, the notional cost, and the buying power effect of what it would be to actually hold the shares. And so obviously, kind of be mindful of that. Now, of course, it depends on whether or not you have a margin account or a cash account or IRA or whatever. But just the total notional value of 100 shares would be like 45 grand. And so unless I've got margin, then it's going to be 45 grand. Even if I do have margin, it's still 22.5 or whatever. And so this is a lot more cost effective than buying the shares like straight up. And so maybe I buy, and this is an 80 delta, so I'm going to get 80% of the stock move to the upside. So maybe I buy this 80 and then I go in here and, close up May. Maybe I go into like February and you could sell. I mean, man, if you want to play this thing all the way up to like, a 500 run, I mean, you could sell the 500 call. That's got a 23 delta. You could even sell a 520 call. Yeah, you're only picking up a few bucks on the premium. So maybe you want to bring it up, a little bit closer than that. Or maybe you don't sell February. Maybe you go out to March. Like I'm kind of running out of time here, so I can't go through this any longer. But this hopefully gives you a couple of things to think about. Like I'm buying an 80 delta, like a few months out, and then I'm selling premium against it. So now you get all the things you want. You get the upside potential. You got plenty of room to run, but then you also get premium working. You also get some short, calls to help to bring in some theta and some of the nice things that come along with short options that you're able to tap into that as well. And so hopefully that helps a little bit. But I got to run. I got to go. I appreciate you guys. I appreciate you guys so very much. If I can help you guys in any way, please shoot me an email. I'm jschultz@tastylive.com, or we can connect on Twitter. I'm at jschultzf30. I would love to hear from you guys on there as well. But stay tuned. We do have Tim Knight coming up next with Trading the Charts. In the meantime, guys, trade them small, trade them heavy, and stay generous. We'll see you guys tomorrow.
Today's episode of Market Measures is brought to you by SIBO. SIBO is partnering with tastylive to provide educational opportunities for traders at all levels. Did you know index options like these can provide opportunities for diversification, lower volatility, liquidity, and other benefits? To continue your education on some of the mechanics learned in today's Market Measures, check out SIBO's Retail Trader Suite at www.sibo.com/minis.
Got big goals for 2026? Get the big deal. Earn a 4% cash match on all qualifying deposits, up to $10,000 total. Plus, unlock 30 days of commission-free trading. Trade with confidence using active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. Earn a 4% cash match when you open and fund a new Tasty Trade account today. Got big trade ideas? Get the big deal at Tasty Trade. Make moves with confidence using smart tools and dynamic charts. And trade what you want, how you want. Earn a 4% cash match when you open and fund a new Tasty Trade account today.
Hello, everybody. Well, another weird day. Very green. The taco effect persists. We're continuing to blast higher. Lifetime highs in the small caps. But structurally, the likes of the spiders and the cubes are still busted, even though they're green. And you know what? We could really use a down day tomorrow. In fact, we kind of have to have one if the bears are going to have any left from this kind of structural perspective I'm talking about. The one thing I have been bullish on and celebrate the price ascent of is precious metals. Gold approaching $5,000 an ounce, silver approaching $100 an ounce. And I was curious, did I ever imagine gold was going to be 5,000? So I went to my own website and just went to the search bar. And I honestly didn't know. This is not some made-up story. I really did this today because I didn't know. So I went to my site and typed, the words gold, $5,000, enter. And it was like, brrr, and it turns out I did. Back in 2021 and 2022, I wrote multiple times, kind of sheepishly, that don't be surprised in a few years if this is going to be over 5,000 an ounce. Now, it's not quite time for a victory lap because we're not there yet, but boy, are we close. Because when I was writing those words, gold was like $1,500 or $1,600, something like that. So not a bad call. And gold is, I think gold and silver's actions, as I've said over and over, are indicative of something very changing. Because I've also mentioned that those predictions were like 4 or 5 years ago. But a couple years back, I was emphatic with my readers about, hey, go to Costco. They're selling silver. Go buy silver. Because it was a really good price. And so people loaded up on these 1 ounce American Eagle 2023, 2024 coins, whatever they were, silver coins. And those are worth 3 times as much as they were. And Costco ain't selling any bullion anymore. That stuff sold out quick. So precious metals is a big deal. I think it means a fundamental change in what's going on here on Earth. And I do celebrate and hoist whatever alcoholic beverage is available in the air in the general direction of precious metals to toast them. Equities, not so much. The price isn't there. I could kind of do without, but it just keeps going. Let's look at some charts together. And as we approach the end of this week, here is the spider. Now, let me tell you, what am I talking about? Structural. I almost think of this in architectural terms or in engineering terms. And it really is some flavor of this kind of chart. That is to say, a couple of weeks back, we broke out above this triangle pattern. And that made me so sad, because this was sort of like the worst of it right here, back on the 12th, because it looked like, the bulls have had a really good 17 years now, and this just didn't seem to be another chapter in this endless novel of higher prices. So this breakout here, followed by the breakout the next day, seemed very, very positive for the bulls. Over the next few days, that teetered and then finally broke down with a lot of drama, of course, this week when the market opened on Tuesday. So we just had this huge gap lower, and of course it was taco time, and so Trump hoisted the white flag, and we had this explosive rally yesterday and a continuation of that rally today. But the failure is still there, and look where we're at right now. We are just below all this failure point right here. That's why I say it would be so helpful if we got a reversal tomorrow. Even a modest down day would do the trick. We need to see an affirmation that, yes, this is very important resistance, this apex that we're looking at right there. It's a big deal. So now, in a world of its own, and something I'm not going anywhere near, is the small caps, IWM, lifetime highs. I would mention on this, we've got not a bad shooting star going on right here. Maybe this is, okay, let's put in, as long as the market gods are listening, let's put in another wish. How about, market gods, a high tomorrow lower than today's low? That would create a very nice reversal pattern right here. As it is now, we're at lifetime highs. We're up still almost a full percentage point on this, but that would be a really nice reversal on this. Small caps have been just superstars for weeks now, but that would help. Although, like I said, I'm avoiding the small caps entirely. And the cubes are more akin to what the spiders are doing. That is, they're still below, cleanly below, their failed triangle pattern. And as I've mentioned before, this was even better than the spiders in the sense that this gap right here held. We got as close as we got right here. It's just a perfect gap seal and then turn tail. So the fact we're below this broken line is a good thing. So spiders look good, cubes look good, small caps, they're in la-la land, so fine. Turning our attention to precious metals. I mentioned yesterday owning dust. I don't claim any foresight into what happened today. I got out of dust the moment the market opened this morning just because I wanted to. And I got out with a small profit, enough to maybe, I don't know, buy me and a friend a couple of sandwiches or something. So I got out with a profit, and good thing too, because I would have gotten run over on this one. All the precious metals have had a spectacular day. GLD, hi Mish, was up over 2%. And gold is up almost another $100. At the moment, we are 29.60, almost a 2% gain on the futures. And GLD, lifetime high, obviously. And what I had said back here, and this was a real fake out. This was a real trick on the part of the market here. We had this big plunge after Christmas, but it only lasted a few days, and then it was off to the races again. But I had said back here that of the charts, gold looked the healthiest, and that's panned out nicely. The miners, and particularly the junior miners, are just sparkling. Here's GDXJ, the junior miners, up 5.8%. Lifetime high. I won't even bother going back. Just take my word for it. It's a lifetime high. Just sensational. Longer time viewers may recall the one individual miner I was fixated on was Ski, SKE, which is Skina Resources. Today, up almost another 10%. And even in a short amount of time, just back here early in November, this was a teen stock. We're down at 14, 15, and we've more than doubled since that. And of course, it was much, much lower before. But just about any mining stock is just having a grand old time. Over with silver, percentage-wise, better than gold. Almost a 4% gain. I've got a funny feeling we're going to see triple digits tomorrow. It's just a hunch, but who knows? Sooner or later, we'll get there. But silver is up, as I say, about 4%, lifetime high, and there's the triple digits just above. So, one more day like this would do the trick. And it's been virtually uninterrupted. I mean, we got this little bumpy road just after Christmas for whatever reason, maybe something to do with the end of the tax year, I don't know. But it was just a pause. People would love to pay the kinds of prices that even back here around Christmas time, because we just keep blasting higher. In not so hot territory, there's old Bitcoin, snore, still flopping around in the upper 80,000s. And, now people are wringing their hands enough that they're starting to talk about quantum computing, pulling the rug out from under this. I guess the general idea is that, in a few years, if the cryptographic protection around crypto is laid waste by quantum, well, it's even more useless than it is right now. So, yeah. Bitcoin not doing so hot. And Ethereum, which is Tom Lee's drug of choice, I think. Ethereum is likewise flopping around like a fish on the bottom of a bass boat. We're down and just below 3,000. And it's just kind of sitting there, poke it with a stick. Do something, doesn't. Okay, well, in spite of the dreadfully green day we've had today and yesterday, still a bear at heart and still hanging on to most of these short positions. I've gotten knocked out of one or two, like ANET. Boy, got zapped out of that first thing this morning. On the whole, holding tough, just letting the stops do their work. A few of the positions, which God bless them, are either down or at least not putting their Nikes on and jumping higher. AJG is doing okay. It's up a little bit, but I still just love that chart. Axon is actually down a little bit, more than a couple of dollars today, beneath its giant distribution top. I made mention of this newer position, Sienna, CIEN, which is also down about 0.4%. These aren't dramatic moves, but listen, on a day like this, I will take it. Give me a red negative penny. I'm a happy guy. Dick's Sporting, DKS. This is down a little bit better, 1.3%. I've got June puts on this fella. And let's just grow that. He's taking a sweet time, so we'll just increase the size of that semicircle there. You probably noticed my new background. They kicked me out of the bar. I wasn't paying my tab, but this is the new look for the show, which I think is appropriate. Red, it's my favorite color, so that works for me. What else? Uber also got June puts on this one. This one's down pretty nicely. I appreciate it. Down 2.61%. And let's just throw it on a price line down here, around about there, something like that. No, that's not quite right. There we go. So something like that, a failure of that level would be appreciated. Any others? Well, Palantir, old Alex Karp's company there. It's up just a little bit, but I just really like the shape of this pattern. And I noticed that it used to be Apple kind of wrapped up the earnings season. Unless I've got my earnings date wrong, things are a little different this time. I believe Apple is next Thursday afternoon, but Alphabet is the week following. So we're going to be into early February before earnings season wraps up, which I appreciate. It's not, earnings is kind of the fun part of the year. And this afternoon, again, if I just have to put an asterisk next to this because earnings data is often dirty, but I think ISRG, Intuitive Surgical, Intel, INTC, and CLAC, KLAC, I think those are the three big ones this afternoon. Those that I have learned not to go anywhere near continue to blast higher. These kind of storage companies, Western Digital up again, lifetime high. STX Seagate up again, lifetime high. And I'm glad I have nothing to do with them. And SanDisk up again, lifetime high. But you know what? It's looking a little bit tired. On a daily basis. I will say, and I think I mentioned this yesterday, your internet connection is unstable. Well, I guess it's better than the psychological assessment. FNGD. Now this is, I've gone loopy on this one because I love this chart. I should not fall in love with a triple leverage bearish instrument, but I've done so. So FNGD is based on the FANG stock group. And as I say, it's triple bearish leveraged. I came into the day long this. I gobbled up a bunch more. And I will get out with great sadness if and only if it gets below this price level. I've given him a few pennies of leeway, but 5.6. I will just bail if it does that. But I really like the looks of this, and the volume has gone bananas on this. People have been falling all over themselves to get into FNGD. So just saying. As far as bonds go, bonds recovered yesterday and then to a smaller degree today. This is ZB, and then here's TLT, which is the ETF to the equivalent to trade upon. I've nibbled at some June puts on this today as well because I do think longer term bonds may be at risk. It's an ugly chart, nothing like FNGD, but I'm going to give that a shot as well. How are we doing on time? A few moments left. You know what? We'll jump to the bottom and just say hello to Intel. This is going to do the big report after the close. Intel has gone up hundreds of % in a matter of months. It's been a very, very strong stock, and it's got a lot to prove, I guess, after hours. So that'll be one worth watching because semiconductors remain so terribly important to this market. All right, I'm going to say goodbye, and thanks for swinging by my new red office here, and I'll see you tomorrow to end the week. Good night. Good luck.
Got big goals for 2026? Get the big deal. Earn a 4% cash match on all qualifying deposits, up to $10,000 total. Plus, unlock 30 days of commission-free trading. Trade with confidence using active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. Earn a 4% cash match when you open and fund a new Tasty Trade account today.
We wanted to call in because recently, some traders may have known there was some crazy activity in the SPX, and for some reason they were stopped out 200 or 300%. And what happened, unbeknownst to us, is the trade desk just emailed us and said these trades have been busted, and you're not going to have to pay it. It saved us about $10,000. And then Marty calls us this morning and says, I just want to explain to you guys what a trade bust is. When you really get down into the nitty gritty and you're in the foxhole and things are going bad, when you can reach out to the trade desk and you talk to someone that you've spoken with before who understands your account and the way you trade, that is a feature of Tasty Trade, which I think you guys need to emphasize more because it certainly has meant a lot to us. It saved us a lot of money and it's taught us how to trade a lot better, and that's really helped a lot.
Well, thank you.
This was not a paid, you're not getting paid for this advertisement.
In the world of investing, a beast lurks between the numbers. ready to pounce. Some traders hide from it, some ride it. If that's you, join us on Tasty Trade. Genius loves company.
Earn a 4% cash match when you open and fund a new Tasty Trade account today.
Ring the alarm, hey, ring the alarm, boys. Turn up the charm. Listen up, y'all. Get out the damn stall. It's the last call. Hey, the last call. The last call. The last call.
Mikey, we are back, my friend, and the rally continues after yesterday. We've got E-mini S&P 500 futures up 29. They've actually had their biggest move to the downside in the last 20, 30 minutes or so, about 20 points from the high. NASDAQ up 140. You got the Dow up 280 and the Russell up 21. The Russell currently the strongest of the group. The NASDAQ was kind of the leader throughout the day, though. Oil selling off a bit, /CL 59.35, down $1.27. Volatility futures actually upticking here into the close, up only down 20 cents, about 1%. We're at that 18.20 mark. You have bonds up 7 ticks here. They've had a nice rally off the 113 handle from yesterday. Gold and silver have both been parabolic for more than just today, but have continued that move. Gold just a skosh below 5,000. 49.29 up $92 here. You have silver up almost 4%, 96 and change. You got 2 round numbers coming up here shortly. Bitcoin as well, catching a little bit of a bid into the end of the day here. It was down about $2,000 at one point. The low being 88.4. We're at 89.6 on the futures. Spot down 300. Seems like a risk-on day across the board. Got some big moves, individual names. Meta is one that I've been holding some long delta on. It's been a pain in my tuchus. It's getting a little bit of a bounce today. Microsoft as well, another one that has kind of bounced from the lows here. Amazon up $2 and change. Apple was a little bit stronger, but it really hasn't been a Mag 7 led rally. It's been kind of everything else.
Yeah, gold and silver are crazy. I imagine it's only a matter of time before gold futures hit 5K, silver hits 100. Like, this is where we're at.
Yeah.
But yeah, I do think that there's definitely opportunity, especially to the upside, if that's where you want to go, in products like Microsoft, Amazon. Like, these companies aren't going away.
Next week, all of them have earnings. So.
Yeah. And you know, we see it time and time again. Last year, if you look at a chart of Apple, like, everyone was like, Apple's going to zero.
Google was the same.
Yeah, Apple got down to like 170, and then it skyrocketed all the way up to almost 300. That's also come down.
Mm-hmm.
But yeah, Google's the same, was in the same boat as Apple last year.
Google was proclaimed dead.
Yeah.
AI killed Google. Now it's the biggest company in the world.
Yeah, now Google is taking liquidity away from Microsoft, which Microsoft was the one ripping. So it's like, just if you're rotating in and out of these things, it's not a unsound strategy, especially if you're taking money out of Google, putting it into other products that are less than their all-time highs, because it just feels like the rotation has been pretty apparent here over the last year or so. And if you're asking me a simple question of, do I think Microsoft will get back to all-time highs? I think the answer is yeah. It's just timing it is hard. But if you have a longer time frame with maybe undefined risk in there, I think it's a nice bullish case if you're jumping on board there. But yes, to your point, we're kind of in that lull period, a very short lull period for earnings. We had Netflix report. We've got Intel after the close today. We can talk about a trade I placed in there, but next week is where everything goes nuts. Like, next week is when you've got all these companies. Next week and the following week is when you have basically all the other Mag 7 stocks, aside from NVIDIA, which is always a laggard. NVIDIA's like,
it's always at
I feel like they've restructured the calendar so that it's like everything's in the middle, and then NVIDIA is like your final hurrah.
Your cherry on the top.
Yeah, exactly.
Yes.
But yeah, Intel after the close today. What did you do in there, if anything?
Intel trading at 53.91. It's off about 30 cents from the highs here. It's had an astronomical run. I am short some premium, a little bit of short delta. I'm kind of neutral delta here. We have a 1/3 call ratio spread, and then we added a short put today just because the rally has been crazy here. So we're short the 50 put and the 50 call. That's actually a synthetic stock position. And then short 3 of the 55 calls. So your risk profile is very much that of like a straddle kind of position right here. I would like to see it a little bit lower, probably like a 50 handle would be 50, 51 would probably be like a perfect spot for us.
Fair.
But we did do a trade for the Johnny Trader portfolio in there as well. We did a bazillion trades today, or I did a ton of them, 39 trades in this account, but we did the Johnny trades as well. You can get those on the follow page. We did a couple different trades. We got some short delta in the SPYs with a put diagonal spread. That was our short trade. Intel, we did like kind of some neutral short vol here. We did the short put call ratio spread. We did it out in February. So kind of similar to what I have in this account. And then in Amazon, we got a little bit of long delta here. We've been trying to do one of each, one bullish, one bearish, one neutral trade each time we have that show, which is on Thursdays at 8:40 a.m.
I love it.
Yeah.
Yeah, Intel, I feel like given the recent strength of the market, it's always tough. Like Intel's at highs, so like how much higher is it going to go? I don't know. But I just placed a really small trade in there. I bought the 60 strike March call, and then I sold the 60 strike one day against it.
Little calendar spread?
Yeah, just a small calendar spread. I mean, if we get a rally, if we get an inside up move, it's going to be a really nice trade. If we chop around here, I can roll that one day into February and go to the 60 strike or just leave it. If we end up selling off, I'll just leave it with the long option and see where it goes from there. But yeah, I wanted to play kind of an inside up move with a really small risk profile. So the calendar spread kind of hits those checkpoints. But like we said, there's plenty more trading opportunities coming tomorrow, but also next week. So fast market tomorrow.
Yes, we have that tomorrow. Fast market, tastylive.com/fast market to submit your trade ideas. We would love to have your trade ideas for this segment. It's always a pleasure doing this.
Yeah, and they're always good trades.
Great.
Yeah. Whenever we do the morning show, we throw in a bunch of trades, and then they end up being
the next day.
Yeah,
it's a one-day trade. It's amazing.
It just shows that if you get out of your own head and you accept others' ideas, it can be a good thing.
Open-minded.
Yeah,
we're an open-minded group here.
Yeah. Yes. So yeah, tastylive.com/fast market. You can submit your trade ideas, and those will be reviewed tomorrow.
Yeah, I'm getting some flack for saying it's a risk-on day. Does it feel like a risk-on day to you?
Yeah. I mean, the market's not ripping, but if you look at vol is telling us the same story it's been telling us past couple of weeks, aside from Tuesday.
Yeah.
We're in contango all the way through the M contract. And that's all it really matters from my perspective is like, we're not going to drop 30% in the market unless we're in backwardation. And as long as we're in contango, especially if it's a steep contango with the VIX where it's at, you shouldn't be surprised if we just grind higher over time. Like you can have the days like Tuesday and more days like that, of course. Like that's also plays a role into this. Yeah. But the VIX is at 15 at the end of the day, and we have a point of contango for the next 4 contracts almost. So
yeah. We mentioned this, how volatility, when you get the spike in volatility, the mean reversion of volatility is usually a lot faster than the price reversion, right? So if you get, 3 or 4% down move, 5% down move, and volatility, goes from where we're at, VIX of 15 up to a 20 or 25, whatever the number is, that reversion back to more normal volatility of 16, 17, 18 is much quicker than the move right back to where you were prior to that volatility event. That's kind of what is happening in the markets. If you look at the E-minis, we're kind of back to the lower end of where we were trading prior to Tuesday's sell-off, whereas volatility itself, like if you look at the VIX, we are back, below where we were prior to that. So that's just kind of how volatility works. It's not a one-to-one like, VIX spikes and then it comes back down and you're right back to where you were in markets. You get kind of a slower kind of bounce back in terms of the actual market recovery.
Yeah. But that helps explain why you can have the big sell-off, you can have a recovery, but then you can have a day like today where we're not really moving anywhere, but the vol is still coming in.
Yeah.
And you can have, even if we get a big vol spike from bigger intraday ranges, this could be a 20-point sell-off, and we could still have an inside vol day. Like you could still have that contraction. So that helps explain why it's not one for one. And volatility isn't always just about market up, volatility go down. It's also market chop sideways with a very small, narrow range. Vol is also going to come down in that situation.
Yeah. And to mention, because you talked about vol being in contango, which it was kind of flat into Tuesday's sell-off, or it flattened out a little bit. We both kind of like to put this together. You can make your own watch list. I just call it a vol watch list. It's my own personal one. You can name it whatever you want. But you can put all of the futures contracts there. So we're currently trading the front month. It's a G contract. You put them all in there and it gives you not exactly a visual curve, but you can kind of curve out the volatility from here. You can see, we're at a 18 handle, 19, 20 kind of moving out on the curve here. So you do have a little bit of contango there, about a point, across the curve. It gives you an idea of where vol's moving. You're obviously getting the most contraction in the front because that was the highest, or at least is when you have spikes in volatility, front volatility usually spikes the most.
Yep. But yeah, I think it would behoove us to talk about natural gas too. We do have this. It's interesting timing because we have this sweeping cold front coming through Chicago, where we're supposed to get like negative 30-degree temps
tomorrow.
It's
crazy.
But like the Natty Gas G contract has been psychotic today. Like the last 3 days, it's gone from 3 all the way to 5.8, and today it's had almost an entire point of an intraday range. Like this is nuts. Does this feel like fund liquidation, like short squeeze?
Maybe.
It looks kind of like it. Like maybe.
I mean, that contract isn't the active contract for trading, specifically on the option side.
Yeah.
But yes, I mean that's an incredible move.
Yeah,
that is an incredible move. We actually got a little bit of short delta in the H contract, which is our current active contract, which has seen similar moves. It just, this is also, I'm glad that you mentioned this because I've gotten emails about ways to get short natty gas, and people are looking at like calendar spreads or put diagonals. You have to be careful because natty gas is one of them, where there's usually a very steep difference in the value of each contract. When you go to the trade page, you can see each of these are different contracts that you're trading along the curve, and they each have different prices, and there's seasonality to this where that seasonality changes the prices, and so you got to keep in mind that with futures and with calendarizing futures positions, each of your options are trading to different futures contracts, and so natty gas go down is not necessarily going to happen for each of these contracts.
Yeah,
when you're trading that, so you got to be very, very careful, especially on the call side, because you typically do have that excessive risk to the upside.
Yeah, and you're seeing that in real time. Like the G6 contract is at 5, and the H contract, which is the next one's at 3.4. So if you're long the 33-day and you're short the 5-day, you're seeing massive losses on the short option, and you're not seeing the same gains on the long because it's a different contract entirely. So yeah, good call out there. And I think the Tasty Trade platform does a really good job of organizing it. So anytime you see a new last price along that right-hand side, that indicates that you're looking at a new contract itself.
Yes.
So if you look at crude oil, for example, it's not the same situation because crude oil, there are 20 different options expirations that all settle to the H contract. But then when you get to the Feb 17 26 day, you see a new last price of $59.19. That tells you that if you are rolling into that cycle, or if you have a long and short option that are differing, that's when you're long one contract, short another. So Natty Gas, because each options expiration is settling to a different contract, we're more likely going to just go with vertical spreads there, or it's a huge contract. So yes, vertical spreads really is what we're doing.
And some people asking about the G contract and Natty Gas futures still having volume. It's certainly tradable. It's just not active for options, or at least, you don't really want to be trading stuff that's got a couple days till expiration. I mean, this is, for all intensive purposes, we are trading the 30-day options across the board.
Yep. Yeah, still tradable, but very short time frame, very binary feel there. So it's the same thing. We're going to go to that 33 day.
Yeah. Capital One also has earnings. I see some people in the chat mentioning that COF. So you can trade that as well. Not really interesting for me. I've got my Intel position. If you're looking at like the mining type stocks, Alcoa also has earnings. Trades that. Have you looked at it?
Mm-mm.
What do you think Alcoa is at? Because you remember trading this for a millennium.
Alcoa?
Yeah, AA.
I thought it was at I remember it being at 45, I want to say.
And it went 45 to 20, now we're at 60.
Okay.
So it's kind of moved with the metals. Yeah. But if you're playing it off of FCX was basically unchanged on earnings. It had earnings this morning, trading at 59 and change. Seems like a lot of the mining stocks and metal related stocks have reached peak.
Yeah.
At least in the short term.
Yeah, interesting one there, but still really small implied volatility relative to notional. $63 stock, $2.80 implied move. So I'll probably hold off. I'll see what Intel does to me. And that would be my.
I feel like that's got to be a vol crush coming in. We talked about it this morning. Intel. Tons of call skew here. So if you look at even into the weekly expirations, you got the stock trading at 54. You go, to the 50 strike, which is $4 out of the money. It trades at 72 cents. The 58 strike, $4 out of the money, trades at $1. That's a 30%-ish, 40%-ish difference in value between the calls and the puts. It skews very much to the upside. You can see that across. Even if you look at further out expirations, it's even more dramatic just because, the upside is priced much higher.
Indeed.
Have you made any other trades today? Have you got anything else interesting I can look at to put something on?
I did actually. So I closed the UAL earnings trade.
Okay.
So I was short Netflix. That was a nice earnings trade from this week. And then I was bullish United Airlines for the sole reason that they somehow gave me silver status when I didn't deserve it. So if you work at United, don't look at my account. But closed that for a 60-cent winner. But I did re-establish the SPX hedge. So I really like this hedge a lot. So just a 100-point wide symmetrical butterfly to the downside.
What expiration? How far out?
Feb 27.
End of month.
Yeah. End of month. I did the 6,800, 6,700, 6,600 butterfly for $550. And I really like this hedge a lot because when I placed this trade initially, I put this on in a similar cycle, but it was taking heat the whole time. So I put this trade on December 23rd, in SPX for the Feb monthly cycle, the same exact strike, 68, 67, 6600 for 585. So it's a little more expensive. But into the rally in SPX from December 23rd all the way to the recent highs, the butterfly was only down like $100.
No, they won't move.
They don't move. But on Tuesday, when we got the 100-point market sell-off and the VIX pop, it went from being down $100 to being up almost 200.
And that's because vol expands, that butterfly gets more expensive because the expected move expands, and so that butterfly becomes more expensive, yes.
Yeah. So I really liked seeing that even into a grind higher, super low vol environment, I was only down like $100. Like obviously the max loss is $500, but
it's a shot.
It's a shot, but it's nice because if you get closer to expiration and then you get that 100-point sell-off or more, like when I closed that position, it was basically at the money.
Yeah.
The 6,800. So if you get that sell-off and your timing is lucky in the sense that you get the sell-off while you have little extrinsic value in that position, your $500 can turn into $1,000 or $1,500 or $2,000 like pretty easily. And if it doesn't happen, you're out $500. And if the market's grinding higher and you're placing other bullish positions, which I'm doing, then that will offset the entire cost of that hedge. So really liked how that hedge behaved, especially in a losing situation. So I think that's going to be my hedge going forward, especially after like 200-point rips in a couple days, like throwing it on for $500. Why not?
It seems prudent. I added yesterday, put diagonals and SPY and Qs. And I had them previously in December where we just kind of drifted up, and I legged out of the put side. And to your point, it's a really cheap way to have like an asymmetric hedge position on. Like you bleed out a little bit each day, but you make that back 2 or 3x if you ever have the downside move. And the net portfolio, because you're long delta, it's not like this hedges your whole portfolio.
Yeah.
But it's a nice little piece to take off, for a couple $100 profit when the rest of your stuff isn't working.
Yeah.
So I'm with you.
Yeah. And it's $500 and it's defined risk.
Yeah.
So it's barely anything in terms of
no management.
No management. That you just put it on. It's a small hit to the portfolio buying power requirement relative to other strategies. And it's $500. And if you get the perfect scenario, you can make a couple thousand and hedge against that small debit.
If it expires worthless, you probably make a lot more on the rest of your position.
Yeah.
So
I really like that one. So I'll continue to do that throughout the year. But yeah, other trades in SPX. I still have the stupid on. That's 8 days to go. This 10-point wide put spread, financing a 5-point wide call spread. That's probably just going to expire in the middle of the range and give me a 55-cent credit. And then I did have an upside butterfly. So I had a broken wing butterfly, 8 days to go, the 7120, 7130, 7150. And same story on Tuesday, I rolled that to a symmetrical risk-free butterfly and locked in an 80-cent credit and moved that 7150 long call to the 7140 long call. So now I have a 10 by 10 butterfly there. And that's it.
Have you heard about the exploding trees? We got some people talking exploding trees here. Got to be careful up north if you the water
expansion.
The water expansion. Freezing, expanding, freezing.
It's like a water bottle.
Yeah.
Water bottle freezes, and then it's not.
Probably good to check if you got any like under the seat in the back seat in the car or something.
Yeah. Maybe that's why those teas, so the plastic tea bottles, maybe that's why. Because in transit, maybe they're
tea bottles.
Yeah, the pure leaf teas.
Yeah.
Because these have been like pressured.
Ooh.
Maybe that's why. In transit, maybe they're freezing a little bit, and then they're arriving unfrozen. Could be it.
Your guess is as good as mine.
Yeah.
As we limp into the close, just kidding. It's been a rally all day today. 35 points to the upside. We've rallied about 10 handles here. NASDAQ up 183. You got the Dow up 287. Got the Russell up 19 here, everything up between 0.5 and 0.75%. Been a pretty strong day in my book.
Yeah. Is the 250 buy button back? That's a telling sign if that's the case.
That's a good question. I don't know.
But yeah, it's been a pretty volatile week. Interesting to see. We're basically where we were at, similar price to where we were at when we sold off initially. So if you're just waking up today, nothing has changed. But yeah, SPX is trying to reach that 7K mark and go above it.
Mm-hmm.
I think it'll happen at some point, obviously. Just when, it's tough to say.
Intel earnings come out right at the bell. At least that's what my Taiwanese sources are telling me, so should know about that one soon. Have you avoided the memory stocks a la MU, SanDisk, Western Digital? Have you avoided those? Or have they stolen your brain mass like they have mine?
So I actually am an MU.
Uh-huh.
I have a 100-point wide iron condor. Not the risk, but the
between
100 points. I have the 300, 400 shorts, defined risk 10 points wide. So I'm right at the short call spread in Feb, but it's down $150, as you might imagine, ripping into the short call spread.
Yep.
But I'm not going to make any adjustments. I want to have that 100-point window. But yeah, I'm now leaning short in Micron into this big rip. So yeah, I'm in there. Haven't touched the other ones, but I certainly will as they start to announce earnings and we start to get a feel for what makes sense from a risk perspective for the portfolio and X, Y, and Z, where the product is. Some people calling out Tesla.
Yeah,
in
Tesla,
chat.
450.
Yeah. 450, just like that. There's another example of...
Did a crab trade.
Ooh.
Yeah, upside crab trade.
Nice.
Oh, we almost forgot before we go into the close here. We got the big deal. What's that about?
We do have the big deal. 4% cash match, 30 days commission-free trading for new accounts. So come on over. Match up to 10K. Big number. But yeah, it is nice if you haven't used the platform before. Zero commissions is a nice touch. And you can trade whatever you want. See what's going on in the tasty world. Futures options, stocks, equities, you name it. Earnings are around the corner, so plenty of opportunity there.
Yes.
But yeah, you can scan that QR code or just go to tastytrade.com/big deal for all the info there.
Beautiful. As we go into the close here, you've got E-minis, 69.45 here. We're up 34 handles here. You got the NASDAQ up 183. You got the Dow up 200 and almost 300 points here. The Russell up 20. Oil down $1.22. You have volatility futures getting smashed into the close, down 46 cents or below 18. You have bonds up 8 ticks, gold up $84, silver up $3.50, and Bitcoin selling off a bit, down $650. Intel coming up shortly here, but we won't be around for it because we have a fantastic crew coming up next. We've got the Overtime Boys coming up next here on Tasty Live, so stay tuned for that. And we'll see you tomorrow morning. Peace.
Peace.
When you define risk, you set a limit on how much you could lose if the trade goes bad. If you have a small account, you might not be so interested in selling naked options. You'd use up much more buying power, and the risk is undefined. Defining risk, though, controls how much you can lose if the trade goes sour, and it gives you back some of that sweet, sweet buying power. We can define risk by combining options into certain strategies. The short put vertical spread is the simplest one. Selling this put sets your max profit with the credit, and the long put at the lower strike blocks off the risk where you want it. And if you're more neutral than this, you can throw on a vertical call spread to make it an iron condor. The only downside to defining a risk is that it lowers both your max profit and your probability of profit. That little compromise might mean you rest easier, though, and a good night's sleep is priceless. So see, we can define risk when we use more than one option at a time. Pretty simple.
of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Tasty Trade has crypto, and you can trade with zero commissions: Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
Earn a 4% cash match when you open and fund a new Tasty Trade account today.
As the ship turned the corner, hopefully it's not the Titanic. It's Thursday, January 22nd, 2026. This is Overtime. I'm your host, Chris Vecchio in New York, Ilya Spivak's in San Francisco. We're here to take you through the next 27 minutes or so as we wind down this trading day. What a day it was in which volumes were not here. Monday was, of course, a closed trading day this week, but Tuesday, Wednesday saw significant trading volumes on the back of obviously the top news story of the week, this Greenland tiff that Trump had facilitated. Of course, with him handing off the responsibility to find a solution to his friends at the law firm of Witkoff, Vance, and Rubio, we find that the market is relaxed all of a sudden. Volumes fall off. We find that volatility falls off. We have a modest bounce back in stocks. While we're not near the highs of the session, it's still a 0.5% gain for ES. The NASDAQ a little bit better, 0.6, nearly 0.7%. Your Russell, your outperformer today, up by 0.75% right now, Ilya. It's that volatility, though, where the VIX, which was up near 20.99 at a point earlier this week, closing today at 15.68. So a meaningful pullback there, about 5.5 points from the highs a few sessions ago. That's not to say that it stopped gold or silver, which continue to advance into fresh highs. Line that we seem to repeat every day around here. No good for the dollar. Dollar still can't get a little bit of a lift, sitting near lows that we had at the start of the week. Although I should say Intel here, that is something we're paying attention to because we do have Intel earnings out after hours, and that may interest the folks who are just tuning in. EPS was 15 cents versus 8 cents estimated. So an 88% beat there, but the revenues, 4% decline year over year, mixed internals. We'll have to see what the guidance says. Ilya, this is obviously not the main story of the day, Intel, but it is having a small pullback here after hours. In any event, it's another day where we see something like the semiconductors post a relatively strong session prior to Intel coming out. It is, technically speaking, a new all-time high close here. What do you make of this market action now that we have a 15 handle on the VIX again?
It's a very interesting thing here because, of course, we have the extension of the rally yesterday to some extent. If we look at the major averages, I mean, obviously, take a look at ES here, and I think a very clear picture presents itself. You have basically the closing of the, oh my God, Greenland gap. But that's it. That's all you got. And we talked about this yesterday, this idea that you really still have exactly the breakout that you had at the start of the week. The breakdown that essentially upended this latest oscillation higher in a range that has held since October. Let's be clear. We've not made a new high in months. That range seemed to get us a little bit of an uplift here from mid-November into the end of the year. We tested the top. We broke down at the start of this week. That breakout is holding. And the volumes today were a pittance. So this rally was weak, and it was on weak volume. And with vol pulling back in against that backdrop, I mean, that makes sense. Obviously, it's good news from a volatility perspective that we're not going to be trying to take a NATO ally's territory by force. Great, I guess. But the bottom line is that the markets are still unnerved. And I think they're unnerved for the same reasons they've been unnerved and why they haven't made a high since October. They want their cheap money, and they want it to cushion them from exactly the kind of episodes that we just saw with this Greenland situation. Interesting factoid for you. The drop this Tuesday in response was the biggest one since October 10th. Guess what happened on October 10th? The last time the president threatened somebody with tariffs. Then he ultimately walked back. That was the threat aimed at China. Well, when he said he was going to hit them with 100% tariffs over rare earths exports. So, you do forget. One does forget. It happens so often that one.
I was on paternity leave. You got to forgive me for not caring.
No, but it happens so often now that one forgets which the latest thing was all about. So you have a market that's clearly responsive to these things. They didn't go full sell America on that last time. They did this time. But we're in a situation where these things keep occurring. And the market seemingly just says, you know what? We want a safety blanket. We want some sort of cheap money Kevlar around ourselves. Because these things keep happening, and if we get one of them wrong and we lose money, we want to be able to borrow cheaply to go again. And that's not anything that got materially moved around with the PCE data today, although rate cut expectations are down meaningfully. 42 basis points now, lowest since May.
For June, by the way, that was like a 90% odd going into the start of the year, and now it's in the low 70%.
Yeah.
Chance of a cut.
Yeah. They're fading a little bit here. Markets still want 2 cuts, but their conviction is fading. And we've got the PMI next week, or tomorrow, excuse me. And that'll be interesting. That'll be the timeliest data we see yet. If it's hot like the ISM was hot, what rate cuts?
Ilya, as the Sell America trade from Tuesday comes undone on Wednesday and Thursday, bonds mixed at the long end of the curve, some stability, so to speak. You get the stock market rally back, but gold and silver are still dancing to their own beat right now. It feels like gold up at 49.23 here after hours, another 1.77% gain. Silver price is up another 3.89%, 96.21.5. Are we just aiming for the big round numbers right now? Is this just a game of traders manifesting $5,000 and $100 respectively for the precious metals?
I mean, I think there's a lot to be said for exactly that. You don't really have a story here that is going to change, it seems, as far as the overall narrative. I mean, we've talked about the sort of larger picture for this. We know at this point that these things are being resilient in a way that doesn't seem to be connected with anything happening with the dollar or yields, which is the sort of traditional catalysts. And instead, it seems like we're just going to accumulate this non-sovereign money because of the exact same volatility that is inspiring markets to want rate cuts. Policy uncertainty. And so there seems to be, now that we're in uncharted territory, no clean bogey from prior price action. So why not be focused on round numbers? What other anchoring is there?
How are we playing this? I'd say
along.
I mean,
this is my best performing position by far now.
Right. So it's the Jesse Livermore, right? Just sit on your hands.
I don't see any reason to buy any more while we're making new highs, but I'm not touching 1 troy ounce of what I already have.
It's Fascinating how this market's been able to hold up so far. Really, no matter how you slice it, it may be getting a little long in the tooth just by looking at the divergence in some of the extension that we've seen in some of the moving averages. We're not there quite yet, but we're getting there, Ilya. So on watch for a potential pullback or slowdown. It would probably be an opportunity to buy back in, given all of the themes that are impacting the global economy right now. I see that the IVRs have dropped off a cliff in both gold and silver today. They're no longer in the 60s or 70s for gold or in the 90s or 100s for silver. Why might that be the case? I would just point to the raw IV here. IVR on the platform is a rolling 1-year window look back. And so as you move forward in time, where you have been relative to the past year is going to change. And if you get a particularly high volatility period out of the way, then the IVRs can reset. So the raw IVs, right? These are still in the 70s for silver. If for gold, we're still talking about, the high 30s in the short term and then the mid 20s later on. So the raw volatility hasn't really evolved whatsoever from my view. It would then stand, though, we don't want to see moving forward, right? To watch the pattern of behavior here. We want to see the IVRs, at least the raw volatility, stay firm during this breakout. And that is the only thing that gives me confidence that this thing can keep going, is the fact that all of the building blocks are in place still, the strong technical momentum, a great fundamental story with positive feedback loop, narrative flexibility, whatever we want to call it. And then you, of course, have, the breakout that's drawing in everyone, because what else is there trading like this right now? We just got to keep feeding the machine. And until it breaks, I know this is the same thing day after day after day after day after day, but until it really breaks and hurts us, just got to stay long and keep looking for ways to roll out and get new exposure. Who cares that it's going to be $5,000 or $100 an ounce? Those are just numbers.
Yeah.
Too far, too fast isn't really a thing for precious metals. It's difficult to ascertain a fair value.
Well, it's not really a thing for anything when it's so sentiment driven. And until the market tells you something's different, it isn't. It's just that simple. I mean, I think markets are going to go where they're going to go. No amount of, this level or that level is going to hold a market back if that's where it wants to go. And so you're right. We're in kind of uncharted territory here. You just have to go with what the price action does. And if there's a haircut, there's a haircut. I mean, you just kind of have to embrace the fact that you're not going to get out at the absolute near-term peak, if at all, if that's what you want to be doing or not. But that's okay. That's trading. You don't have to sell the absolute top and buy the absolute bottom. The money's made in the middle.
Ilya, we had this move in silver today where we are closing up at new highs as well. These big round numbers, they seem to be attracting interest here. And as good as the precious metals have been, there is a ding to the metal story in totality, because copper doesn't look so hot. I'm long copper as well, and so this is kind of bleeding out. We're holding the trend line from the November and December swing lows, kind of. So copper's lagging. It's a metal, so it's getting some sheen. Then you look over to crude oil, and it's down 2%.
Yeah.
And some of the growthier commodities in this market, they're not faring so hot. What's coming tomorrow with the PMIs? I know a lot of it's Europe focused. It's going to impact some of the currencies. The currencies, by the way, continue to flex against the dollar. The Australian dollar had a great day after a blowout jobs report.
Yeah.
Last night's unemployment rate came in at 4.1% versus 4.4% expected. Think about how good of a report that was to facilitate such a move.
I mean, that's a central bank that's now expected to hike rates this year.
They're definitely not cutting rates. That's the shape of the Australian economy.
No.
Either way, though, so what's the growth picture right now? I mean, are we destined for higher yields and higher gold and silver prices because yields are reflecting good growth, high inflation?
I mean, this seems to be the really interesting bit here, because we've already had this strong data for ISM. We already had a strong third quarter GDP report. The expectation for the fourth quarter GDP report is not anything to be taken with sort of perfect clarity, but nevertheless, 5.4% is where the Atlanta Fed GDP Now tracker is going. And the expectation on this PMI report is that we're going to get basically anchoring after 3 months of cooling. That essentially after the composite PMI last go around hit a relative low since April, not nearly as low as April, but nevertheless a relative low, that it's going to basically anchor and stabilize. And when you look at why all of a sudden you got the prior 3 months of cooling, it's really not rocket science. You had the longest government shutdown on record in October. So, yeah, the third quarter wasn't great for S&P Global PMIs, and this report is expected to show improvement and stabilizing near the middle of the post-COVID growth range average for January. In other words, more good growth news. The question really is, does the market want to see growth, or is the market afraid that there's not going to be enough rate cuts? And all the readout since October, when the markets topped, suggests the markets don't care about growth being positive. They care about rate cuts being insufficient. And so when you get this kind of report, assuming, let's say, it comes out reasonably in line with expectations, nothing too disappointing, that's going to tell the markets that they need to be moving closer to where the Fed outlook is, which is 1 rate cut this year. They're not going to like that.
One rate cut this year. If you see that Rick Ryder's odds are rising on Polymarket to be the next Fed chair. I was thinking, just as a exercise, wouldn't it be the case that if you're Trump and you want a rate cut, you go for someone like Waller, because he at least carries the respect of the federal FOMC members or fellow FOMC members, and him pitching a rate cut carries more credibility than a Kevin Hassett pitching a rate cut.
Especially since Waller has been pitching that rate cut since June. So it's not like there wouldn't be anything inconsistent here.
It wouldn't be inconsistent. It's intellectually consistent. He's also considered, a FOMC insider. He's not a Trump guy per se, coming in to set policy on behalf of the president.
And a real policy maker in that sense.
Yeah, well,
with track record.
That's the savvy move. That's the savvy move. If you really want to have someone who's in Trump's viewpoint, but not necessarily seen by the market in his pocket. And the Fed independence story goes away because, hey, this is Waller. This guy's been around forever doing this kind of stuff.
Yeah.
Something to keep an eye on. Ilya, a lot of these Mag 7 names today, taking a broader look at the stock market here, they did have a nice little session bouncing back. Meta up over 5%, not quite getting back to recent highs, but perhaps somewhat noteworthy. We do see a little bit of a divergence form down here, or at least in stochastics, you get a lower low in stochastics, but we don't get a new low in price. So maybe a bottom starting to come together. Microsoft still looks terrible, even though it's up to nearly 1.5% today or more than that. Can't get a break back above its 1 week moving average. Amazon meanders. Tesla has been holding its trend line here, which is good news for me. We put on a position about 2 weeks ago here on a short put spread. 29 days to expiration, the 400, 415. But the uptrend from the lows that we have in April, August, here back in November, are continuing to hold up right now. We saw the small caps leading, though. Brett has been fairly good this week, even during the pullbacks. A day like today, RSP is not leading the broader index because we have these Mag 7 names doing so well. But the Russell is still the top dog.
Mm-hmm. Mm-hmm.
When I look at those pieces coupled with the absolute vol crush, what are we really worried about before the Fed meeting next week? It kind of feels like there may be clear skies for the next few days, absent comment or two from the White House?
I mean, it's clear in the sense that there's not anything on the calendar that's immediately annoying. But whether that is or isn't will, I think, depend, and certainly in part on this PMI data, because you're right, the focus really is on the Fed now. And if we've sort of gone through the Venezuela episode, we've gone through the Greenland episode, now we're sort of back to, okay, so here are two great illustrations for why markets want rate cuts. We are capturing South American dictators in the night. We are doing thereby things to the oil market because in conjunction, we're disrupting Russia's shadow tanker fleet. In conjunction, we're also moving forces in the vicinity of Iran as it teeters on the brink of revolution. Crude oil has broken out and has held that breakout despite today's losses against that backdrop. And so the question then becomes, okay, here's all the reasons we want rate cuts. Will the Fed give it up? And if we get strong PMI data in these next 24 hours, the answer is probably not likely. And if that's the case, well, that's the bogey. Because yes, we're focused on the Fed, but it's not like we're going to wait for the Fed to arrive to start thinking about what it all means. The markets are going to start to reposition and think ahead. Okay, so what's likely to actually occur here?
Regional banks seem to be okay with it for the most part. They did tick up into a new high relative to where they were in November 24 today. They just closed a touch weaker on the session. Ilya, this is a pretty good mix. Looking at it, I count 16. Not bad. Is that 16? No. Yeah, 16 of the 25 sector ETFs in the green today that we follow here. The worst performer was home builders, XHB, ITB. They're lagging the pack as we see those long end rates kind of mix and sag a little bit. 10-year yields were up on the session. We do have some retail names. Staples were a touch softer. But having Staples down in healthcare, struggling on a day when your tech names are up, that's not, again, a bad sign. It's a growthy mix. What's the biggest worry we have ahead of next week's Fed meeting? What's the biggest hurdle that this market needs to jump through to keep bulls content and bears at bay?
I think it needs to see that the Fed is going to start moving the market's way. I think it needs to see that it can basically get back to this sort of post-Liberation Day slumber where the markets got railed with all kinds of bad news at the beginning of last year. They erased all of 2024 in barely 2 months between the end of the, let's call it the middle of the first quarter and the very early days of the second. And then they spent the rest of the year kind of calming down into okay, this is not the end of the world. The administration is responsive to market discipline. If we freak out the bond market and the dollar and stocks at the same time, they'll listen. We just saw a repeat of that episode this time. In fact, this time, the freak out across USD denominated assets only had to last for basically a day in order for the White House to wind it back. So I think at this point, all will be okay as long as the markets don't feel like this intense volatility is coming at them without any kind of protection. And the protection they want is easy money or easier money. They don't want badgering of the Fed. They don't want the breakup of NATO. They don't want crazy volatility around tariffs, whether they be levied on China or anybody else. It's not that they don't like tariffs. It's that they don't like volatility around tariffs. They've just gotten acclimated to this whole thing. And so now they're getting jostled back and forth again. They don't like that uncertainty. If they can get to a place where the Fed says, listen, we know we can't make the president more certain. That's not his style. He's not going to change. Everybody's calling it a taco trade, but that's just meme lingo. The actual strategy here is one of the oldest strategy approaches since the beginning of time. Ask for the world, then settle on something less. Ask for something preposterous as an opening bid. I mean, we know how this works. So the president's not doing. Yeah, I mean, the president's not doing anything that people haven't seen.
No,
this is as old as humanity itself. This approach, but it's also not the optimal approach if you consider game theory. Game theory would tell you the optimum approach is cooperation with close to tit-for-tat retaliation for violators. So if somebody betrays or breaks norms, you don't punish them as harshly as they've hurt you, and you reset back to cooperation as soon as you've corrected their actions. That's what game theory would tell you is the optimal way to cooperate as far as geopolitics is concerned and nation-state interactions go. But that's not this. And so you're not going to go and tell the president, don't do this. This has been his strategy in everything, business-wise, politically, for decades. So what are you going to do? Well, you're going to need to give the markets cheap money, markets have decided, to weather this, because it might come from this way or that whenever. And if the markets don't get it, they're going to be upset.
We'll find out how upset they are next week. Wednesday, the Fed meets. Ilya, no cut is expected. No cuts are expected at any meeting until June. And it seems like ever since the investigation into Powell and the Fed was announced a week and a half ago, right? That's how we started. So we start 1 week with Maduro. We start the next week with Powell being investigated, the third week of January with this Greenland whole thing. That's like a year's worth of news.
A lot.
It's a lot. But ever since Powell kind of stuck his neck out and said, like, hey, this is about our independence. It's not really about cost overruns. The market's been slowly pricing out cut odds for the next several months. Almost, again, like Powell could be sticking around, which to me is a very interesting set of circumstances. But you know what? We're going to have to talk about that more next week because Overtime is out of time for today and this week. We'll be back Monday. Same time, same place for Eastern, 3 Central. Ilya might be in studio in Chicago for that. That's exciting.
I will be. I will be in studio all next week, as a matter of fact.
If weather allows, because this
if weather allows, yes.
Upgraded, 235 million people likely to be impacted. Go get your salt and your food today, folks. But everyone's saying go out and get like bread and eggs. No, go get like Oreos and red wine and like, margarita, pre-made margarita. Like, do the snowstorm right. I'm going to go chop some firewood now. And then I'm going to go make sure that we have enough chocolate and ice cream in the house for the kids.
Can you
and the
get
wife.
bread and eggs and margarita?
Make the bread. We have plenty of yeast here. Like, we'll make bread. It'll be fun. Ilya, see you in tomorrow for Futures Power Hour.
Yes, sir.
Everyone else should stick around, though, because Ilya's here, sticking around himself. Macro Money's up next. You're watching Tasty Live.
See you there, everybody.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
So I studied economics and international relations, and I wanted to do the hands-on rather than the academic version of that, and the most natural thing was global macro investing. I begin with a sense of where I think the overall direction is for the macro theme for the next 6 to 12 months and then look at some basic response from the price action to see how it's going. I think the price itself is the purest of indicator. It subsumes within it the collective emotions of the market. One of my favorite mottos, if you will, comes from the always great Ira Harris, who said, if you're right at the wrong time, you're wrong. And so for me, every macro narrative begins with what's the price action saying, rather than this or that economic indicator or some such thing.
Got big goals for 2026? Get the big deal. Earn a 4% cash match on all qualifying deposits, up to $10,000 total. Plus, unlock 30 days of commission-free trading. Trade with confidence using active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. Earn a 4% cash match when you open and fund a new tastytrade account today.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Well, the recovery after the Davos World Economic Forum brings a de-escalation of the Greenland crisis continues. Stocks notch up another up day, but as one thing settles, another looms. We return to focus on the Fed and just how much the markets want to be insulated from precisely the kind of volatility that we just witnessed here this week. We're going to find out all about what is coming and what it might do to markets here on Macro Money. I'm Ilya Spivak, head of global macro here at Tasty Live. And what we'll do first is, of course, take a look at what the markets did today and how the positioning has been left in these moves' wake. And then consider economic data. You had a little bit of it today. We have something much more potent, perhaps, on the docket for tomorrow. So here's the S&P 500. It is once again here attempting to claw higher, but pointedly, we talked about this yesterday following that recovery here, we're still not back into the range that was persisting before we opened with a gap down this week. That was after U.S. President Donald Trump threatened to slap tariffs of 10% through June and 25% thereafter on a range of European countries, including the UK and France, for sending a little smattering of troops to Greenland, which, of course, was after the president said we absolutely needed total ownership of Greenland and didn't rule out pointedly the use of force in getting there. Not surprisingly, the markets freaked out. And indeed, they freaked out in a sell America kind of way, once again, like they did in April last year when the president unveiled his Liberation Day tariffs. So stocks fell, the dollar fell, and bonds fell at the same time as risk premium went into yields and they pushed up. Now, what we see here is the recovery thereafter follows the president's speech at that Davos World Economic Forum, where he ruled out the use of force, apparently. And then shortly thereafter, via a Truth Social post, said he had a very productive meeting with NATO Secretary General Mark Rutte, and they agreed on a framework where the U.S. would have access to Greenland, where, of course, the U.S. already has a military base and by treaty has the rights to expand it. So it's unclear what has actually changed, except that demands for full ownership of Greenland have been walked back. But in what is now becoming a familiar episode, the president asked a lot, stomped his feet and yelled into a microphone, and then negotiated down to something that was seemingly agreeable to all sides, where the U.S. is going to get expanded access, maybe some mining operation on Greenland for perhaps rare earths there, and an expanded military presence. So with that de-escalation and with the tariffs against those countries that were in the crossfires shelved as a consequence of that de-escalation, we get something of a reprieve. Now, of course, this decline was, poetically enough, the biggest decline since this one on October 10th, when the president threatened China with tariffs over rare earth shipments. And that one was unwound as both sides sought to cool things. That was this gap right here. There was a summit after these tensions broke out between Presidents Xi and Trump, and ahead of it, a meeting of their staff, senior staff in Malaysia, basically figured out how to diffuse this thing. We have a similar situation maybe here, but so far, we're struggling to get back even into the range here, never mind the highs, which have held since late October. That, of course, followed the Fed chastising markets for over-extrapolating rate cuts. Now, where this gets especially interesting is, of course, the Sell America breakdown at the beginning of the week isn't just holding up in stocks here despite this bounce. It's holding up in bonds as well. So we do get a reprieve, certainly, but the breakdown from this congestion zone, that continues. That is held up here today. And so one wonders why the markets are unwilling to basically unclench fully. And the upshot seems to be that we've just had this episode with Greenland. Before that, we had the issue with the spiriting away of Nicolas Maduro, Venezuela's dictator, in the middle of the night, and the impact of that on oil markets. We've had an increasingly loud spat between the president and the Federal Reserve, where the DOJ unveiled an intent to charge the Fed, and in particular Fed Chair Powell, with some sort of wrongdoing relative to the Fed's building of their buildings and sort of updating their aged real estate. So, and of course, before that, the issues with China. Before that, the previous thing. Before that, the previous thing. Before that, the previous thing. So we've had now, since the beginning of last year and the starting of the unveiling of tariffs, first on Mexico and Canada, then in the direction of the early April Liberation Day announcement, then kind of the back and forth as the markets were worried about what this means, the pausing and the starting. And of course, all the way through to now with the latest ructions, a period where economic policy has been very uncertain. And perhaps the markets continue to look at this with an eye to rate cuts. and saying, well, we understand that everything here is going to be volatile because this is the president's negotiating style. This is how he approaches things. That's not going to change, most likely. And if that's the case, and one of these things goes awry, we're going to want the backstop of cheap money to protect ourselves. Now, there was nothing on this front that appeared in today's update of October and November PCE data. This is the Fed's favorite inflation gauge. It rose at both the headline and the core reading, which excludes volatile food and energy costs, from 2.7 to 2.8%. We can see the two indexes have been essentially aligned for the past 3 months. And there was nothing here seemingly that really changed the game one way or another for policy expectations. In fact, markets have already seen December's CPI report, so that PCE number was arguably kind of stale now. And there they see what they want to see. The goods inflation situation seems to be starting to plateau. That's the Fed's baseline, that once you sort of get to a year-on-year rebasing of CPI and more generally inflation figures between when the tariffs started to roll out, basically from the start of last year through April, and once you kind of roll over into CPI data that no longer takes a pre-tariff base on year calculations, that this is going to start to come down. Meanwhile, service sector inflation, which is by far the bigger story, in the last set of numbers, out of a 2.7% headline inflation reading, 1.8 percentage points was the service sector. So clearly this is much bigger than what's going on in goods in terms of its contribution to overall CPI, and this has been cooling. So the breakdown here seemingly unchanged, and of course for the Fed, the CPI report is the timelier one, though they like PCE better. PCE was only caught up through November with today's release. CPI has already been caught up to December. So ostensibly, there wasn't really a lot of fuel for a fire here, absent a wild deviation from forecasts. The next thing we're going to be looking at is S&P Global PMI data, and here timeliness is not going to be an issue. This is January survey data, a first look at it. And we can see that in the third quarter, we had relatively robust growth, hearkening back to where we were at these major multi-year highs toward the tail end of 2024. In fact, the entire second half of 2024 was a really explosive period for growth, touching levels unseen since early 2022, before the Fed's rate hike cycle started to cool post-COVID recovery momentum. But in the fourth quarter, we can see, largely thanks to that government shutdown, the longest one on record, 43 days, we had a slowing of activity. And the expectation for January is we're going to basically anchor now. And now that the shutdown is over, we're going to start to see some stabilization. Now, slow down or not, we only landed toward around the middle of this post-COVID range. So it's not like we had growth go into any kind of catastrophic direction. The cool down is, of course, understandable with the government shutdown that long. So what we are looking at here instead is seemingly signs of stabilization, signs that whatever was happening with growth in the fourth quarter is not continuing into the new year. And of course, the analog PMI numbers from ISM, the Institute for Supply Management, which does their own PMI reporting, that was explosively better than what S&P Global has estimated. Here we're seeing aggressively strong recovery in the pace of activity in the service sector, and we've guesstimated a kind of composite here where we've weighed services as a 70% share and manufacturing as a 30% share, crudely, in a sort of catch-all composite model. And we can see that gives us some of the strongest growth in economic activity across both sectors in December that we've seen since essentially going back to around mid-year. So mid-year last year. And of course, that in turn comes alongside a third quarter GDP report where we had some very strong performance. Indeed, there was some worrying numbers here for the first and second quarter, not because we had these shenanigans with imports and inventories that were swinging wildly back and forth as markets were positioning for these tariffs to roll out, but because consumption, the largest component of GDP by far, looked to be worryingly low. But by the third quarter, it rebounded to much more encouraging levels, and moreover, the volatility in some of these other sectors, some of these other components of GDP, it meaningfully cooled. Moreover, the actual growth rate jumped to 4.4%, which was the highest since the third quarter of 2023. And if we look at where we're pacing here for the fourth quarter, the Atlanta Fed's GDP Now model has an even further acceleration in the fourth quarter, despite what the shutdown might have meant. That's at 5.4% currently. So we're looking at a situation here where, at least from a growth perspective, the PMIs stand to underpin the idea that the U.S. economy is doing relatively well, that it did well in the third quarter, that in the fourth quarter, things looked relatively supportive thereafter, and that even though these numbers tend to come in on the sort of more modest side of ISM, that they are going to show that whatever we're seeing in terms of the overall sort of picture of the U.S. economy remains well supported. Now, of course, the biggest issue there is that we have, against that backdrop, a tough time convincing the Fed to cut interest rates. And cut interest rates is what the markets want from the Fed because of all this policy volatility. Matter of fact, we can see here that since the Fed talked down the markets in October, the S&P 500 hasn't really gone anywhere. Meanwhile, we can see that this period lines up quite well with policy expectations anchoring and starting to shift back. In fact, at this point, the markets are only baking in 42 basis points for this year. That's a little bit less than 2 cuts, but still erring on the side of 2, 1 rate cut fully baked in, and 68% chance of a second one, so still better than even odds. And that's against the Fed's expectation for just 1 rate cut this year. And with the economy as strong as it looks and the markets still wanting all this extra easing, despite what it might mean relative to growth and relative to inflation, which of course tends to follow growth as demand pulls on prices. From the market's perspective, it's this that's the bigger issue. And the Greenland plus Venezuela episodes, not to mention the will they, won't they back and forth on intervention in Iran, which is teetering on the brink of collapse amid a popular revolution, we have all of this commotion. This economic policy uncertainty index is aggressively elevated here. COVID was the peak relative to history going all the way back to 1985, and we're right in that area. And unlike COVID, where we quickly settled back down, here we're lingering. In fact, looking at just the tariff issue and trade policy uncertainty, we can see that although in April of last a year, the peak was reached and trade policy uncertainty meaningfully eased, there remained a tremendous amount of volatility around the trend average, much more so than even during COVID. You can just see the fuzz here around the 7 and 30-day moving average. And all that uncertainty, of course, was a cold, wet blanket for global trade volumes, which fell last year for the first time since COVID and by the most since the 2008 financial crisis. Not surprisingly, this is a problem just economically because the disruption of global trade threatens the one thing that's been keeping stock markets as aloft as they have. The AI boom and the build out around it. Because, of course, as we can see here, the supply chain for that narrative is tremendously global. And so if you break global trade, ostensibly you break AI, and to the extent that the markets are basically powered by 7 big names, and within that magnificent 7, an even smaller group is responsible for the lion's share of market cap and market performance, you break that by disrupting the supply chain that feeds it, and you have yourself a serious issue for stock markets. Now, of course, that comes alongside the idea that to manage this uncertainty, markets want easier money. And if we're going to get relatively benign PMI data, and we're going to continue to see these expectations for rate cuts coming off, well, easier money might not be so easily forthcoming. That, of course, is made all the more likely because crude oil, in the wake of events in Iran and in Venezuela, has broken out higher. And although those events happened here, and that's not what really caused the breakout, the sum total of events, the seizing of Russian shadow fleet tankers since the beginning of the year and late last year, we've now seized 6, and the pace seems to be rising. The maybe intervention in Iran, but in any case, intervention or no, a teetering government there, the flipping of the government in Venezuela, all of those things threaten to send oil prices higher, and that's seemingly what we're seeing here, not because they're sort of individually impactful, but because what all of these moves do is they disrupt the supply of the incognito oil shipments that those shadow Russian tankers transport, which are essentially sanctions-busting vessels that are mainly transporting oil, or were mainly transporting oil from Venezuela, Russia, and Iran. And with the estimate out there that about a fifth of global supply being accounted for by that shadow fleet, there's really only one place big enough where that can go, and not surprisingly, that's China. So the expectation is if you then break that system, then China has to, first of all, go on the open market and buy oil at market rates, not at sanctions-busting discounts. And secondly, that it's going to have to tap supplies that they were not expected to tap before, be it Saudi or Iraq or elsewhere in the Gulf. And Brazil as well, of course, Guyana, elsewhere. And so the issue here then is that expectations for an oil supply glut probably need serious revision. And of course, that again just beckons more in terms of volatility, policy uncertainty, and the desire for policy support. Because, as we've seen before, the sort of general tendency seems to be that whatever happens in oil shows up in CPI with about a month-long lag. And of course, what that implies is that while CPI was benign for now, not only do you have now this buoyant economy that might be once again reinforced in its health by the PMI data, but you also have this crude oil situation, which is likely to show up in the coming months because this disruption of supply to China is not going away in a hurry. And how in the world is the Fed supposed to provide rate cuts against that backstory? So with that in mind, I'm still long gold, and I've flipped over my US dollar position back to short. The dollar seemingly does not want to be as responsive here. It got aggressively sold at the start of this week and hasn't really managed to mount a meaningful recovery. In fact, even as stocks continue to improve today slightly, even as bonds improve today slightly, after what happened with the president walking back the Greenland threat, you nevertheless have a weaker dollar. You nevertheless have stronger gold. And so it seems like those parts of the story are showing relative resilience. And so I've flipped over that position. I'm still looking for weakness in Bitcoin, which hasn't responded with the sort of risk-on response that we've seen elsewhere. So I've still got the put vertical there. And I'm still short via put verticals, the belly via IEF and the long end via TLT of the bond market, looking for yields to continue to get pressured higher, both because risk premium continues to enter the market or at least stays elevated, and because maybe these rate cut expectations get diluted. Likewise, long oil, likewise, still short risk, where a recovery still has failed to materialize in a convincing way, more like rebounding from aggressive selling than convinced recovery building to a trend higher that will continue. So still have these put verticals in the S&P via SPY, via the Qs in NASDAQ. And that is macro money for today. As ever, we are here Monday through Thursday. That's right after overtime, a show that I co-host with Chris Vecchio, looking at the Wall Street close and where things might go there from. That would make this the last show of this week, but of course, Macro Money returns Monday next week. I'm also writing for the news and insights portion of tastylive.com and commenting at Elias Pivac on former Twitter and on Blue Sky. If you're watching this on YouTube, like and subscribe. Macro Money's back next week, as we say. Happy trading.
Get tasty, free market. Come on, you know it, can you feel it?